Fine. So today we have started this live a little bit late because I was occupied with something else, some unexpected last minute work. So that's why I'm unable to do it on time. So sorry for that. So anyhow, let us try to make productive use of whatever time which we have for live session today. So let me do one quick recap, not quick recap, just let me make a list of all the chapters, whatever we have covered till now as a part of this marathon series. So if I start making a list, the list of chapters which we have covered till now. So starting with intro, so we have done little bit of intro. Thereafter, we have completed the supply chapter. Then we have completed registration. Thereafter, we are done with the charge along with the composition levy. We have completed. Then we are done with the time of supply. After that, we have done with value of supply, and even we have completed the input tax credit chapter as well. So now in this session, we will be starting our revision with the chapter which is place of supply. Once again, a very important chapter from the examination perspective. From this also there is going to be a compulsory question. Like even in my one of the previous sessions also I have mentioned value of supply chapter, time of supply chapter, place of supply chapter. These are very crucial topics. Even from the conceptual perspective also these are going to play a very good amount of they play a very good role in even conceptual perspective, even the practical application of the GST law. The same importance has been given even from the examination point of view also. This time of supply, value of supply, and this place of supply chapter, very, very important from the examination perspective. So let us go into this chapter without any delay further. So what exactly we are going to learn in this chapter? What exactly this entire chapter is going to talk about? So as we have already mentioned, what kind of GST you are going to levy. So once you have made a supply, once goods and services are there, some kind of supply has taken place. Thereafter, it is not a tax, it is not a exempt supply. It is also made by a taxable person. Then definitely that transaction will attract GST. Now, as I've told, different kinds of GST will be there. Sometimes there will be something called CGST, SGST, UTGST, or sometimes it will be called IGST. So like that, different kinds of GST will be imposed. But on the supply transaction, let us say if you are a supplier, on the supply transaction, whatever you have made, which kind of GST you are going to collect, that is going to depend on two factors, or that is going to depend on one simple classification. So what kind of GST you are going to levy, that is going to depend on one simple classification. Whatever supply you are making, is it an interstate supply or it is an intrastate supply? Is it an interstate supply or it is an intrastate supply? So depending on whether your supply is an interstate supply or it is an intrastate supply, accordingly we are going to charge the GST. And also, as in the intro part I have told, whether the supply whatever you are making, is it going to be an interstate supply or it is going to be an intrastate supply, that is going to be decided by only two factors. Only two factors are there. So if you consider two factors, if you are able to analyze two factors, you will be able to automatically determine whether the supply is an interstate supply or intrastate supply. So those factors which you have to consider are, one is location of the supplier and other one is place of supply. One is location of the supplier and other one is place of supply. So these are the only two factors which will be used by any registered person in determining whatever supply he is making, it is an interstate supply or is it an intrastate supply. That is going to be decided by only these two factors. One is location of the supplier and other one is place of supply. So in this chapter we are going to talk about that place of supply related discussion only. And how to determine that place of supply, that guidance has been given under IGST Act. So one more point of difference in this chapter is, till now whatever sections we have covered, like I have told, value of supply section number 15, time of supply section number 12, section number 13, supply section number 7, all that sections we have seen, no? So till now what and all chapters we have covered, in all those chapters what and all sections we have covered, all that are taken from CGST Act. Till now whatever sections we have covered, all that are taken from CGST Act. Going forward also, whatever sections we discuss, majorly we are going to discuss about the provisions of the CGST Act only. But this is one such chapter, this place of supply chapter. In this we are going to read a few sections, but those sections are actually taken from IGST Act. Where those sections are taken from? Those sections are taken from IGST Act. So in fact, whenever we are going to discuss this chapter, we are discussing the provisions of the CGST Act. And in fact, 4 sections we are going to discuss mainly. Section number 10, which is going to talk about how to determine the place of supply in case of supply of goods other than imports and exports. So it is talking about place of supply in case of supply of goods for other than imports and exports. That means for domestic supply transactions, supply of goods related transactions, how to determine the place of supply, that is contained in section number 10. Then we have section number 11. Section number 11 is going to talk about how to determine the place of supply in case of supply of goods in case of imports and exports. For imports and exports, how to determine the place of supply, that is discussed under section number 11 of the IGST Act. Then we have section number 12. Section number 12 will talk about how to determine the place of supply in case of supply of the services where the location of the supplier and location of the recipient both are in India. when the location of the supplier. See, understanding when which section will become applicable is very, very important, especially section number 12 and 13. So listen carefully. So section number 13, section number 12 will talk about how to determine the place of supply in case of supply of services when both location of the supplier and the location of the recipient, when both are in India. How to determine the place of supply, that guidance is given under section number 12. Then we will have section number 13. So when section number 13 will become applicable is how to determine the place of supply in case of supply of services where either location of the supplier or location of the recipient is outside of India. Then section number 13 will become applicable. So here it is very important for us to bifurcate between when section number 12 will become applicable, when section number 13 will become applicable. So first you have to decide it. Why? Because if you decide the section only wrong, then definitely you are going to write the place of supply also as wrong. So that's why it is very important for us to know when section number 12 will become applicable, when section number 13 will become applicable. See, when it comes to section number 10 and 11, there will be no much confusion. But section number 12 and 13 are major. This is where complications are going to be there. This is where confusions are going to come. So that's why you have to be very careful in deciding what is the scope. When section 12 will come into picture, when section number 13 will come into picture. So come on, for one more time, please repeat it. When section number 12 will become applicable. So to determine place of supply in case of supply of the services, when the location of the supplier and the location of the recipient, when both are in India, in those cases, how to determine the place of supply, that is governed under section number 12. Whereas when section number 13 will become applicable, section number 13 will become applicable when either the location of, in case of supply of services, once again, when either the location of the supplier or the location of the recipient or both are outside of India. Either location of the supplier or the location of the recipient or both are outside of India, then section number 13 will come into picture. And all these four sections, whatever we are going to cover, all those four sections are from IGST Act. We are actually covering the provisions of the IGST Act. So this much, did you get the clarity? Right. So now what we will do is, since we got to know about the structure of the chapter, first I will try to start with supply of goods. We'll try to cover section number 10 and section number 11. So section number 10 is both are talking about the goods that we'll try to cover. So 10, 11, very easy, will not take much of a time. Quickly we will try to complete it. So first, talking about section number 10. Section number 10 is going to talk about how to determine the place of supply of goods for other than supply of goods imported into or exported from outside of India. So if I have to put it in simple terms, other than imports and exports, you are making supply of the goods, but it is neither falling under imports definition, not falling under exports definition. So that is, it is neither import nor export. In those cases, how to determine the place of supply. So now we have section number 10, which is going to talk about it. And in that section number 1, in that section number 10 also, we have subsection 1. In that subsection 1, we have various clauses, like we have clause A, clause B, clause C. Each clause will be talking about different cases, and in that cases, how to determine the place of supply. Okay, so first let me talk about the first thing. Supply involving the movement of the goods. Let us say you are a person, you are making supply of the goods, and that supply involves movement of the goods. As a part of that supply, in order to make that supply happen, in order to effect that supply, the goods are required to be moved from one place to another place. You are a supplier, you are making supply of the goods, which require movement of the goods. Goods are required to be moved from one place to another place. Sir, in that case, what is the place of supply? So 10 subsection 1 clause A says that in that case, the place of supply will be location of goods at the time when the movement of the goods terminates. The place where the goods are located at the time when the movement is terminating, whenever the movement is coming to an end. So, or if I put it in even simple language, the place where the movement of the goods is coming to an end, that is destination, will become the place of supply. So let us say I'm a person from Delhi, my recipient is located in Mumbai. From Delhi I'm selling the goods, so I'm causing the movement of the goods. My goods require movement, so where the movement will end, where the movement is going to terminate, the movement is going to terminate at Mumbai, at the recipient's place. So the place of supply will become Mumbai, the state will be Maharashtra, location of the supplier Delhi, place of supply Maharashtra. So it will be an interstate supply, IGST will be imposed. As simple as that. Clear? So in case of supply of the goods involving the movement of the goods, 10 subsection 1 clause A says location of goods at the time when the movement of goods terminates, wherever the movement of the goods is ending, that will become the place of supply. Then we have 10 subsection 1 clause B, which is talking about how to determine the place of supply in case of bill to ship to transaction. How to determine the place of supply in case of bill to ship to transaction. So let me take one example. Okay, we don't have here. Fine, no issue. I will try to explain it from here only. So how to determine the time, how to determine the place of supply in case of bill to ship to transaction. Let me try to explain. See, this we have already covered. What is a bill to ship to transaction? Even in the input tax credit chapter also we have come across what is a bill to ship to transaction. So if I give you once again, let us say there is a person, Mr. B, who is in Mumbai. Okay. He placed an order with Mr. A, who is a supplier. He is actually the supplier. So Mr. B from Mumbai placed an order with Mr. A for 10,000 quantity. Let us say this person is located in Delhi. Now B is having another customer. B is having another customer in Delhi. Let us say C. C is another customer of Delhi. So this person placed 10,000 quantity of order with B. So now what happened is B instructed Mr. A as an ordinary prudent businessman. So it will be not wise enough for Mr. B to get the goods from here, thereafter sending it to C. So why to have all this unnecessary headache? So that's why what Mr. B has ordered Mr. A is, boss, you do one thing, you directly ship to Mr. C. You directly ship to Mr. C, but you bill it to me. So that means Mr. A will give invoice to Mr. B, but he will ship the goods to Mr. C. So now the transaction between A and B, there are two transactions here. The transaction between A and B, this will be called as bill to ship to transaction. This will be called as bill to ship to transaction. Why? Because A is billing to B, whereas shipping the goods to Mr. C. Then there is another transaction which is B to C. B to C, we have another transaction, no? B will give invoice to C, no? So that is another transaction. That is not bill to ship to. The transaction between Mr. A and B, that is a bill to ship to transaction. Whereas the transaction between B to C is not a bill to ship to transaction. Now first let us talk about how to determine the place of supply in case of A to B, the first transaction, bill to ship to transaction. So they told that in 10 subsection 1 clause B, it has told that the place of supply will be considered as the principal place of business of this original recipient, whoever is the original recipient. In my case, the example here is he is the original recipient. Okay, right. Don't cover the terminology in the section, that is quite more confusing. So just take the help of this example, that will be much better. So what they are trying to say here, so if I see it, when goods are delivered by the supplier to a recipient at the instruction of the third person, that is original buyer, place of supply is the principal place of business of the third person. So what do you mean by this? So don't cover this third person and all. So just follow the example whatever I am saying. So for the transaction between A to B, which is a bill to ship to transaction, the place of supply will become the principal place of business of this Mr. P. So what is the principal place of business of Mr. B? Mumbai. So for the transaction between A and B, the place of supply will be Mumbai. Sir, what is location of the supplier? Delhi. Place of supply, Mumbai, Maharashtra. When both are falling in two different states, it will be, when both are falling in two different states, it will be an interstate supply. So what will be levied here? IGST will be levied here. So then we have B to C. There is another transaction between B to C, no? So that is not a bill to ship to transaction. Sir, but for that transaction also I need to determine place of supply. Now how will I determine the place of supply? For transaction between B to C, the place of supply will be determined by 10 subsection 1 clause A only. So what does 10 subsection 1 clause A say? In case of supply of goods which is involving the movement, the place of supply will be the location wherever the movement is terminating. Where the movement is terminating, the movement is terminating in Delhi. So place of supply will become Delhi. Location of the supplier is Mumbai, Maharashtra. Once again an interstate supply. Even on this transaction also IGST will be imposed. Clear? Comfortable? So this is what regarding bill to ship to transaction. So let me see one section. Sir, you said section 13, both outside India also cover under section 13. If both are outside GST, what is the purpose of levying GST? I told it will get covered under. See, one of the student is asking the question. Sir, you said section number 13. So let me address this section. Let me address this doubt. Thereafter, I will proceed further. Sir, you told section number 13 will become applicable when location of the supplier, location of the recipient are both outside of India. Then also place of supply could become. Then also we will go by section number 13. See, I spoke about applicability of section number 13. Where did I say it will become compulsorily taxable? I did not say the tax will come here. I told it will not get covered under section number 12. It can get covered under section number 13. But I did not say that on that you have to pay the GST and all. No. So just I am saying what will be the scope and applicability of section number 13. I did not say when the supplier is outside of India, recipient is outside of India, then also GST has to be paid. I did not say it. But place of supply might be governed here. Okay, right. Fine. So anyhow, for that, that is altogether different import export procedures related discussion. I hope your doubt is resolved. So let us try to proceed further. Right. Fine. We have completed 10 subsection 1 clause B also. So we are done with 10 subsection 1 clause A. We are also done with 10 subsection 1 clause B. Now let us try to proceed further. 10 subsection 1 clause C. Sir, what is 10 subsection 1 clause C? In case if you are making supply of the goods which does not involve any movement. 10 subsection 1 clause A says in case if you are making supply of the goods which involves movement. 10 subsection 1 clause B says in case of bill to ship to transaction. Now 10 subsection 1 clause C we have, which is saying in case if you are making a supply which is not involving any movement of the goods. Sir, can we also make a supply which does not involve any movement of the goods? Yes, 100% we can make a supply which does not involve any movement of the goods also. Let us say for example, I am selling the building along with furniture. This is one common example which I use even in the classroom also. So there is one immobile property you are selling. In that furniture is also that furniture also you are selling. So immobile property you are selling it for 1 crore. Furniture you are selling it for 5 lakh rupees. See, sale of immobile property is neither a supply of goods nor supply of services. Schedule 3, not a supply, no GST at all. Okay, so now let us talk about furniture. Furniture is goods. So you are a person. This immobile property is located at Chennai. Let us say this property owned by supplier. He is selling the goods to a recipient. He is selling the immobile property along with furniture. Immobile property, take it outside of the GST purview. Now let us talk about furniture, mobile property. So you are making supply of goods. Furniture is supply of goods. But is this goods required to be moved from one place to another place? No. This furniture is getting sold along with immobile property. So if I am selling this furniture to you, that furniture will remain there only. That furniture will remain there at that immobile property's location only. This recipient has to go and take the possession. That's all. So here also it is a case of supply of the goods which does not involve any movement. Yes, you are making supply of the goods, agreed, but you are not making any movement. So in case of supply of the goods which does not involve any movement of the goods, what will be the place of supply? So place of supply is location of goods at the time of delivery to the recipient. Wherever that goods are located at the time of delivery, or if I have to put it in simple terms, at the time of transfer of ownership, wherever the goods are located, that will become the place of supply. So now in this example, where the furniture is located at the time of delivery, I told this property is at Chennai. So where the furniture is located at the time of delivery to the recipient, they are located at Chennai. So place of supply will become Chennai. Clear? Able to understand? Right. So this is what regarding 10 subsection 1 clause C. Now let us talk about 10 subsection 1 clause CA. Very important. It was an amendment. So 10 subsection 1 clause CA. Sir, what does 10 subsection 1 clause CA say? First of all, what is its applicability? 10 subsection 1 clause CA will become applicable in case if you are making supply of the goods to an unregistered person. In case if a supplier is making supply of the goods to an unregistered person, whether it involves movement or not, all that keep it aside. The movement, in case the supplier has made a supply to an unregistered person, recipient is an unregistered person, there is a special clause for that, and specific clause will prevail over general clause. So what are general clauses? 10 subsection 1 clause A says if you are making supply of the goods which involves movement, determine the place of supply according to that. 10 subsection 1 clause C says if you are making supply of the goods which does not involve any movement, then determine the place of supply according to that. But in case if you have made supply of the goods to an unregistered person, it is a special clause. There is a special clause for that. 10 subsection 1 clause CA. Come and determine the place of supply as per 10 subsection 1 clause CA only. Don't go to 10 subsection 1 clause A. Don't go to 10 subsection 1 clause C. Clear? So in case if the recipient is an unregistered person, then you have to come and determine the place of supply as per 10 subsection 1 clause CA. And what does that 10 subsection 1 clause CA say? Number 1, in case if the location of the recipient is available, or if the location of the recipient is recorded in the invoice. Supplier is making a supply to an unregistered person. He will give invoice. On that invoice, if the address of the recipient is recorded, location of the recipient. No sir, invoice is given, address of the recipient is not recorded sir, then the location of the supplier itself will become the place of supply. So very simple. In case of supply made to an unregistered person, we need to check whether address of the recipient is recorded on the invoice or not. In case if the address of the recipient is recorded on the invoice, location of the recipient. In case address of the recipient is not recorded on the invoice, then the location of the supplier. Sir, what do you mean by recording of the address? So they have given even further clarification. What do you mean by recording of the address? Is recording the name of the state is enough. Recording the name of the state of the recipient is enough. Full address is not required. Door number, area number, city, state, city, all that not required. Just if the state of the recipient is recorded on the invoice, it will be deemed as location of the recipient, and that will be determined as place of supply. Understood? Clear and comfortable? Now regarding this, one more circular is also there. Let me try to explain that circular also now. So let us say for example, there is one recipient, unregistered person. There is one recipient, unregistered person. Now he is buying the goods through e-commerce operator. He is buying the goods to e-commerce operator. Today it is very common now. Even we are also buying the goods a lot from the e-commerce operator. Let us say he ordered a mobile phone through the e-commerce operator. Now e-commerce operator will give the invoice. In that invoice, address of the recipient will be available or not? Definitely yes. Today if you are placing an order from the Amazon, don't you think your address will be recorded on the invoice? Yes, there will be address recorded on the invoice. Full address will be recorded. But the problem is this recipient who is an unregistered person who placed the order of the goods through the e-commerce operator, he has given two addresses. One is billing address. One is what? Billing address. There will be billing address and there will be shipping address. Sometimes we do it, no. So our billing address will be there. Let us say, for example, my residence is at one state, but currently I am residing in another state for job purposes, for education purposes. I have gone to another state. So my billing address, let us say, for example, my billing address is Hyderabad, but I gave the shipping address as Delhi. I gave the shipping address as Delhi. Sir, here the problem is not address is not getting recorded. Address is recorded. Recipient is an unregistered person. On the invoice, address of the recipient is recorded. But the problem is two addresses are there. Billing address is there. Delivery address is there. Shipping address you see or delivery address you see, whatever it is. So two addresses are there on the invoice, sir. Which two addresses are there? Billing address is there. Delivery address is there. Which address I have to consider, sir? Which address I have to consider? Circular has given a clarification that you consider the delivery address as the address for determining place of supply. You consider which address? Delivery address, you consider it for the purpose of determining place of supply. One important circular. Okay, right. So what and all we have covered? We have covered 10 subsection 1 clause A, 10 subsection 1 clause B, then 10 subsection 1 clause C. We have also covered 10 subsection 1 clause C A. Now let us try to proceed further. Next, what we have? Supply involving installation or assembly of the goods or site. Goods at site. Let us say there is one supplier, he is making supply of the goods to the recipient, but those goods are such a nature that those goods are required to be installed or assembled at site. Let us say you are buying an air conditioner, that air conditioner is required to be installed at one place. You are buying one generator, that generator is required to be installed at one certain place. You are buying a planted machinery, that planted machinery is required to be assembled at your factory. So like that, in case if the supply of the goods is happening where the goods are required to be installed or assembled at site, in that cases, this is also one more specific clause. You have to directly come to 10 subsection 1 clause D and you have to determine the place of supply. So what does that 10 subsection 1 clause D say? In case of goods, in case of supply of the goods involving installation or assembly of the goods of site, the place of supply will be considered as the location wherever that installation or assembly occurs. The place wherever that installation is happening, the place wherever the goods are getting assembled, that place will be considered as the place of supply. That place will be considered as place of supply. As simple as that. Next, one more thing here. Goods are supplied on board day conveyance. Last clause, 10 subsection 1 clause C. What will be the place of supply in case of supply of goods on, in case if the goods are supplied on board day conveyance? Sir, what do you mean by supply of goods on board day conveyance? Let us say, for example, you are traveling in a train, you are traveling in an aircraft, or you are traveling in a vessel. So when you are on a conveyance, when you are traveling on a conveyance, during the journey, sometimes goods might be supplied. During the journey, as a part of your journey, the goods may be supplied. So what do you mean by supplying the goods as a part of the journey? Let us say, for example, when you are traveling in an aircraft, when you are traveling in a flight, during the journey, you might the people might sell you some goods that aircraft that airport operate. Sorry, that airline company might supply some goods. Or let us say, for example, you are traveling in a train. During there also, Indian Railways might supply some goods to you. Packaged foods and all, they can sell it to you. Yes or no? Like Lay's biscuit packets like that, they might sell it to you. Or let us say, for example, you are traveling in a train. Some third party people will be there who will supply the goods. Let us say, for example, you are traveling in a train. One person is selling the earphones. One person is selling the chargers on board day conveyance. So for these kind of transactions, when I say supply of goods on board day conveyance, those goods might be supplied either by the travel operator, either by that conveyance operator or by a third person. So whatever it is, in case of supply of goods on board day conveyance, how you will determine place of supply? So 10 subsection 1 clause E has simply told that in case where the goods were supplied on board the conveyance, the location where the goods were taken on board the conveyance, wherever those goods are taken on board the conveyance, that means wherever the goods are taken onto the conveyance, that will become the place of supply. Let us say, for example, there is one train which is starting from let us say Kanyakumari. It is going up to Delhi. Okay, so now you boarded the train here. Then what happened is somewhere at Mumbai, one person has entered at the Mumbai on this train. One person who is a supplier of electronic gadgets, he entered this train along with the goods at Mumbai location. Thereafter, on halfway through the journey, he sold one electronic good to you. Sir, what will be the place of supply? This is a clear example of supplying of goods and board day conveyance, and it will be governed by 10 subsection 1 clause E. And what does 10 subsection 1 clause E says? Wherever the goods are taken on board day conveyance. Where the goods are taken on board day conveyance? At Mumbai, the goods are taken on board day conveyance, so the place of supply will become Mumbai, Maharashtra. That will become the place of supply. Clear? That's all. So this is what regarding section number 10, different circumstances involving supply of the goods and how to determine the place of supply in all that circumstances. Okay, so 10 subsection 1 clause A, supply involving the movement. 10 subsection 1 clause B, bill to ship to transaction. 10 subsection 1 clause C, supply does not involve movement. 10 subsection 1 clause C, A, supply made to an unregistered person. 10 subsection 1 clause D, goods requiring installation. 10 subsection 1 clause E, the goods are supplied on board a conveyance. If at all you are unable to determine the place of supply by following any of this, let us say you are making some supply of the goods, but in case if you are unable to determine the place of supply in any of these clauses, then they say 10 subsection 2 says then you have to determine the place of supply in according to such rules as may be prescribed. In case if you are unable to determine the place of supply using any of the clauses above, then the rules will be prescribed. According to that rules, you have to determine the place of supply, but till now no such rules are prescribed. Clear? Right. So that is what regarding section number 10. Now we will come to section number 11. Sir, what is section number 11 talking about? Once again, I am reiterating my fact. So 10, 11, 12, 13. These four sections are of the IGST Act, which we are learning, not CGST Act. We are learning these sections of the IGST Act. So now we have section number 11. Sir, what does section number 11 say? Section number 11 is going to talk about how to determine the place of supply of goods in case of imports and exports. Very simply, they will try to wind it up, no complications at all. So section 11A says that in case of import of goods, what will be the place of supply? So simply if you read it, place of supply will be the place where the importer is located, location of the importer. Location of importer. If the importer, wherever that importer is located, that will become the place of supply. So what is import? First of all, import means bringing goods into India from a place outside of India. From outside of India, if you are bringing the goods into India, then we call it as import. And in case of import, what will be place of supply? Location of importer. What will be location of importer? In India. So place of supply will become what? India. Clear? Next. In case of export of goods, what is the place of supply? First of all, what is the meaning of the term export? Taking goods outside of India, taking goods out of India to a place outside of India. You are taking the goods from out of India to a place outside of India, then we call it as export. Sir, in case of export, what will be place of supply? Place where they have been exported, that is destination outside of the India. What will be place of supply? Place where the goods are destination, place where the goods have been exported. To which place you are exporting the goods, that will become the place of supply. No relevance at all, no significance at all. Just there is a section. I told you what is the place of supply for imports. Just 2 points you remember. If at all you have to remember. Section 11A, in case of import of goods, what will be the place of supply? Location of importer. Section number 11B, in case of export of goods, what will be the place of supply? The place outside of India where they have been exported. That will become the place of supply. That's it. Okay. So now we have section number 12. So section number 12, what does section number 12 say? What will be the place of supply of services where the location of the supplier of service and the location of the recipient of service both are in India. Then we have section number 13, which will say what will be the place of supply in case either the location of the supplier or the location of the recipient are outside of India. So in that case, section 13 will become applicable. So now what I have done is I have one comparison chart for you. I have summarized that entire section number 12 and section number 13. I have summarized in the form of this one single table. Let us try to learn it from this table. So specific kind of service, what is under section number 12, when it will come to what will be the rule under section number 13. So some common services are there for which some different provisions we have. So like that, I have created one table. If you have attended our regular session, this is what the table where we have used for getting the better clarity and all. The same table I will take the assistance, and using that table I will try to summarize the discussion. Okay, listen. So this will be your easy reference point. This, as I've told, place of supply chapter is very important, and in the place of supply chapter also supply of services is very important. You must refer it. You must refer this before you go for the exam. You must refer this before you go for the exam, and this will be easy reference. If you have to refer something before going for the examination, if you have to refer section number 12 and section number 13 before exam, this is the best source which you can refer to. This is already available on the website. So just you have to go to that free resources section on our website. Go to CA final paper 5. So in that paper 5 you will be able to find some charts and all like that. So, or if you let me show it to you where it is. So just give me 1 minute. I will show it to you. So where you can have access to the charts. I'm using various charts now. These are all already available. Just let me show you where they are. Okay, I have to log in. Just 1 minute. Okay, so just come to the free resources section here, paper 5. So now you have charts and summaries. In the paper 5, you are able to find something called charts and summaries, right? So just open the charts and summaries. So you'll be able to find. So this refunds summary, place of supply for services. Last but one, if you are able to see, that is actually place of supply for services. So that is what the document I am referring to. And in the exemptions chapter, I will make use of various charts and all. So all that are already available so that you can download it from here. Okay, right. Now, coming back to the discussion. Right. So let us see now. So section number 12, when it will become applicable, when supplier and recipient or both are in India. Section number 13, when it will become applicable, when either the supplier or the recipient is outside of India. Then this section number 13 will become applicable. So we'll try to understand. See, first thing, we have something called a default rule. We have something called default rule. Sir, now what is this default rule? So what exactly is the purpose of this default rule is? First we have to understand the arrangement of section. So if you come to section number 12, section number 12 subsection 1 will talk about applicability. Even section number 13 subsection 1 also will talk about applicability. When section number 12 will become applicable, when section number 13 will become applicable. So that subsection will contain. So subsection 1 of both the sections will talk about applicability. Then we have subsection 2. So subsection 2 in both the cases, in both section number 12 and section number 13, subsection 2 is a default provision. So even 12 subsection 2 is a default provision, 13 subsection 2 is also default provision. Sir, what is this default provision is? These structures are arranged in such a manner that each subsection starting from 12 subsection 3 till if you go to 12 subsection 14. Similarly, starting from 13 subsection 2 till you go to some 13 subsection 13. So each subsection will be talking about, starting from subsection 3, if you go forward, each subsection will be talking about a specified service and how to determine the place of supply for that specified service. So starting from subsection 3, if you keep on going down, so each subsection will be talking about a specific kind of service and how to determine the place of supply for that specific kind of service. Like if you see here, if you once again have a look here, so if you see 12 subsection 3, 12 subsection 3 will be talking about services in relation to an immobile property, accommodation in hotel, guest house. That means in relation to immobile property services or lodging or accommodation services, how to determine place of supply, that is governed in case of 12 subsection 3. Similarly, if you see 12 subsection 4, it is going to talk about how to determine the place of supply for restaurant, catering, grooming, fitness, beauty and health services. Then we have 12 subsection 5, which is going to talk about training and performance appraisal services. Thereafter, we have 12 subsection 6, which is going to talk about admission to events or organization of events. So like that, if you see, each subsection will be talking about a specific kind of service and how to determine the place of supply. The same logic will become applicable even for 13 also. If you see 13 subsection 4 will talk about immobile property related services, 13 subsection 3 will talk about performance related services, and thereafter we have 13 subsection 5 which is going to talk about organization of events. Then we have 13 subsection 10 which is talking about passenger transportation services. So like that, we have subsections. Each subsection will be talking about a specific kind of service. So whenever you are making supply of the services, first you have to come from 12 subsection 3, go down. Then 13 in case if the location of the supplier or location of the recipient is outside of India, you come to section number 13. Starting from 13 subsection 13, I will start searching. I will start going down one by one. So I will find whether my service falling under any of that subsection. So first, in case if I am making supply of services, first I will decide whether I will fall under section number 12 or section number 13. So once I have decided, okay, I will fall under 13 subsection section 13 or section 12. Now what I will do is I will start searching. Starting from subsection 3, I will start searching whether whatever service I am providing is that falling under any of the subsection. Whatever service I am providing is that falling under any of the subsection, I will start searching. In case if whatever service I am providing, if that is not falling under any of that specified subsection, then I will come to the default. Then I will come to the default rule, which is subsection 2. Okay, so let us say if I am providing services in relation to immobile property and section 12 will become applicable, I will start searching. My service is falling under 12 subsection 3 only. I have to determine the place of supply under 12 subsection 3 only. Over. I am providing telecommunication services. Now I will start searching. 12 subsection 11 is going to talk about telecommunication services. I will determine the place of supply as per 12 subsection 11 only. In case if I am providing audit services, now we'll start searching starting from 12 subsection 3 till 12 subsection 14, and my service is not getting covered anywhere. Now you come to default rule 12 subsection 2, and whatever 12 subsection 2 they have told, that I will follow. Same logic will become applicable even for section number 13 also. If I am making supply of services where either the location of the supplier or location of the recipient is outside of India, then I will start looking at section number 13. So starting from subsection 3, I will start checking if my service is falling under any of the specified subsection, that subsection will become applicable. According to that subsection, I will determine the place of supply. Let us say I am making some supply of services, but my service is not getting covered anywhere starting from 12, starting from 13 subsection 3 going forward, going down. So then I will come to the default rule. According to the default rule, whatever provision they have told in the default rule, that will become applicable for me for determining the place of supply. Understood, clear and comfortable. Sir, what is that default rule? First of all, we'll try to learn what is the default rule. Very simple. If the recipient is registered person, that means if you are making a B2B supply, I'm telling you default rule first. If your service is not getting covered anywhere, then you have to come to the default rule. So in case of section number 12, if it is a B2B supply, if it is a B2B supply, location of recipient. If the recipient is registered, you need not worry. You will have the GSTN number of the recipient. If you have GSTN number, go to the GST portal and search for GSTN. You will be able to know the location of the recipient directly. You need nobody's assistance. So if your recipient is a registered person, you will have his GSTN number. Using that GSTN number, you can find out his location. Clear. Simply you have to go to the GSTN portal, search a GSTN, you have to go there, you have to enter that GSTN number of the recipient, you will get to know where he is registered, what is his place of business, you will get to know. So that's why if the recipient is a registered person, if it is a B2B supply, location of the recipient always you take it as place of supply. Location of the recipient you always take it as place of supply. In case if you are making a B2C supply, if you are making a supply to a recipient who is an unregistered person, then what will be the place of supply? Then you have to check, is address of the recipient available in the records of the supplier? In the supplier's records, is the location of the recipient available? If available, location of the recipient. No sir, in the records of the supplier, recipient's address is not available, then it will become location of the supplier. Clear? Very simple provision. In case of supply, in case of 12 subsection 2, when the location of the supplier, location of the recipient, both are located in India. So you have to check if your service is not getting covered anywhere, you are coming under default rule. So then you have to come to 12 subsection 2, which says if you are making a B2B supply, location of the recipient. If you are making a B2C supply, check whether in the supplier's records location of the recipient is available. If available, location of the recipient. No sir, in the supplier's records location of the recipient is not available sir, then the location of the supplier will become the place of supply. Understood? Right. So now what about default rule in the case of section number 13, where either location of the supplier or location of the recipient is outside of India? If my service is not getting covered anywhere of the specified services, then how to determine the place of supply? So in case of international transactions, where either the location of the supplier or location of the recipient is outside of India, there is nothing called B2B. There is nothing called B2B. In the international transactions, there will be nothing called B2B. Very simple logic. If either the location of the supplier is located outside of India, if either recipient is located outside of India, if one of them is located outside of India, they will not be registered with the GST department in India, no. If the location of the recipient is outside of India, he will not get registered with the GST department, then how it will become B2B supply? Or let us say supplier is outside of India. If the supplier is outside of India, then also he will not get registered. So in case of international transactions, when where the location of the supplier or the location of the recipient is outside of India, there is no question of B2B, because one of the person is outside of India, he will not get registered. What is B2B supply? First of all, when location of the recipient, when recipient, supplier, both are in India, when both are registered person, then we call it as B2B. But in international transactions, that will not be possible. Why? Because one of the person is staying outside of India, he will not get registered with the GST department. So that's why in case of section number 13, in default rule, we don't have any classification regarding B2B, B2C, etc. Simply what they have told is, if the location of the recipient is available, location of the recipient. If the location of the recipient is not available, location of the supplier. More or less same like 12 subsection 2 only, but they did not give B2B, B2C classification. So whatever may be the supply, whatever may be the transaction, if the location of the recipient is available, location of the recipient. If the location of the recipient is not available, then the location of the supplier will become the place of supply as per default rule under 13 subsection 2. Clear? So default rule we are done. Now we will come to services in relation to an immobile property. Now we will talk about one by one specific services and what section number 12 says, what section number 13 says, that we'll try to understand it. Right. So second category of service which we are going to cover now. First category of specified service, you can say after default. Now we are taking up specified services discussion. One by one we will see. So first is specified service in relation to an immobile property. Service in relation to an immobile property, or Services in relation to accommodation in guest house, club or campsite. Service in relation to immobile property. Sir, what are the services in relation to an immobile property? Architectural services, services in relation to immobile property, or construction services, services in relation to immobile property, interior designing services, services in relation to an immobile property. And not just that, lodging and accommodation services, either that could be in hotel, in guest house, campsite, etc. So let us say how to determine place of supply under section number 12 first. The location of the supplier, location of the recipient, both are in India. How to determine the place of supply in case of immobile property services? So they ask us to check whether the property is located in India. In case if you are providing services in relation to an immobile property where the location of the supplier, location of the recipient, both are in India. So we have to check where the property is located or intended to be located. If the property is located in India, location of the immobile property. If the property is located in India, location of the immobile property will become the place of supply. On the other hand, if the property is located outside of India, supplier, recipient, both are in India, and service in relation to an immobile property or accommodation services are getting provided, but the property is located outside of India, then the location of the recipient will become place of supply. Location of the recipient will become place of supply. So what they are trying to say it here, in case if the property, in case of services in relation to immobile property where supplier, recipient, both are in India, first we have to check whether the property is located or intended to be located in India. If the property is located or intended to be located in India, location of the immobile property only. In case if the property is located outside of India, location of the recipient. In case if the property is located outside of India, location of the recipient will become the place of supply. So now what does section number 13 say about it? In case of services in relation to immobile property where either the location of the supplier or the location of the recipient is outside of India, what does section number 13 say? Section number 13 simply they have told one thing, always and always location of the immobile property. You need not check where the immobile property is located, always and always it will become the location of immobile property. Understood? Clear and comfortable? That's it. Okay, right. So this is one thing you have to remember. So now here there are some things which we need to understand. Sometimes they are saying that in many cases location of the immobile property will become the place of supply. But sometimes immobile property might be located in multiple states. Sometimes immobile property might be located in multiple states. Sir, what are you trying to say? Let me give you the clarity here. Let us say Taj Hotels is there. They are providing the services in relation to immobile property, or if I put it in another way around, they are providing accommodation services. Let us say Taj Hotels is also located in India. There is one recipient who is also located in India. So since both are in India, which section will become applicable? Section number 12 only will become applicable. And which subsection? 12 subsection 13 will become applicable. Now, immobile property is located in India. Taj Hotel is providing accommodation services in the hotel. But that hotel, let us say this recipient is paying some 50,000 rupees for getting accommodation in a hotel. For this 50,000 rupees, this Taj Hotels is going to give accommodation in two places. So for this 50,000, they are going to give accommodation at the Delhi hotel also. They are going to give this recipient an accommodation at Mumbai hotel also. At two hotels, you are going to get your stay. So now, as per 12 subsection 3, location of the immobile property will become place of supply. But here, the immobile property is located in two states, no sir. But here, immobile property is located in two states, no sir. Sir, what will be place of supply? Place of supply will fall at both the places. Place of supply will be considered as both, and you have to apportion the value. So here place of supply will be Delhi also, place of supply will be Mumbai also. You have to apportion the how much value, for how much value the place of supply is Delhi, for how much value place of supply is in Mumbai. Sir, how to do that apportionment? How to do that apportionment is first to go and check the contract or agreement. First to go and check the contract or agreement. So see in the contract or agreement, if something is written, let us say in the contract or agreement it is written that for Delhi 20,000, for Mumbai 30,000, that's why total 50,000. So like that in the contract or agreement, if some bifurcation has been given, follow it. But let us say in the contract or agreement this bifurcation is not given, or contract or agreement itself is not there. Just the supplier has asked for 50,000 rupees and you are paying 50,000. He is giving accommodation at two places, but nowhere contract or agreement has bifurcated. In that case, what they are trying to say is you have to apportion the value on the basis of number of nights. Number of nights stayed at each place. Let us say for this 50,000 rupees, for 3 nights accommodation is provided at Delhi, 2 nights accommodation is provided at Mumbai. So this 50,000 rupees you have to divide it in the ratio of 3:2. So for 30,000 place of supply will become Delhi, for 20,000 the place of supply will become Mumbai. Clear? Understood? Right. So this is what one thing. And in some cases what will happen is you will get an immobile property. Sometimes you are availing services in relation to immobile property, but single property is spread across multiple states. There could be a possibility where single property will spread across multiple states. Let us say, for example, there is one person who is owning a piece of land, 5 acres of land is there, but this land is at the border of Karnataka and Tamil Nadu. That means some part of the land is there in Karnataka, some part of the land is there in Tamil Nadu. Single land only, a single land spread across 2 states. Now, as a person, there is one recipient. This recipient want to undergo his destination wedding here. Now, the owner of this land is giving this land on rent for performing that destination wedding. So now this will also get covered under 12 subsection 3. So what will be location? What will be the place of supply? Location of immobile property. But here immobile property is spread across multiple states. Here immobile property is spread across multiple states. Sir, what will be place of supply? So here place of supply will be Karnataka also. Place of supply will be Tamil Nadu also. That means you have to apportion. Let us say, for example, total 10 lakhs has been received for that service. Now this 10 lakh rupees you have to apportion. For some portion the place of supply will be Karnataka. For some portion the place of supply will be Tamil Nadu. But how to apportion? So here also check contract or agreement. If the contract or agreement gives some clear bifurcation, follow it. Or in other hand, or let us say if the contract or agreement does not say anything about the bifurcation, then you have to apportion it on the basis of area. Then you have to apportion it on the basis of area of immobile property. Let us say out of this 5 acres, some 2 acres is spread in Karnataka, 3 acres is there in Tamil Nadu. So now you have to divide the ratio in 2:3. Understood? Now sometimes what will happen is you are obtaining an accommodation in a boat house. You are obtaining accommodation in a boat house, like in Kerala and all in the inland waterways we have this boat houses. But that boat house, let us say you are staying in the boat house for 1 day. So for that you are paying some 10,000 rupees of consideration. But for that entire 24 hours, the boat house will not stay stagnant. That boat house will travel in the inland waterways. So that means that inland waterways are spread across Karnataka and Kerala. So that means this boat is you are going to stay in this boat for 24 hours, and that boat will not remain stagnant. That boat will travel in the inland waterways of Karnataka and Kerala. Sir, what will be place of supply? The place of supply will be considered as both states. Here also I have to apportion value. In which ratio, sir? According to the time spent by the boat declared by the boat operator. That boat operator will declare the time. Sir, in this state these many hours we have spent. In this state these many hours we have spent. So like that he will declare it. According to that declaration we have to bifurcate the value. Understood? So these are some special points regarding location of immobile services in relation to an immobile property. Clear about it? Right. So we have covered it. So now let us come to next category of specified services and how to determine the place of supply. So next category of specified services which we are going to cover now is performance based services. Yeah. So now we will try to talk about performance based services. Sir, what are these performance based services? See, there could be 2 kinds of performance based services. Performance based services means what? As a part of that services, you are going to perform some work. Your performance is involved. So now that performance in the sense not some dance performance and all, you are required to perform an act. That's what I meant. So now there could be 2 kinds of performance based services. One is you need to do some performance on a person. You need to perform an act on a person. Like what? Restaurant services, catering services, grooming services, fitness, beauty, healthcare services. These are all performance based services. Then there could be some performance based services on goods also. Then there could be some performance based services on goods also. Sir, what is performance based service on goods? Let us say I'm owning a car. My car has been damaged. Now I went to one expert who has to do the repair of that car. Now that person is performing services on the goods. That is also a performance based service. Restaurant, that is a performance based service on a person. Beauty, that is a performance based service on a person. Whereas these goods, servicing, repairs and maintenance, etc., these are performance based services on goods. Okay, so the next category of services for which we are going to understand the place of supply is performance based services. And as I am saying, there will be performance based services on goods also. There could be performance based services on persons also. Now how to determine place of supply for performance based services on goods, for performance based services on persons. So let us try to understand. First we will talk about section number 12. How to determine place of supply in case of performance based services in case where the location of the recipient and location of supplier both are in India. So first talking about restaurant, catering, grooming, fitness, beauty and health services. So in 12 subsection 4, they have identified all the services and they told that in case of restaurant, catering, grooming, fitness, beauty and health services, that means in case of these kind of services which involve performance on a person, the place of supply will always be location wherever such services are performed. So what they have simply told, location wherever that services are performed. Let us say for example, I'm a hairstylist. So one day a customer has came to me and he asked me to do the haircut for him. So I performed some service on him. Sir, what will be place of supply? Wherever I have done the haircut. Or I went to some other place and I did the haircut. So what will be place of supply? Wherever you have done that haircut. Same thing applicable for restaurant, fitness, grooming, beauty and healthcare services. So in 12 subsection 4, when both the location of the supplier and location of the recipient are in India, in case of this restaurant, catering, grooming, fitness, beauty and healthcare services, the place wherever that service is getting performed, that will become the place of supply. The place where exactly you are performing that services, that will become the place of supply. Sir, what in case of performance based services on goods? Let us say repair services, maintenance services. So like that, in case of performance based services on goods, you are performing a service. On goods, you are performing a service. For that, under section number 12, we don't have any specific provision. That will go by the default provision only. For that, we don't have any specific provision. That will go by the default provision only. Sir, what is default provision? If it is a B2B supply, location of the recipient. If it is a B2C supply, if the location of the recipient is available in the supplier's records, location of the recipient. If it is not available, location of the supplier. Okay, so when it comes to performance based services under section number 12, that is when the location of the recipient, location of the supplier both are in India. Under section number 12, we have only specific provision for performance based services on persons only. We don't have any specific provision regarding performance based services on goods. If you are performing some performance based services on goods, for that there is no special clause, that will go to default section only. But in case if you are making performance based services on restaurant, catering, grooming, fitness, beauty, healthcare services, these are performance based services on person, location where such services are actually performed, that will become the place of supply. Now, sir, what about section number 13? What about section number 13? For this, we have different provision. For performance based services also, for performance based services on persons also, we have a specific clause. For performance based services on goods also, we have a specific provision. So let us try to understand how to determine place of supply of performance based services in case of section number 13. And once again, when section 13 will become applicable, when either the location of the supplier or the location of the recipient is outside of India, then section 13 will become applicable. Let us see what does the section number 13 say. In case if you are making performance appraisal, in case if you are making performance based services on persons, how to determine the place of supply? So if requires physical presence, if you are doing some performance based services which requires a physical presence of a person, the person must be present for you to perform the services. In that cases, location where such a service is actually performed. Let us say for example, haircut I have to do. If I have to do a haircut, let us say recipient is actually located outside of India. I'm a hairstylist in India, popular hairstylist in India. But Tom Cruise got to know about it. Tom Cruise is located outside of India. Now that Tom Cruise wants to get a haircut done from me, I can't do online haircut, no. I can't do online haircut, no. That person has to come to India and then only I can perform it. So in case of this, one simple example I'm saying, in case of grooming services, if you are providing, that definitely requires physical presence of a person. So in case if you are performing services on a person, in case if you are making performance based services related to persons, and if requires a physical presence of the recipient, if the physical presence of the recipient is required, then in that case also, even under section number 13 also, location where the service is actually performed. Location wherever that service is performed. So Tom Cruise is coming to Delhi and getting the haircut. What is place of supply? Delhi only, wherever he got the haircut. If at all, in any other case, that means if you are performing some performance based services where the physical presence of the recipient is not required, physical presence of the recipient is not required, in that case you go by default. So in case if you are making performance based services on persons, to an individual you are performing the services, if it requires physical presence of the recipient, location where the service is performed. No sir, I am performing some personal kind of services in which location of the in which recipient's physical thing is not required. Recipient need not be physically available for me to do the services on him. In that case, you go by the default rule. Understood? So this is regarding performance based services on person. Sir, what if it is a performance based services on goods, like repairs services, maintenance services on the goods? In that case, if either the location of the supplier, location of the recipient is outside of India, then what will happen? In case if you are making performance based services which require the physical presence of goods, In case if the goods are required to be present, in case if the goods are required to be present for you to perform that services, then what will happen? Location where the service is actually performed. Location where the service is actually performed. And for this here they are having a star mark. I will come back to that star mark later. First we'll try to understand the provision. So in case if you are making performance based services which requires a physical presence of the goods, location wherever you are performing that service will become the place of supply. However, if provided from a remote location by electronic means, today in order to do the repairs of goods, you need not have the goods here. You can connect to that goods server. Like today everything is sensor based. So if at all, if you have, let us say for example, there is one in Germany, there is one machinery. That machinery got some trouble. I have to repair it. Now today machines have become so advanced at that machine you need not bring it here to do the repair. So that machine will be connected with a software. I will connect with that machine's software. From here itself I can do the repair. Possible? Yes, it is quite possible today. So in case if you can provide it from a remote location by means of electronic means, in that case location where the goods are situated at the time of supply of services, that will become the place of supply. If any other cases are there, then you go to the default place of supply under 13 subsection 2. Understood? So if you are making supply of performance based services on goods, first you need to check, is that requiring the physical presence of the goods, or the goods are required to be physically present if I have to perform that service. In that case, location wherever that service is actually performed. No, I can connect it to that device remotely by electronic means and I can do the service. In that case, location where the goods are situated at the time when you are doing that service, where the goods are located, that will become the place of supply. In all other cases, come by the default rule. So now they have given one star mark here. I have kept one star mark here. Sir, what is that star mark? So generally, in case if you are requiring, in case if you are making service on goods, in case if you are performing any service on the goods which require physical presence, what will be the place of supply? Location where the service is actually performed. But here they have given relaxation. What is one exception they have told us? Place of supply for services in respect of goods which are temporarily imported into India for repairs, treatment or process, and thereafter you are re-exporting it without any other use, then the location of the recipient, if recipients will be considered as place of supply. If location of the recipient is not available, then location of the supplier. That means we'll go by the default rule in one case. So here I will try to spend some time to give you the clarity why they have told you this provision. So let us say for example, I'm a person in India. First of all, for this we need to have a little background regarding exports. Export of service. Sir, when an service will qualify as export? Very important point I am telling, listen carefully. So when a service will be considered as export. So when a service will be considered as exporters, location of the supplier is in India. Location of the supplier is in India. Location of the recipient is outside of India. Okay. Place of supply is outside of India. Consideration received in forex. Consideration must be received in convertible forex or INR if permitted, and that is permitted only in two cases, in case of imports from Nepal and Bhutan. So consideration should be received compulsorily in forex or in INR only if permitted. When it is permitted in case if you are exporting to Nepal or Bhutan, then you can get the consideration INR. And also these are not just same establishments, not entities of the same establishment. That should be some outsider. Okay, so when service will be considered as exported, what is the definition of export of services? Export of service will happen when all these conditions are fulfilled. What are they? Location of the supplier must be in India. Location of the recipient is outside of India. Place of supply is also outside of India. Consideration must be received in convertible forex or INR only if permitted. And this transaction must not be happening between establishments of the same entity. When all these conditions are fulfilled, then it will qualify as export. Now, why I am telling you this is, in case if a service is qualifying as export, you will not be liable to pay any export due. You will not be liable to pay any GST. On exports, GST will be exempted. Not just that, even you can claim ITC. Even you can claim a refund of unutilized ITC also. Even you can claim refund of unutilized ITC. There will be two options in case of exports. Either you can export, pay the GST, get the refund. Or you do the export without making payment of GST and claim the refund of unutilized ITC. For exports, benefits are there here because by doing an export, you are contributing to the foreign reserves of the country. You are contributing to forex reserves of the country. So company will always try to give you benefits. They will give you so much of priority. They will give you so much of recognition for you. Number one, if you are making export, first thing, you are not required to pay GST. Second thing, not just paying GST, if at all, whatever unutilized ITC is there, that unutilized ITC, even you can claim it as refund also. So always people want to enjoy this export of service. If they get qualified as export of service, then what will happen is they can enjoy more benefits. Okay. So now what they have told is, let us say, for example, you are a supplier located in India. Just listen carefully. You are a supplier located in India. You are performing some services. Let us say, for example, there is one German recipient is there. In Germany, one recipient is there. So now in Germany, one missionary has faced one trouble. Now what you should do is, you have to go to Germany and do the repair. Okay. So now let us see whether it will fall under export or not. Location of the supplier, is it India? Yes. Location of the recipient, Germany. Outside of India? Yes. Sir, what is place of supply? Just now, as I've told, in case of performance based services on goods, so wherever, in case if it require physical presence of the goods, wherever you are performing that service, that will become the place of supply. Since you are going to the Germany and doing that repair, place of supply also will become what? Germany, no? Place of supply also will become what? Germany. Let us say consideration is received in Forex, and they are not establishments of different person. Let us deem that both these conditions are also fulfilled. Then it will qualify as export. No, all the conditions are getting fulfilled. Location of the supplier is in India, location of the recipient is outside of India, place of supply is outside of India, and consideration is received in Forex. And also, these are not just a transaction between establishments of the same person. All conditions are fulfilled. This will qualify as export. You can enjoy exemption. You are not liable to pay any GST, and even this person can claim refund of unutilized ITC also. This person can claim ITC of refund of unutilized ITC also. But let us take a different scenario. Let us say you are a supplier located in India. There is a recipient located in Germany. Now this person's machinery has got some trouble. It is required to be repaired. Now you are saying, boss, I will not come to Germany. You will only bring the goods to India. So in Mumbai, I have a point of repair unit. So you bring that goods to Mumbai. So that German machinery has been brought to Mumbai. So there you have performed the repair. But consideration you are getting in Forex. Now what will happen? Sir, what is location of supplier? India. What is location of recipient? Germany. But what is place of supply, sir? Place of supply is where the service is actually performed, because it is a performance based service which require physical presence of the goods. So place of supply will be wherever that service is performed. It will become Mumbai. Sir, consideration is received in Forex, sir. These are not establishments of same person, sir. But still it will not qualify as export. It will not qualify as export. Why it will not qualify as export? Because place of supply is in India. So all these conditions are required to be fulfilled to qualify as export of service. What are all that conditions? Location of supplier must be in India. Location of the recipient is outside of India. Place of supply is outside of India. Consideration must be received in Forex or INR only if permitted. And these are not just establishments of the same person. When all these conditions are fulfilled, then only export. But here place of supply is falling in India. All other conditions are fulfilled. But since place of supply is falling in India, this will not qualify as export. If this is not qualified as export, on that service you are required to pay GST. Even this person can't claim the refund of unutilized ITC also. Yes or no? But this is discouraging these kind of people or not? Yes. So that's why what the government has told us, they have given relaxation for this. Okay, don't worry. In case if you are importing the goods for doing some service, thereafter you are re-exporting it without putting to any other use. Just you are importing the goods, doing some performance based service, thereafter you are exporting it. Without putting for any other use, then you will be governed by 13 subsection 2 only. Go to default rule. What is default rule? Location of the recipient. Sir, what is location of the recipient? Germany. So now place of supply will become what? Germany. All the conditions are fulfilled. If you go by 13 subsection 2, all the conditions will be fulfilled. Location of the supplier will be outside of India. Location of the supplier is in India. Location of the recipient is outside of India. Place of supply outside of India. Consideration received in Forex. These are not establishments of the same person. All conditions of the export you have fulfilled. You can enjoy exemption. And also you can claim refund of unutilized ITC. They want to extend that benefit to these people also. That's why they have given this exemption. So that's why if you see here, one exception, place of supply for services in respect of goods which are temporarily imported into India for repairs or treatment or process. That means you are importing some goods temporarily into India for repairs, treatment or processes, and thereafter you are re-exporting it. Very important, without any other use. If you are putting into other use, you are importing the goods, you are doing some activity, putting to some other use, then you are exporting, no benefit. You are importing the goods, doing some activity like repair services or treatment, thereafter you are re-exporting it without put to any other use. You are not making use of it for any other purposes. You are importing, doing some activity, thereafter you are re-exporting it. Then you will be governed by 13 subsection 2 only. Then location of recipient will become place of supply. If recipient's location is not available, then the location of the supplier. Understood? Clear? Able to understand? So this is what regarding performance based services. So we have covered what will be the scenario of performance based services under section number 12 and what will be performance based services under section number 13 also. Clear? Understood? Are you all with me, my dear students? So I'm going much deeper into this chapter for the sake of your benefit only. Please listen. Right. Fine. Okay, so now we have one more thing in the performance based services, training and performance appraisal services. Training and performance appraisal services. So this is also forming under performance based services only. You are giving some training or you are doing some performance appraisal. So this is a training and performance appraisal. Also for that also we have provisions. Why? Because this will also broadly fall under performance based services only. So for training and performance based performance appraisal services, we have a dedicated provision under section number 12 subsection 5, which says that in case of training and performance appraisal services, if the recipient is registered, location of the recipient. If you are performing training and performance appraisal services to a recipient who is registered person, location of the recipient. In case if the recipient is unregistered, place wherever that service is actually performed. So this you have to remember it. So what they are trying to say it here, training and performance appraisal services, this is also a performance based service, but for training and performance appraisal services, we have a dedicated provision under section number 12. When the location of the supplier and the location of the recipient both are in India, then for determining place of supply for training and performance appraisal services, we have a dedicated provision, 12 subsection 5 we have, which says that in case of training and performance appraisal services, if the recipient is a registered person, always location of the recipient. If the recipient is unregistered person, then place wherever that service is actually performed, that will become the place of supply. But when it comes to section number 13, even this training and performance appraisal services is also like any other performance based services to an individual. So whatever provisions which will become applicable for normal performance based services, the same thing will become applicable here. So nothing but if it requires physical presence, location where the service is actually performed, other cases default place of supply. Okay, so here one more point here, training and performance appraisal services, even though it is a performance based service to an individual, we have dedicated provision under section number 12 subsection 5. But when it comes to section number 13, we don't have a dedicated provision. It will be treated as if it is any performance based service to an individual, the same thing. So whatever we have here, that is copy paste only. So the same thing will become applicable for performance and training based services in case of section number 13. Clear? Right. So we have covered two categories of specified services in relation to an immobile property, accommodation, hotel, in guest house or club or campsite. Then we have dedicated provision for performance based services. Both we have covered. Now let's try to proceed ahead. Services in relation to admission and organization of events. Services in relation to admission or organization of an event. Let us see what they're trying to say it here. So got affected with little throat infection since I've been taking continuously this marathon sessions. See, generally when I take up the marathon, no, I'll be shouting at a very high pitch. So I will not be able to control. I prepare my mind continuously that I have to speak within the limit or else my throat will get affected. How much I prepare my mind. But when that marathon I start discussing, no, I will not be able to control my voice. I don't have control over my voice. So like this, I will keep on shouting and my throat will get affected. So now the problem has come. Little bit of throat infection I'm having. So that's why at some places I will be slowing down. At some places I need to have continuous water. So that's what the problem I'm facing currently. That's why I did not had the session today by 9 also. Because today I'm not in a position. If I continue to stretch these things for more time, no, our future sessions will get affected. So that's why I took only small session. Tomorrow, as usual, we'll try to have full-fledged session. But this is the one reason why I plan to cut down the session for today. Right. So whatever it is, let us proceed further. Services in relation to admission and organization of events. So when it comes to admission and organization of events, how to determine place of supply? So let us see what does section number 12 say about it. So in case of admission to events or amusement parks, like any award function is happening, any music function is happening, any dance event is happening, to that you are getting admitted. So admission to event. So circus is happening, you are getting admitted to that event. They're selling you tickets. Or amusement parks, like we have Wonderlaw, or we have this film cities and all, where you will be given access. So in case of services related to admission to events or amusement parks, how to determine place of supply? Under section number 12, they have simply told place wherever that event is actually held. That's all. One simple point. Wherever that event is held, wherever that amusement park is located, that will become the place of supply. Sir, what about 13? Same, exactly copy pasted. So this provision is going to remain same in both the cases. So in relation to admission to events and amusement parks, in 12, under section number 12 and under section number 13 also, in both the cases we have same provision. The place wherever that event is actually held, wherever that event is actually held, or the place wherever that amusement park is located, that will become the place of supply. So that is what same in both the cases. Now come to organization of events. Sir, what is the difference between the previous one and this one? See, in the previous one, that is admission to event. Let us say, for example, concert is getting organized, or award show is happening. For that, they will sell you tickets. No, that is what admission to event. Now the next service which they are talking about here is organization of event management services, event organizing services, which is very popular these days, right? So for event management services, what will be place of supply? So when it comes to organization of events, along with sponsorship also, organization of events and along with assigning of sponsorship of events, for both we have single provision, 12 subsection 7. Under 12 subsection 7, it is going to cover both organization of events and assigning sponsorship events. So for both the services, how to determine place of supply, that is contained in 12 subsection 1. So what they have told is, if the recipient is registered, it is a location of the recipient is registered, then it will become location of the recipient. And in case if the recipient is unregistered, that means if it is a B2B supply, location of the recipient. If it is a B2C supply, if the event is held in India, location of the event. If the event is held outside of India, then the location of the recipient. So very simple. Under 12 subsection 1, under 12 subsection 7, they talk about two events. One is organizing of event. Similarly, assigning sponsorship to events also. For both of this, 12 subsection 7 we have, which is telling how to determine place of supply. It says first check whether it is a B2B supply or B2C supply. If it is a B2B supply, location of the recipient. If it is a B2C supply, check where the event is held. If the event is held in India, location of the event. If the event is held outside of India, then the location of the recipient. Clear? So once again, I am repeating it for you. 12 subsection 7 will talk about organization of events and also assigning sponsorship to events. So in order to determine place of supply, first you need to check what is the supply, what is the nature of supply. If it is a B2B supply, location of recipient. If it is a B2C supply, check where the event is getting held. If the event is held in India, location of the event. If the event is held outside of India, location of the recipient. But when it comes to section number 13, we have specific provision only for organization of events. For sponsorship, we don't have any specific clause. So that means when it comes to section number 13, for sponsorship, it will go to default provision. It will go to default provision, location of the recipient if available, or else location of the supplier. But only for organizing of events, we have a special provision, which says that wherever the event is actually held. So that means, what is the structure here is, when you come to section 13 subsection 5, it is talking about admission to events also, organizing of events also. For both put together, they have told only one point, location wherever the event is held. But when it comes to 12, they have told that for admission, we have a dedicated subsection, 12 subsection 6, which says wherever the event is held or amusement park is located. When it comes to organizing of events and assigning of sponsorship, we have 12 subsection 7, which is talking about if it is a B2B supply, location of the recipient. If it is a B2C, check where the event is held. If the event is held in India, location of the event. If the event is held outside of India, location of the recipient. Understood? But when it comes to section number 13, for both admission of events and organization of events, not sponsorship. For both admission of events and organization of events, for both put together, they have told only one point, wherever the event is actually held, that will become the place of supply always. Understood? So for 12, we have breakup for admission, organizing. But when it comes to section number 13, we don't have any breakup or admission to events or organizing events. For both, we have one single rule, place where the event is actually held. Okay, next. Transportation services. Now the next heading which we are going to cover is, next services which we are going to talk about is transportation services. How to determine the place of supply in case of transportation services. So first let us see what does section number 12 have for us. So when section number 12 will become applicable, when the recipient supplier both are located in India. Now when I say transportation services, that could be transportation of goods also, that could be passenger transportation services also, and that could be services supplied on board day conveyance also. Three categories we are going to cover. When I say transportation related services, three categories I am going to cover: transportation of passengers, transportation of goods, and supply of services on board day conveyance. Like the way we have seen supply of goods on board day conveyance, we could also have services on board day conveyance. For that, how to determine the supply? Okay, first to see what we have for 12. So 12 subsection 8, we have a dedicated subsection talking about how to determine the place of supply in case of transportation of goods. They simply told one thing: check whether the recipient is a B2B or whether the recipient is a registered person or unregistered person. If the recipient is registered, always location of the recipient. If the recipient is registered, in case of transportation of goods, if the recipient is registered, always location of the recipient. In case if the recipient is unregistered, location where the goods are handed over for transportation. Location where the goods are handed over for transportation. That means wherever you are taking the goods and handing over for transportation. So that will become the place of supply. Very simple here. Let us say if a company is getting GTA services. If a company who is a registered person, if they are getting GTA services. GTA services, transportation of goods. What is the place of supply? Since recipient is registered, location of the recipient. Let us say you are an individual person. You are a student. You want to courier your books from Hyderabad to Chennai. You are a student, unregistered person. You went to courier agency and you asked your goods to be transported from Hyderabad to Chennai. Sir, what is place of supply? Location of the recipient is unregistered person. Now place of supply will be location where the goods are handed over for transportation. You are taking the goods and handing over for transportation. No. So you are taking the goods and handing over for transportation at Hyderabad courier office. So place of supply will become Hyderabad, not destination. Where you are taking and handing over that goods for transportation, that will become the place of supply. Clear? So this is we have under section number 12. But when it comes to 12 subsection, when it comes to section number 13, we don't have any specific provision for transportation of goods. When it comes to section number 13, where either the location of the supplier or the location of the recipient is outside of India and they are getting the transportation services and transportation of goods or services is getting provided, no specific clause we have. If we don't have any specific clause, we have to go to the default. 13 subsection 2 will become applicable. Location of the recipient. If the location of the recipient is not available, then the location of the supplier. Default provision. So for transportation of goods, we have specific provision only under section number 12 subsection 8. Under section number 13, we don't have specific provision, go by the default rule. Now let us come to passenger transportation services. So when it comes to passenger transportation services, we have specific provision under section 12 also. We have specific provision under section number 10 also. Under section number 13 also, sorry. So when it comes to passenger transportation services, under both sections, under section number 12 and under section number 13, in both the sections, we have a specific provision. Sir, what is it? So in case of passenger transportation services, 12 subsection 9 gives a guidance. What is it? Check the status of the recipient. If the recipient is registered person, location of the recipient. If the recipient is unregistered person, location of embarking, wherever you are embarking on a conveyance. If I put it in other terms, wherever you are boarding on a conveyance. Wherever you are boarding, wherever you are getting into that conveyance, that will become the place of supply. Okay, so simply if I have to put it here there are some minute details which are important from the examination perspective. Let us say you are traveling here. Indigo Airlines is providing you services of passenger transportation. You are a registered person. You are a business person. You are registered in Chennai. Okay, so you are traveling for your business purposes. Recipient is a registered person. So what is place of supply? In case of passenger transportation services, when both are located in India, 12 subsection 9 will become applicable and place of supply will be always location of recipient. So Chennai will become place of supply. On the other hand, let us say you are traveling from Chennai to Delhi. You are an unregistered person. And you are traveling from Chennai to Delhi. What will be place of supply? Here place of supply will be place you are embarking, wherever you are boarding onto conveyance. Where you will be boarding? At Chennai you will be boarding. So place of supply will become Chennai. And one more important point we have under section number 12 subsection 9. See, in case of round trip, if you are booking a round trip, return journey should be treated as separate journey. Very important point here. Return journey should be treated as separate journey. Which means, let us say for example, Indigo is providing transportation services. You are a registered person and you are booking a round trip where you will go from Chennai to Delhi. You will see their work there and thereafter you will come back from, let me put it this way. So you will go from Chennai to Delhi. On the same night, you will come back from Chennai to Delhi. Okay, Delhi to Chennai. So round trip you have booked it. So now even though you have booked a round trip, both journeys will be treated as separate journeys. Chennai to Delhi separate journey, Delhi to Chennai separate journey. So now you tell me, if the recipient is registered for Chennai to Delhi journey, what will be place of supply? For Chennai to Delhi, what will be place of supply? See, if the recipient is registered, it doesn't matter, always location of the recipient. Where you are embarking doesn't matter, always location of recipient. So let us say recipient is registered in Chennai only. Sir, for return journey, what is place of supply? You will be coming from Delhi to Chennai. What will be place of supply? Once again, location of recipient only. It will be Chennai. Why? Because if the recipient is registered person, always location of recipient, from where to where you are traveling doesn't matter. Sir, what if the recipient is an unregistered person here? What if the recipient is an unregistered person here? In that case, for Chennai to Delhi part of the journey, the place of supply will be Chennai, wherever you are embarking. So you are embarking at Chennai. On the other hand, for return journey, where you will be traveling from Delhi to Chennai, for that the place of supply will become Delhi, the place you are embarking. Okay, so like that we have the differentiation. Understood. But when it comes to section number 13, we don't have anything, because as we all are aware, in international transactions, we don't have B2B, B2C. Here we have one simple rule they have told, 13 subsection 10, the place where the passenger embarks on conveyance, wherever you are boarding onto conveyance. Same, whatever they have told it here. But in section number 12, they have given bifurcation, B2B, B2C. But here they don't have bifurcation, only one simple rule we have, place we are embarking on the conveyance, wherever you are boarding onto the conveyance, that will become the place of supply. Understood? Then we have one small point I would like to add here, right to passage for future use, where boarding point is not known. See, for these services, for both section 12, section 13, we have default only. You go by the default rule only. But just I want you to explain what is the meaning of this right to passage for future use, where boarding point is not known. Let us say, for example, you have travel pass. Sometimes these travel companies and all, like Indian Railways also, let us say, on one railway route, they are giving you travel pass, which will be valid for 1 month. So if you buy the travel pass, you can travel from anywhere to anywhere. You can travel from anywhere to anywhere. So that means that is also passenger transportation services. If you are issuing a pass to you, travel pass there, if they are issuing it to you, that is also passenger transportation service only. But this is such a kind of passenger transportation services where boarding point will not be known. They are actually giving you right to passage. That means they are actually giving you right to travel. But where you will board, that will not be known. You can use this pass for traveling from anywhere to anywhere. So in such kind of services, in case the transportation service is in this nature, in case if the passenger transportation service is in this nature, which nature? Right to passage for future use, where boarding point is not known. Let us say, for example, travel pass. So in those that services will not get covered under specific provisions. That services will go to the default provision in both the case, in both section number 13 and section number 12. In both the cases, it will go to the default rule. Usual passenger transportation services only we have dedicated place of supply rules. Whereas in case of right of passage for future use, where boarding point is not known, that will always be governed by the default provision, both under section number 12 and also under section number 13. Then services supplied on board day conveyance. Sir, for goods supplied on board day conveyance, we have 10 subsection 1 clause E. Today only we have covered 10 subsection 1 clause E we have, which is talking about, we have 10 subsection 1 clause E, which is talking about what will be the place of supply in case of supply of goods on board day conveyance. So what does that say there? Wherever that goods are taken on board, that will become the place of supply. No. Similarly, when you are boarding a conveyance, services also can be provided. In that case, what is the place of supply? In both the cases, they have told same provision, 12 subsection 10 and 13 subsection 11. In both, we have same provision, first scheduled point of departure. First scheduled point of departure. So whatever is the first scheduled point of departure, that will become the place of supply. Sir, what they are trying to say it here. Once again, one simple example. Let us say a flight is starting from Chennai and it is headed to directly Delhi. And there is a halt at Mumbai. You are a passenger, you boarded flight. You boarded the flight at Mumbai. During that Mumbai to Delhi journey, you are getting bored. So what you have done is movie on demand services you have availed. Movie on demand services you have availed. That means you have paid some money and they gave you access to the movie. So this is a supply of services on board day conveyance. Now what is the place of supply they are saying? First scheduled point of departure. First scheduled point of departure is Chennai, not the place you have boarded. First schedule. What is the first scheduled departure of this point of this flight? For this flight, what is the first scheduled point of departure? The flight is scheduled to be departed at Chennai. The first scheduled point of departure is Chennai, so the place of supply will become Chennai here. Understood? Not the place where you are boarded, where it is the first scheduled point of departure. So this is what the common rule which we have for section number 12 also, section number 13 also. Next. So with this we have completed transportation related services. Now we will come to the next part, which is telecommunication services. We will talk about telecommunication services. So when it comes to telecommunication services, we have a special provision only under not 11, not 12, not 13, only 12. So when it comes to telecommunication services, we have a specific provision only under section number 12. For section number 13, we don't have any specific provision. It will be governed by the default rule only. So when it comes to supply of telecommunication services, we have special provision for determining place of supply only under section number 12. For section number 13, we don't have any special provision for telecommunication services. That means if we don't have any special provision for section number 13, it will be governed by default. So let us see what is that specific provision for telecommunication services in case if both the location of the supplier and the location of the recipient both are in India. So let us see. In case if it is a fixed telecommunication line, leased internet circuit or cable or dish antenna for these kind of services which require physical installation. So in case of fixed telecommunication line, leased or internet leased circuit, cable, dish antenna, for these kind of telecommunication services, what will be place of supply? Location of installation. What they have told? Location of installation. Wherever they have installed, that will become the place of supply. Let us say you are availing cable services. So that cable will be installed, no? So whatever is the place of installation, that will become the place of supply. Now here also one point we have here. So here also one specific point we have. See, sometimes what will happen is in the case of leased circuit. In the case of leased circuit, this will be installed at multiple locations. There will be something called points. For leased circuits, point will be there. Let us say the company is having a head office in Delhi. So in Delhi, they will have one point. Now they are having a branch office in Mumbai. So there another point will be there. Connecting these 2 points, leased circuits will be installed. Now these are installed at both the states. In Delhi also, Maharashtra also. How it will be apportioned? It will be apportioned on the number of points. Let us say, for example, 1 lakh worth of leased circuit services are getting provided. But here place of supply will fall in Delhi also. Place of supply will fall in Mumbai also, Maharashtra also. And in which ratio we have to divide? On the basis of number of points. You have 1 point in Delhi, 1 point in Mumbai. Into 1:1 ratio we will divide. Let us say in Delhi 1 point is there. In Pune also another office is there. That is also getting connected. And ultimately that will end at Mumbai. So now one more point is there in Mumbai. So in that case, what will happen? In Delhi, you have 1 point. In Maharashtra, you will have 2 points. Pune and Mumbai, Maharashtra, you have 2 points. So now that entire consideration, you have to divide it on the basis of 1:2. So in case of fixed telecommunication line, cable, antenna, dish, leased circuit services, place of supply will be location of installation. But in case if it is spread across multiple states, it will be apportioned among all the states in the ratio of number of points in each state. Okay, next. Sir, postpaid mobile services, what will be place of supply? For postpaid mobile services, location of the billing address of the recipient. So recipient's billing address will be there in the supplier's records, no? That location of the billing address will become the place of supply. Sir, what if address of the recipient is not available? Then the location of the supplier. If address is not available, location of the supplier. In case of prepaid mobile, internet and DTH through agent, reseller or distributor. In case of prepaid mobile services which are getting provided through agents or distributors or resellers, the place of supply will be address of the selling agent, reseller or distributor. So whatever is the address of the selling agent, reseller or distributor is there, that will become place of supply. Now those agents, distributors, resellers will make the supply of service to final subscriber, no? What will be place of supply for that? Location wherever that prepayment is received. Location wherever that prepayment is received. But this is history. No one is doing this today. What is the most common thing today? Prepaid services, that too by way of electronic mode. So today we are doing the services. We are availing prepaid services. We are getting the recharge through electronic mode only. So in that case, what will be place of supply? Location of the recipient will become the place of supply. So what will become place of supply? Location of the recipient will become place of supply. That's all. If any other telecommunication services are there, apart from the above, if any other telecommunication services are getting provided, then how to decide place of supply is location of the recipient if available. If the location of the recipient is not available, then the location of the supplier. That's it. So this is what regarding telecommunication services. Now let us try to proceed further. Let us understand the next bunch of services, financial services and hiring of means of transport. So financial services and also hiring of means of transport. If you are hiring any means of transport, like that means you are hiring a vessel, if you are hiring an aircraft, like that. So financial services and hiring of means of transport, like that one cluster we have. So let us see how to determine the place of supply for this. So now what they have told us, in case of banking and financial services, for banking and financial services, when you come to section number 12, when location of the supplier, location of the recipient both are in India. So what is place of supply, sir? For banking and financial services, location of the recipient. If recipient address is available. Sir, in case if the recipient address is not available, then the location of supplier. And under section number 12, subsection 12, including banking services, they have included the stockbroking services also. Under section number 12, subsection 12, they have included banking, financial, including the stock broking services also they have covered under 12, subsection 12. And how to determine place of supply for that banking, financial and stock broking services when the location of the supplier and the location of the recipient both are in India. So location of the recipient if available, if not available, location of the supplier. Can I say more or less similar to default provision only? Can I say more or less similar to default provision only? Yes. Sir, what if banking and financial services are provided to under section number 13? That means if either the location of the supplier or the location of the recipient is outside of India and the service which is getting supplied is banking and financial services, then what is the place of supply, sir? So here we have 13 subsection 8. They say that if this banking and financial services are supplied to account holders, then the location of the supplier will become place of supply. If the banking services are provided to account holders, location of the supplier will become place of supply. Sir, what if service is provided to other than account holders? We don't have any specific provision. That means you have to go by the default rule. You have to go by the default rule. So what they have told, banking and financial services under section number 12, more or less similar to default only. So they told location of the recipient, if not available, location of the supplier. But when it comes to section number 13, for banking and financial services, they have told we have to check if the service is getting provided to account holder. Yes, if the service is getting provided to account holder, location of the supplier. No sir, service is not getting provided to account holder, service is getting provided to someone else, then it will be governed by default provision. Understood? Next, intermediary services. Now comes the intermediary services. Intermediary means who? Mediator. If you are providing any mediating services, then what is the place of supply? So when it comes to section number 12, we don't have any specific provision for intermediary services. For intermediary services, we don't have any specific provision under section number 12. So when the location of the supplier, location of the recipient, both are within India, and if intermediary services are getting provided, we don't have any specific provision. Go to default provision, except stock broking. Stock broking is also intermediary, but stock broking is getting covered under 12 subsection 12. Listen. Important point. So see here, intermediary services. Intermediary services. Now there could be two situations. Section number 12, under section number 12, under section number 13. So intermediary services also, if it is a stock broking service, if it is a stock broking service, specifically they have covered it under 12 subsection 12. You use 12 subsection 12. What is 12 subsection 12? Location of the recipient. If not available, location of the supplier, including stock broking services. Other intermediary services are there. Other intermediary services are there. This all will go to default. Default. 12 subsection 2 will become applicable. But when it comes to section number 13, they say that for all intermediary services, location of the supplier. For all intermediary services. So when I say intermediary services here, for the purpose of section number 13, even stock broking also will get covered here only. Even stock broking also will get covered here only. So under section number 13, all intermediary services, including the stock broking also will get covered here. So all intermediary services will get covered under 13 subsection 8, which says location of the supplier will become the place of supply. Location of supplier will become place of supply. Understood? So this is something you have to remember. So for intermediary services under section number 12, if it is stock broking services, specifically they have included under 12 subsection 12. Other than stock broking services, you go by the default rule. Whereas in case of section number 13, all intermediary services including stock broking, all of them will get covered under 13 subsection 8, in which case it will fall under location of the supplier. Okay, right. Next, let us see what else we have. Then we have hiring of means of transport, including ACH, excluding aircraft and vessel, up to 1 month. Excluding the aircraft, excluding the vessel, but ACHs are included. So if you are hiring any means of transport, if you are taking any means of transport on rent, except aircraft and vessel, but including ACH is included. So including ACH, other than aircraft and vessel, that means on that's motor vehicles, etc. like that. So if you are hiring any means of transport, including ACHs, up to 1 month, for short duration, you are hiring any means of transport. For section number 12, we don't have any default, we don't have any specific provision, that will be gone by default. But in this case, we have location of the supplier. But under section number 13, they have location of the supplier. Clear? See, what I wanted to say here is, under all these three are getting covered under 13 subsection 8. So we have 13 subsection 8. Under 13 subsection 8, under 13 subsection 8, they are telling that for certain services, location of the supplier always will become place of supply. There are certain services for which location of the supplier will always become place of supply. So what are that services? They have told services provided by banking and financial services provided to account holders. Number 2, intermediary services. Number 3, hiring of means of transport including hatches other than vessels and aircraft up to 1 month. For these 3 services put together, we have location of the supplier as the place of supply. That's what I have presented in a different way by comparing it with the what is the similar provisions under section number 12. Okay, so once again, my dear students, let us see now, do the comparison of 13 subsection 8 with the relevant provisions of section number 12. In case of banking and financial services, including stockbroking services, for the purpose of section number 12, location of recipient, if not available, location of the supplier. But in case of section number 13, to account holders, it will be location of supplier. To others, default. Next one, sir, intermediary services. For other than stockbroking services, for other intermediary services under section number 12, we don't have any specific provision. It will be governed by default. But for all intermediary services under section number 13, we have a dedicated provision 13 subsection 8 which will say location of the supplier. Then hiring of means of transport including yacht but excluding aircraft and vessel up to a short duration of 1 month. For that we don't have any specific provision under section number 12, but it will get covered under 13 subsection 8 which says location of the supplier will become the place of supply. Then sir, okay, this is banking, understood, over. Now what about insurance services? What about insurance services? So when it comes to insurance services under section number 12, we have a dedicated section 12 subsection 13 which says if the recipient is registered, location of the recipient; if the recipient is unregistered, location of the recipient; if available, or else location of the supplier. Default only. Even though they have given separate provision, it is nothing but default provision only. Yes, they have included a separate section for insurance under section number 12. But whatever provision they are saying in that section number 12 subsection 13, that is very much similar to default provision only. So that's why I will say, even though for insurance you have a dedicated provision, you need not remember it. Why? Because it is equal to the default provision only. Anyhow, for insurance services under section number 13, we don't have any specific provision. That will be governed by the default POS rules only. Under section number 13 for insurance services, we don't have any specific provision. That will be governed by the default POS only. Okay, next. Then we have the next category, advertisement services provided to government. Here also under section number 13, we don't have any specific provision. We have specific provision only in section number 12. Only when the location of the supplier, location of the recipient, both are in India, then only we have specific provision. And that also what 12 subsection 14 says is, in case of advertisement services which are provided only to government, 12 subsection 14 will become applicable in respect of advertisement services provided only to government. Sir, what if advertisement services are provided to others? It will go to default. So 12 subsection 14 we have advertisement services provided to government. Specific provision we have under section number 12 only. For section number 13 we don't have any specific provision. We go to default. And even in section number 12 also we will cover only advertisement services related to government. If advertisement services are provided to others, no specific provision, go to the default rule 12 subsection 2. And here they say that generally in case advertisement services are provided to government, especially central government, that will get published in all over the India. If the central government is undergoing any advertisement, if someone is providing advertisement services to central government, that advertisement will not be published in one state. No, that advertisement will be published all over India. Let us say central government is running one campaign. They want to do one TV advertisement. That TV advertisement will be watched by people all over India. So that's why they have told that in case advertisement services are provided to government, where that advertisement is getting disseminated in more than one state, then each of such state or union territory wherever advertisement is broadcasted, run, played or disseminated will become the place of supply. In case if you are providing advertisement services to the government where that advertisement is getting disseminated, displayed or published in more than one state, the place of supply will be in each state or union territory wherever that advertisement is getting disseminated, wherever that advertisement is getting displayed, wherever that advertisement is getting distributed. That means that consideration you have to divide it across all the states and union territories wherever that advertisement is getting displayed, published or distributed. Understood? How, sir? How means we will have one rule in the main material. You will be able to find that rule. Not that important from the examination. Just you refer it. In case if the pamphlets are distributed, how to bifurcate. In case if the advertisement is in television, how to bifurcate across each state. In case if it is published by way of SMS messages, then how to distribute. In case if it is through online this website related advertisement, how to apportion it. So all that we have on different categories. We will have one detailed rule in material that you can refer to it, how to apportion the value across all the states and union territories. Not that important from the examination perspective. That's why I'm not going to it. Then OIDR services, online information data access retrieval services. We have specific provision only under section number 13. Under section number 12 for OIDR services, we don't have any specific provision. For OIDR services, for section number 12, we don't have any specific provision. We have specific provision for OIDR services only in case of section number 13. And they say that location of the recipient will become place of supply. What they have told? Location of the recipient will become place of supply in case of OIDR services under section number 13. Under section number 12, we don't have any specific provision for OIDR services. Only under section number 13, we have specific provision for OIDR services, and they have told that location of the recipient will become the place of supply. Then we have one more specific case, 13 subsection 13, like that one specific subsection is there under section number 13, which says that they have notified certain services for which location of the recipient will always be considered as place of supply. And this provision is applicable only for section number 13. That means where either the location of the supplier or the location of the recipient is outside of India, they have notified certain services. For that notified services, location of the recipient will always be considered as place of supply. They have notified certain services. For that notified services, the location of the recipient will always be considered as place of supply. So what is that? What are that notified services for which location of the recipient will always be considered as place of supply? 3 services are notified. Number 1, what are that 3 services? Number 1, specified services, specified research and development services when provided to pharmaceutical sector by a person located in taxable territory to a person located in non-taxable territory. That means if you are a person located in India, you are providing some research and development services in relation to pharmaceutical sector to a recipient who is located in non-taxable territory. If that supply of services are under a contract and if they are qualifying as export for all other reason except the place of supply. So what they are trying to say here is, let us say you are a person located in India here and you are providing some pharmaceutical services, research and development services to a recipient located outside of India. So location of the recipient is outside of India. Location of the supplier is in India. Let us say consideration also you are receiving in forex, and this transaction is happening not between establishments of same entity, but because of some reason, if the place of supply is falling in India, you will lose that export benefit, no? So if only because of place of supply, if it is not getting qualified as export, we will do one thing to give you that export benefit. We will deem that location of the recipient itself will be place of supply. That means place of supply also will become outside of India. You can enjoy the export benefit. Understood? So in case if you are a person located in taxable territory, you are performing specified research and development activities in relation to pharmaceutical sector to a recipient who is located in non-taxable territory, and if that supply of service must be under a contract, and except that place of supply, all other conditions for export is getting fulfilled, but only place of supply is not fulfilling, in that case we will assume that place of supply will be location of recipient which is outside of India, so that it will qualify as export and you can enjoy all the export benefits. And similarly, 2 more services also they have identified where they will always deem location of the recipient will be place of supply. What is it? Maintenance, repair or overhaul services, which we call it as MRO services. So you are providing maintenance, repair or overhaul services for whom, sir? In relation to aircraft, aircraft engines or other aircraft components or parts supplied to a person for use in the course or furtherance of the business. Let us say some foreign aircraft company is there. That aircraft company, let us say for example Lufthansa aircraft has got a problem. Now in India, their flight has come to India. Let us say that flight has halted in India. For that aircraft, you are performing some services, maintenance, repair, overhaul services you are performing. But actually speaking, since it is a performance based service on goods, location wherever the service is performed, that is India will become place of supply. But here also what they are saying, we will consider location of the recipient as place of supply. Lufthansa is outside of India, so location of recipient is outside of India. We will also consider place of supply as outside of India because they want to extend the export benefit to you also. But however, that aircraft must be used by the person in the course or furtherance of the business. Which means, let us say, if you are doing that for Lufthansa aircraft, if you are providing MRO services, they will use it in the course or furtherance of the business. In that case, location of the recipient will be considered as place of supply. Let us say, for example, Elon Musk has come in his private jet. Elon Musk has come in his private charter flight. So that private charter flight has faced some trouble. So now you are providing MRO services for that private jet, which will not be used in the course or furtherance of the business. Yes or no? He will use it for his personal purposes. Yes or no? So in that case, what will happen? In that case, then the location of the recipient will not be considered as place of supply. Place of supply will be governed by that 13 only. So which one? Performance based services. Location wherever that service is actually performed, which will become India. So place of supply will become in India, so that you can't enjoy the export benefit. Okay, so remember this. If you are not able to understand all this logic, at least try to remember this. Maintenance. See, if you have attended the regular session, no, everywhere I have linked it. But here it becomes quite difficult for me to link all these things. So that's why I say marathon, if you could support it with one round of preparation, if you have done one round of preparation, or if you have attended the classes once and you have done some reasonable level of preparation, then you take the help of the marathon. No, nothing is stopping you from getting qualified in the examination. But if you are only relying on the marathon, I can't assure you, but sometimes it has happened. Even people relying on the marathon getting qualified, but it will happen rarely if your time is very good. But this marathon is a helping hand for your preparation. Okay, right. So whatever it is, MRO services in respect to aircraft engine and other parts, other aircraft components, which is used in the course or furtherance of the business. In that case, always location of the recipient will be considered as place of supply. Similarly, if MRO services are getting provided in case of ships and vessels, like the way you are providing services to aircrafts, if MRO services are getting provided for ships and other vessels, or their engines or their components to a person for use in the course or furtherance of the business, then also location of the recipient will be considered as place of supply. So what you have to remember for MRO services in relation to an aircraft or a ship or vessel, ship or other vessels, which is getting used in the course or furtherance of the business, for those services, location of the recipient will be considered as place of supply. Understood? Clear and comfortable? So that's all here. So this is what comparison between how to determine the place of supply in case of supply of services under section number 12 and under section number 13. Very important from the examination perspective. This is where they will twist and ask many questions. Since this chapter is very significant, I have spent some more amount of time here. Hope you guys are able to understand it. With this, I'm going to wind up the today's session. So we'll try to revise our subsequent chapters in our subsequent sessions. Okay, so that's all for now. Take care everybody. Bye. See you, and see you in the next session for revision. Right, so welcome back everybody. So after we have done a series of days of marathon, so let us continue. Yesterday there was a pause, so because of some unavoidable reasons I have to take a pause. So now in this session we'll try to continue our marathon series from wherever we have stopped in our previous session. So till now, what and all we have covered in this marathon series till date, what and all we have covered, what and all chapters we have covered. So let us try to have a quick look at that. So first we have done intro part, thereafter we are done with the supply part, then we have seen what is this registration, thereafter charge of GST along with the composition levy, then we have completed this thing called after charge, then we have done composition, thereafter we have done bunch of chapters like time of supply, then we have done value of supply, input tax credit, dedicated one session we have done there, and even place of supply chapter also we have covered. So this is what I guess we have covered. I might have missed out. I think I did not miss out anything, but yeah, to the extent I do remember. So these are all the chapters. These are all the bunch of chapters which we have covered as a part of our previous days. So now what we'll try to do is we'll try to continue further, and we'll try to start now with a few more concepts which are important from the examination point of view. So first what I will try to do is from the tax invoice chapter, not complete tax invoice chapter, I'm going to revise it here, because from the tax invoice chapter, once again there will not be any direct question. So but here and there some due dates are there which you have to remember, which will have a linkages. Some due dates will be there, within what time limit. Some time limits are there which are very important. Overall chapter they will not ask any dedicated question, but in this chapter there are some important points, there are important time limits which you have to remember, which will have a connection, especially with the time of supply chapter. These are time limits, these due dates for issuing the invoices and all will have a connection. So that we will have a quick recap. Will not spend much time here, hardly some 15 to 20 minutes we'll spend, then we'll proceed further with the subsequent discussion. Subsequent chapter will do. So first of all, here in this tax invoice chapter, what I want you to recollect the things is, what are the time limits for issuance of the invoices? What are the time limits for issuance of invoice in different circumstances? So let us try to understand. So all that time limit for issuance of invoices in different circumstances, they all have been given under section number 31. There are various subsections of section number 31. In various subsections, they have spoke about different circumstances. In all the different circumstances, what will be the time limit in case of issuing the invoices, that they have clarified. So let us have a quick look at it. So first, if we see 31 subsection 1. Sir, what is the time limit for issuance of invoice in case of taxable supply of goods? In case if you are making taxable supply of the goods, what is the time limit within which you are required to issue the invoice? So they say that in case of supply of the goods, the invoice is required to be issued before or at the time. That means either before or at the time, but not later than this. So in case if the goods are involving movement, I have already told you in the place of supply chapter when we can say goods are involving movement, when we can say goods are not involving movement. That thing we have already covered it in the place of supply chapter. So in case if you are making supply of taxable goods which involves movement, goods are required to be moved from one place to another place. The maximum time limit within which you are required to issue the invoices on or before the removal of the goods. What is the maximum time limit within which you are required to issue the invoice on or before the removal of the goods? In any other case, that means in case if you are making any supply of the goods in which you are not required to do any movement. So I told you one example in place of supply chapter. If you remember that immobile property getting sold with the furniture, so furniture is not required to be moved. So in case of such supplies where goods are not required to be moved from one place to another place, then the invoice is required to be issued on or before delivery of the goods or making available to the recipient. That's all. So this is what you have to remember. So then we have 31 subsection 2, which is talking about what is the time limit in case of issuance of invoice in case of taxable supply of services. In case if you are not making supply of the goods, but in case if you are making taxable supply of the goods, in case if you are not making taxable supply of the goods, in case if you are making taxable supply of services, then what is the time limit within which you are required to issue the invoice? So when it comes to services, you need not give the invoice even before the service, even after the service also you can give the invoice. After the provision of the service also you can give the invoice. But there is a maximum time limit. Sir, what is the time limit? If you are a usual taxable person, if you are making a if you are a normal if you are a usual if you are making usual supply of services, invoices are required to be issued maximum within a time limit of 30 days from the date of supply of services. Today if I made the supply of service, let us say for example today I have done some ITR filing for one of my client, I am a registered person, I am required to issue the invoice within 30 days from the date of provision of service. Today I am done with the ITR filing, from today within 30 days I am required to issue the invoice. However, especially for insurer, banking company, financial institution, including NBFC, that means some specialized organizations have been told. So in case of insurer, banking company, financial institution, including NBFCs, for these financial institutions, the department has given them even more time limit. They told that these suppliers can issue the invoice within 45 days from the date of supply of service. So for insurer, banking company, financial institution, including NBFC, the time limit within which they are supposed to give the invoices 45 days from the date of supply of service. But when it comes to others, apart from this insurer, banking company, financial institution, including NBFC, for all other people, invoices required to be issued within 30 days from the date of supply of services. Understood? Right. Next. So this is what regarding supply of services. There are some special provisions and all there. So these will not be tested at the CA final level. So you need not worry. So whatever I am stressing, that much you have to remember. So 31 subsection 1 we have covered, 31 subsection 2 we have covered. Then we have 31 subsection 3. In case of continuous supply of the goods. In case if you are making supply of the goods, but it is a continuous supply of the goods. Sir, what is continuous supply of the goods? You are supplying the goods on a continuous or recurring basis. You are supplying the goods on a continuous or a recurring basis, then we call it as continuous supply of the goods. In case of continuous supply of the goods, what is the time limit within which you are required to issue the invoice? So what is the time limit within which invoice is required to be issued? In case of continuous supply of the goods, if successive statements are getting issued, in case if the supplier is giving you successive statements, then on or before that statements. Sir, such statements are not getting given, sir. Only successive payments are happening, sir. Then invoice is required to be issued before at the time of such a statement is issued or each such payment is received. So very simple. In case of continuous supply of the goods, if the supplier is giving periodical statements, then on or before that statement they are required to generate the invoice for that portion of the goods whatever they have supplied. In case no, sir, supplier is not giving any successive statement, only payments are happening on a continuous basis. That means on or before certain due dates payments are only happening, on or before that due date for that portion invoice is required to be issued. Then 31 subsection 5 we have what is the time of supply, what is the time limit for issuance of invoice in case of continuous supply of the services. In case of continuous supply of services, what is the time limit for issuance of invoice? But here one thing you all have to remember, sir, what is the meaning of continuous supply of service? For continuous supply of service, an activity will be considered as continuous supply of service where the service is provided or agreed to be provided on a continuous or recurrent basis. The service is getting provided on a continuous basis or on a recurring basis, on a repeated basis under a contract for a period exceeding 3 months. Very important. We can consider an activity as continuous supply of service only when you are providing that service on a continuous basis or recurring basis for a period of more than 3 months. For continuous supply of goods, this condition we don't have. For continuous supply of the goods, we don't have this condition of 3 months. So why? Because if you look at the definition of continuous supply of the goods, they simply say that goods provided or agreed to be provided on a continuous or recurring basis under a contract. That's all. So for continuous supply of the goods, in order to qualify as continuous supply of the goods, that 3 months condition is not there. But in order to qualify as continuous supply of services, so services are required to be provided on a continuous basis or on a recurrent basis for minimum period exceeding 3 months. For a period exceeding 3 months, if they are getting provided on a continuous basis, then only they will qualify as continuous supply of services. Very, very important. This point you have to keep it in in mind. Sir, in case if the service is getting provided on a continuous basis, but for a duration of less than 3 months, sir, then what will happen? Then it will be treated as normal supply of services only. You will be governed by the 31 subsection 2. Okay, so but in case if you are making continuous supply of services, you have to come under 31 subsection 5. Sir, what is the time limit within which invoice is required to be issued? Invoice shall be issued in case here they have told 3 terms. If the due dates are ascertainable, first we have to check the contract. In case of continuous supply of service, we have to check the contract. So in the contract, check whether due dates are ascertainable. Sir, what is due date are ascertainable? In the contract, have they clearly given any due date for making payment? If yes, on or before that due date for that respective portion, you are required to give the invoice. No, sir. In the contract, due dates are not given clearly, but the contract is drafted in such a manner that due dates are linked with completion of event. Due dates are linked with, payments are linked with the completion of event. In that case, invoice is required to be issued on or before the completion of that event. Like after completion of first floor this much, after completion of second floor this much, after completion of third floor this much. So like that, in case if the payment is linked with completion of event, on or before the completion of that event, you are required to give the invoice for that respective portion. Then, sir, in case payment due date is not ascertainable, you are making some supply, you are making continuous supply of service. I looked at the contract. In the contract, there is no due date given. In that case, on or before or at the time when the supplier receives the payment, before or at the time when the supplier receives the payment, they are required to generate the invoice. Clear? So these are the time limits for issuance of invoice in case of continuous supply of services. Then, supply of services ceases before its completion. Supply of services ceases before its completion. You are making supply of the services even before you could complete that service is coming to an end. Ceasing means what? Stopping. So you agreed to make some supply of service, but that service is ceasing, that service is stopping even before you could complete it. In that case, till that portion, till that cessation, till that point of time that service is getting stopped, till that point of time some service has been provided. No, for that portion you are required to issue the invoice. Sir, within what time limit, sir? Invoice should be issued at the time when the supply ceases. Whenever that supply is ceasing, whenever that supply is coming to an end, at that point of time, for that portion of service, whatever you have rendered, for that you are required to issue the tax invoice. Then one more special provision we have, 31 subsection 7, which is talking about goods sent out on sale or return basis. Goods is sent out on sale or return basis. You are sending the goods, but you are sending it on approval basis. Let us say, for example, you are giving certain time limit to your recipient, where within that time limit either he can accept the goods or he can reject the goods. So in that cases, what is the time limit for issuance of invoice? They say that in case of goods being sent on sale or return or approval basis, the department will give you maximum 6 months of time. So from the date of removal, maximum 6 months of time will be given to you. If within 6 months supply happens, if within 6 months, if the recipient has accepted and the supply has taken place, on or before that supply, you have to issue the invoice. On or before when the supply has taken place, you have to issue the invoice. Sir, you have removed the goods, 6 months is also over, but still no supply, the recipient has not accepted it. Then what will happen is, on expiry of that 6 months, it will be deemed as if it has been supplied and tax invoice is required to be issued. It will be deemed as if it has been supplied and tax invoice is required to be issued. So this is what 31 subsection 7 says. So if you see it here, where goods are being sent on approval for sale or return, in case if you are sending the goods on sale or return basis, where goods are removed before the supply takes place, then the invoice shall be issued earlier of the following dates. 2 dates they are saying, earlier of that date you are required to issue the tax invoice. What are they? Before or at the time of supply. In case within the 6 months, if the supply has taken place, if the recipient has accepted and supply has taken place, on or before that supply, you will give the invoice. But in case 6 months is over from the date of removal, then the department will not wait. It will be deemed as if it has been supplied and you are required to issue the invoice. And here one more thing I would like to say it here. See, initially when you are sending the goods on sale or return basis, initially when you are removing the goods on sale or return basis, at that point of time, has a supply taken place? No, supply has not taken place. Today I am sending the goods. I am a manufacturer. I am removing the goods from my factory, where I am sending it to one of the dealer. But here supply is not happening. Why? Because I am sending the goods on sale or return basis. Now whenever movement of the goods is happening, it should be supported by some accompanying document. No. Whenever movement of the goods is happening, it should be accompanied by some document. Sir, I am removing the goods. I am causing the movement of the goods from my factory to a recipient, but I am not making sale, sir. I am sending the goods on sale or return basis, sir. But that movement should be accompanied by a document. No, sir. Can I give tax invoice here? No, I can't give tax invoice. Why? Because supply has not taken place. Tax invoice can be given only when supply has taken place. Then what will be the accompanying document for that movement of the goods, sir? There will be something called delivery challan. There will be something called delivery challan. So when I am causing the movement of the goods for any reason other than supply, then that movement of the goods shall be accompanied by a document called delivery challan. Why? Because I will not be able to issue the tax invoice there. Clear? Right. So these are all the various time limits within which you are required to issue the tax invoice. And few more things what I would like to cover here is, Few more things what I would like to cover here is 31 subsection 3 will be there. There are some special circumstances where different kinds of documents will be issued. There are some special circumstances where different kinds of documents will be issued. Apart from tax invoice, there are separate documents which will be issued in some special cases. What are they also? I will tell you. So there are some special cases which are covered under 31 subsection 3. Which are covered under 31 subsection 3. Various clauses are there under 31 subsection 3. Each clause will be talking about a special circumstance and what document will be issued. First, coming to 31 subsection 3 clause A, which is revise a tax invoice. This point I have already clarified when we are looking at the registration chapter. Let us say you become liable for registration on certain date. If you are making an application within 30 days for application for registration, thereafter your application will be verified and registration certificate will be granted. Even though you are getting that registration certificate at a later point of time, your registration will be effective retrospectively. If you become liable for registration within 30 days of becoming liable for registration, if you are submitting an application for registration, thereafter if you are getting the registration certificate, even though you are getting that registration certificate at a later point of time, it will be deemed to be effective from the date you become liable. That means you will be deemed to be a registered person from the date you become liable for registration only. Then whatever supplies you have effected from the date you become liable for registration till the time you got the registration certificate, for that you can issue revised tax invoices. For that you can issue revised tax invoices. It is an optional facility, not mandatory. It is an optional facility. So that is what 31 subsection 3 clause says. And one more thing what they say here is there is a maximum time limit. If at all you want to issue the revised tax invoice, what is the maximum time limit within which you can issue the revised tax invoice? Within 1 month. Within 1 month from which date, sir? Within 1 month from the date of issuance of registration certificate. So you will get the registration certificate now within 1 month from the date of issuance of the registration certificate. If at all you want to give any revised tax invoices, you can give. So revised tax invoice is an optional facility, not a mandatory facility. Clear? Right. Next one. So thereafter, this second point I will tell you. So they say that you will be doing small transactions. Sometimes some small registered persons will be there who will do very small monetary amount of transactions. For that also, if they start giving invoices and all, it will be a very compliance burden. So that's why what the department has told us, in some cases you will not be required to issue the tax invoice. Sir, what are the circumstances I will not be required to issue tax invoice? Very simple. Value of the goods is less than 200. Less than, not less than or equal to. It is less than. So value of the goods or services or both supplied should be less than 200. If it is equal to 200 also, you are required to give the tax invoice. Value of supplied goods or services or both should be less than 200. Recipient must be unregistered person and the recipient does not require such invoice. And the recipient wrote specifically, sir, I don't want the invoice. So 3 conditions: value should be less than 200, recipient must be an unregistered person, and the recipient doesn't specifically require such invoice. In that circumstances, you need not issue the tax invoice. But all this small amount of transactions, you have to accumulate it by the end of the day, and you have to generate one consolidated tax invoice. You have to generate by the end of the day, accumulating all that small values. Then we have something called bill of supply given under 31 subsection 3 clause C. Sir, what is this bill of supply, sir? In case if you are a registered person, but if you are making exempt supplies, you are a registered person, you have taken registration under GST Act, but you are making an exempt supply. If you are making exempt supply, you can't collect GST. So then you can't give tax invoice. Then what you will do, sir? When you are making exempt supplies, you can give a bill of supply. Number 2, sir, I am a registered person, but I am a composition dealer. I am a registered person, but I am a composition dealer. Sir, I also can't give the tax invoice. No, sir. Why? Because tax invoice will be given only when the tax is collected. I am a composition dealer, sir. I am not eligible to collect the tax only. Then what I should do? But I am making supply. I need some documentary proof. What you can do? You can give a document called bill of supply. What you can do? Bill of supply you can give. Next, thereafter. Invoice come bill of supply. So this is one more simple point. If your recipient is an unregistered person, if you are a registered person, if your recipient is an unregistered person, if you are a registered, so if you are a recipient, if you are a registered person, but if your recipient is an unregistered person, to that unregistered person, you are making a taxable supply also, you are making an exempt supply also. If your recipient is an unregistered person, to that unregistered person, if you are making in a single supply, you are making taxable supply also, you are making an exempt supply also. You are not required to give 2 separate documents called tax invoice and bill of supply. You can give one single document called invoice come bill of supply. But this can be given only when your recipient is an unregistered person. That is what rule number 46A says. Then one more thing here, 31 subsection 3 clause D, 31 subsection 3 clause E. I will try to wind up in one simple go. Let us say you are collecting an advance. You are collecting an advance. You agreed to make a supply. The supply did not happen it, but you are collecting an advance. So whenever you are collecting an advance, you have to collect that advance along with the GST. For that, you are required to give, whenever you are collecting an advance, you have to give a document called receipt voucher. Whenever you have collected an advance as a supplier, if you collected the advance well in advance of supply, you are required to issue a document called receipt voucher. Now, whenever you have collected advance, after that 2 things can happen. Again, as that advance, whatever you have received, you might make a supply. against the advance whatever you have collected, you will make a supply. If you make a supply, you will give tax invoice. In case if you have collected advance, in some circumstances what will happen is you collected advance but the supply did not take place. Supply was not affected. You collected advance but because of some reason supply did not happen. In that case what you will do, that advance whatever you have collected, that you will give it as refund. Whatever advance you have collected, that you will give it as refund. So in case if you are giving a refund, you collected advance, you gave the receipt voucher, thereafter supply did not happen, you are refunding it back, then you will give a document called refund voucher. Which document you will give? You will give a document called refund voucher. So when you are collecting the advance, receipt voucher, if against that if the supply has taken place, tax invoice. In case if you are refunding it, then you will give something called a refund voucher you are going to give. So that is what 31 subsection 3 clause D, 31 subsection 3 clause E. 31 subsection 3 clause F I have already covered, self-invoicing. 31 subsection 3 clause F I have already covered it, which is self-invoicing. Sir, what is self-invoicing? In case if you are a recipient, in the ITC chapter I have covered this. In the revision only I have covered, not in the regular class. In the revision only, in this marathon series only I have covered in the input tax credit chapter. Self-invoicing, 31 subsection 3 clause F. What is that? If you are a recipient receiving the supplies under reverse charge mechanism, you will be liable to pay the amount of GST. If the supplier is registered, if the supplier from whom you are receiving that supplies which are liable under reverse charge mechanism, in case if your supplier is registered person, he will only give you tax invoice. In case if the supplier is unregistered person, then you have to do self-invoicing. As a recipient, you yourself have to do self-invoicing under 31 subsection 3 clause F. So that is what self-invoicing. Sir, what is the time limit for doing self-invoicing? Within 30 days. Within 30 days of receiving the supply, you are required to do the self-invoicing. So there is one more thing, 31 subsection 3 clause G. See, this 31 subsection 3 clause G is also from the perspective of a recipient who is liable to pay GST under RCM. Let us say there is one supplier, he made the supply to you, or he made the supply to a recipient under reverse charge mechanism. Okay, so now this recipient is required to liable to pay the amount of GST to the government. Now, whenever he has made the payment to the supplier, he will issue a document called payment voucher. He has to issue a document called payment voucher. So payment voucher is a document given at the time of making payment to the supplier. So this payment voucher will be given whether supplier is registered or unregistered. In all the circumstances, payment voucher will be given. But self-invoicing will be given only when the supplier is unregistered person. Only when the supplier is unregistered, then only you will give self-invoicing. But payment voucher you have to give it for every kind of supplier. Whether he is registered, unregistered, doesn't matter. For all the circumstances, you are required to give a document called payment voucher. So this is what 31 subsection 3 clause G. So these are all the special documents. That's all. I don't want to go further. Now one more thing, e-invoicing. So one concept called e-invoicing will be there. So that some people are required to generate e-invoicing. They have to go to the invoice registration portal. From there they will be required to generate e-invoice. So let us have a quick recap for whom it will become applicable. Right. So for whom it will become applicable, sir? E-invoicing will become applicable to all such registered persons who are having an aggregate turnover in any preceding financial year, not in the just immediate preceding financial year. Those registered persons who are having an aggregate turnover in any preceding financial year, starting from the year 2017-18 onwards. That is from the time the GST Act came into picture, starting from the commencement of the GST Act, that is from the financial year 2017-18. In case if their aggregate turnover in any preceding financial year has exceeded 5 crores, then they must issue e-invoices. Sir, what is this e-invoice? First, you will generate an invoice from your ERP. Then you will go to the invoice registration portal. There are some invoice registration portals. So these are all the invoice registration portals. You could visit any of this website and you have to enter. There will be one form, GST INV01 form will be there. That form you have to enter depending on the invoice, whatever you have generated. Then the system will generate. Then this portal will generate something called an e-invoice with a unique invoice reference number and a QR code containing that invoice related details. IRN embedded QR code also will be there. So that is what you call it as e-invoice. Okay, so that e-invoice is required to be generated, and this e-invoice is required to be generated only for B2B supplies. This e-invoice is required to be generated only for what? B2B supplies. For B2B supplies only e-invoice will be generated. Okay, next. So it is required only for B2B invoices. Now thereafter, a few things which you have to remember. So this table is important if at all they are testing in MCQs. So notified persons, if their aggregate turnover is greater than 5 crores in any preceding financial year, starting from 2017-18 onwards, only for B2B supplies, along with exports also. Exports. Even for exports also are treated equal to B2B supplies. So for all your B2B supplies, including exports, e-invoice will become applicable. Sir, if I am making B2C supplies, sir, then e-invoice is not applicable. Sir, notified persons issuing invoices for supplies where tax is payable under RCM, sir, applicable. If you are a supplier, if you are making such a supply where your recipient is liable to pay GST under RCM. But still, if you are such a supplier, you are a registered person, if your aggregate turnover has exceeded 5 crore rupees in any preceding financial year starting from 2017-18, still this supplier is also required to generate the invoice, even though supply is covered under RCM. And suppliers are required to pay GST. Supplies received by notified person from unregistered person under 9 subsection 4 or import of services. Once again, RCM only. So these are also RCM supplies. Even in respect of those supplies where recipient is liable to pay the GST under RCM, then also supplier is required to issue the e-invoice. Sir, what about import of the goods? Not required. In case of import of the goods, e-invoicing will not become applicable. Even for import of services also, e-invoice will not become applicable. And for some people, e-invoicing has been exempted even though their aggregate turnover has exceeded 5 crores in any preceding financial year starting from year 2017-18, but still some people have been exempted from issuing e-invoicing. Sir, who are that people who have been exempted from issuing e-invoice? SEZ units, very important. Only SEZ units, not SEZ developer. Only SEZ units. Exemption has been given only for SEZ unit, not for SEZ developer. In case if SEZ developer is making a supply, if their aggregate turnover has exceeded 5 crore rupees, will they issue invoice? Yes. Exemption is there only for SEZ units. Insurer, banking company, financial institution including NBFC. Then GTA supplying services in relation to transportation of goods, GTA service providers, supplier of passenger transportation services, person supplying services by way of admission to exhibition of cinematographic films in multiplex screens, basically multiplex theaters. They are also not required to give e-invoicing or a government department and a local authority. So these are the people, even though their aggregate turnover has exceeded 5 crore rupees in any of the preceding financial year starting from 2017-18, still they are not required to generate e-invoicing. Understood? Then, yeah, that's it. So this is what regarding important points from e-invoicing. Then we have dynamic QR code. So there is one more concept called dynamic QR code, nothing but payment related QR code. So the department GST Act has told that they have notified certain suppliers. Those are very big suppliers. If those suppliers, whenever they are making B2C supplies, they have to make the facility of dynamic QR code available. Sir, what is dynamic QR code? Sometimes you go to stores, you scan the QR code for making payment. So once you scan the QR code, payment also automatically will come. They will show you some payment related QR code on some device. No, they will have some electronic device. In that they will show you QR code. If you scan the QR code, you need not even enter the amount also. See, there will be two kinds of dynamic QR codes here. Today, if you go to the shopkeeper, on their wall or at their shop, they will keep one QR code attached. You have to scan that QR code. Amount you have to enter manually. Then only you have to make the payment. I'm not talking about that QR code. Sometimes if you go to DMart and all, if you are making a purchase there, if you want to make the payment through UPI, then they will show you one QR code on a device. They will have one credit card kind of device, credit card swiping device like that will be there. They will show you that device. If you on the device, they will show you QR code. If you scan the QR code, amount also will get captured automatically. You are not permitted to enter the amount. If you scan the QR code, amount will automatically come. Just you have to make the payment. That is what we call it as dynamic QR code. Sir, who is required to issue that dynamic QR code, sir? All B2C invoices. See, e-invoices is required for B2B. Dynamic QR code is required only for B2C. But who is required to comply with the dynamic QR code requirements, sir? Those registered persons whose aggregate turnover in any preceding financial year from 2017-18 onwards exceeds 500 crores will have a dynamic QR code. So what they are saying, these are not for small people, very big people starting from the financial year 2017-18. If in any preceding financial year, the aggregate turnover has exceeded 500 crores. How much? 500 crores. Your turnover should, if your aggregate turnover starting from 2017-18 has exceeded more than 500 crores, then you will be liable to comply with the dynamic QR code requirements, where you are, that too for B2C supplies, not for B2B supplies, only for B2C supplies, you will be required to show that dynamic QR code, right? Yeah, that much you have to remember. So then even some people, even though their aggregate turnover has exceeded that 500 crores, still dynamic QR code requirements will not become applicable for certain kind of suppliers. Who are that lucky fellows who have been exempted from dynamic QR code requirements is, once again, the list will remain more or less common. Insurer, banking company, financial institution including NBFC, GTA service provider, passenger transportation services, multiplex theaters. So this 4 is common. These 4 are common. Insurer, banking company, financial institution, GTA, supplier of passenger transportation services, multiplex theaters. These 4 are common. For e-invoicing also, dynamic QR code also. Now one more thing is getting added to the list, which is OIDR services. Even OIDR service provider is also exempted from having the dynamic QR code requirements. Understood? Clear? Right. That's all here. This is what the things which I wanted to cover from the tax invoice chapter. So why I have specifically covered this tax invoice chapters, as I have told, not a direct question. These are due dates of issuing the invoices, what documents will be issued, when e-invoicing. So all these are very important. Why? Because they ask a question from here. Not direct question. Once again, linkages will be there. So linking, there will be one or two questions where connection will be there with these points, whatever we have revised now. So that's why I have covered it. So now next what we will try to do is, we'll try to cover two concepts now. We will try to cover two concepts now. One is TCS, other one is TDS. TDS, TCS, like the two concepts are there. Those two concepts we'll try to cover now. Okay, once again, important concepts. Let us try to understand them. It's payment of taxes. Just give me 1 minute. So first we'll try to complete the TDS part. Thereafter we'll try to do the TCS part. Chapter number payment of taxes, 11th chapter. Okay. Fine. Got it. Right. So we'll try to do this. Section 51 of the CGST Act, which is going to talk about TDS. So TDS related provisions we'll try to understand. Fine. So what is this TDS concept? So we are going to cover now section number 51. Right. So what is this TDS concept? Let us try to understand it. See, it is very much similar to the concept of TDS under Income Tax Act. Like in Income Tax Act, whatever TDS concept we have, it will be more or less similar. So in GST, we have two parties now. So one is what? Supplier. The person whoever is making that supply of the goods or services. Then there will be someone called recipient. There will be someone called recipient. The person whoever is receiving that goods or services, that person we call him as recipient. So there is a supplier who is making some supply of goods or services or both. And in return, recipient will be liable to pay some consideration. Recipient will be liable to pay some consideration. Now what the GST Act says is they have notified certain recipients. They have notified certain recipients. So if these recipients are receiving the supplies, recipients once again, so the central government has notified certain recipients. So if you are falling under that notified recipients, and in case if you are receiving some supplies, then what you will be liable to do is you will be liable to pay the consideration. No, when you are paying the consideration to the supplier, don't pay full consideration. When you are paying the consideration to the supplier, don't pay full consideration. Deduct a certain amount called TDS. Deduct certain amount called TDS. So you will be liable to collect TDS. How much, sir? At the rate of 2% you will be liable to collect. Let us say for example, supply of goods or services is happening. The amount of consideration is actually 10 lakh rupees. 10 lakh rupees. On that 1,80,000 rupees of GST, total invoice has been given for 11,80,000. So practically speaking, ignore the GST part now. Just look at the value. So you are liable to pay 10 lakh rupees of value. Excluding GST, you are liable to pay 10 lakh rupees of value to the supplier. But the GST Act says if you are such a recipient who is falling under notified recipient, we will notify certain recipients. If you are falling under that notified recipients, what you are required to do is from the value which you are liable to pay to the supplier, don't pay full amount, deduct to 2%. So now if I do that calculation, 10 lakhs is the total value. On the 2% if I calculate, the amount will come to 20,000. So this 20,000 you deducted, and balance 9,80,000 rupees only you pay to the supplier. From the value, GST amount anyhow you will pay fully. So from the value you deduct 20,000 rupees and pay only 9,80,000 rupees to the supplier. So now with this amount, whatever has been deducted, with this 2 lakh rupees, whatever with this 20,000 rupees, whatever has been deducted by the recipient, what he will do with that money, sir? What he will do with that money? Can he enjoy with that money? No. So whatever amount that has been deposited, whatever amount that has been deducted, that you deposit with the GST department. that you deposit with the GST department using the GSTIN number of the supplier. The supplier, we have GSTIN, no, quoting that GSTIN number. So you deposit that 20,000 rupees of GST with the GST department. Okay, the amount is this 20,000 rupees is now lying with the department. Now what will happen is, this supplier, since he has made outward supplies, he will be filing his GSTR1, no, he will be filing his GSTR1. So in this GSTR1, he will declare this outward supply. No, how much he will declare? Not 9,80,000. Total value he has to declare. Sir, he received 9,80,000 only. No, yes, but still you have to declare total value of outward supply as 10 lakh rupees. So now what will happen in your GSTR3B and all? This liability will come. So let us say in your GSTR3B again is this 1,80,000 rupees of liability will come. But the supplier is not a fool to pay 1,80,000. Why? Because his money has been already deducted. No. So whatever amount that has been deducted by the recipient and which has been deposited with the GST department, that this supplier can claim that amount in his electronic cash ledger. So where he can claim electronic cash ledger. So in the electronic cash ledger, this supplier can claim that amount. How much amount he can claim, sir? That 20,000 rupees, whatever TDS which has been deducted by the recipient and deposited with the GST department against the GSTN of the supplier, that you can claim where in your electronic credit ledger you will claim that money. And that 20,000 rupees, that you can use it for discharging that payment. So your money is only deducted, no, so that your money, whatever has been deducted from you, recipient has deposited with the GST department, that you can claim it as credit in your electronic cash ledger. Not credit, my dear students, you can claim it in your electronic cash ledger. That means if the amount is lying in the electronic cash ledger, either you can use it for discharging your liabilities, or even what you can do is you can withdraw also. Amount lying in the electronic credit ledger, you can't withdraw. That can't be refunded except in certain circumstances. But the amount lying in the electronic cash ledger can be freely withdrawn, without any restriction. So you can withdraw that money, or either you can use it for discharging that payment. So this is what the concept of entire TDS. So now we have to understand few things associated with it. Sir, you told recipient is a notified recipient. Sir, when TDS will become applicable? TDS will become applicable subject to some conditions. To become TDS for being applicable, there will be some conditions. Number one, the recipient should be a notified recipient. Not for every recipient TDS will become applicable. The recipient should be a notified recipient. Number two, value of supply under a contract should exceed certain amount. Value of supply under a contract should exceed certain amount. Sir, what is that amount? 2,50,000. Value of supply under a contract. So as a recipient under a contract, if you are receiving such a supplies for which the value of supply is more than 2,50,000, then only TDS will become applicable. So primarily, mainly two conditions. What are the two conditions? Number one, recipient should be a notified recipient. Number two, value of supply under a contract. That means under a contract, whatever value of supplies which he is receiving from such supplier should be more than 2,50,000. Then only TDS will become applicable. And if TDS is becoming applicable, TDS will be deducted at the rate of, in case if it is a intrastate supply, CGST 1%, SGST 1%. If it is intrastate supply, SGST or UTGST. In case if it is an interstate supply, then collectively IGST at the rate of 2% is required to be deducted. Okay, right. So now we have to get the clarity on, sir, who are that notified recipients? And one more thing here, throughout this, we are going to use one more terminology. This recipient will be called as deductor. Why? Because he is deducting TDS, no? So this recipient will be called as deductor. So just give me 1 minute. So this recipient will be called as deductor. Whereas this supplier against whom the TDS is getting deducted, that person will be called as deductee. Okay, so going forward through the rest of the chapter, we are going to use these terms. Deductor. Deductor means a recipient because he is deducting the TDS. Deductee means a supplier because from him the TDS is getting collected. Right. So first let us see who are that persons who are notified recipients who will be liable to collect the amount of TDS. So let us see. Not everybody, only these people. Who are they? So central government has mandated specified persons to deduct TDS. Who are they? Number one, central state government department or establishment. Or if I have to put it in other terms, department or establishment of central government or state government. Except Ministry of Defense. So when it comes to Ministry of Defense, only for a few departments of Ministry of Defense, TDS will become applicable. For rest of the departments, TDS will not become applicable. So generally, first specified person who is required to deduct TDS is department or establishment of central government or state government. Generally, it will become applicable for all departments or all establishment of central government or state government except the Ministry of Defense. So in the Ministry of Defense, only for a few departments, TDS will become applicable. For the remaining departments of Ministry of Defense, TDS will not become applicable. So that's what I say here. TDS is applicable to certain prescribed authorities of Ministry of Defense. Remaining departments of Ministry of Defense are exempt. Similarly, local authority, if the recipient is a local authority, or if they are a government agency, or any other notified persons or category of persons, So initially, department has notified only three people. Who are they? Central government, state department or establishment of central government or state government, local authority, government agency. They have reserved a power. We can notify any other persons also. Under 51 subsection 1 clause D, they have notified. They have reserved the power in future. If we want to bring extra people under this recipients category who are liable to collect TDS, we will notify. And actually, government has notified a few people under 51 subsection 1 clause D. Who are they? An authority or a body. So under clause D, these are the people who are notified. An authority or a board or any other body set up by an act or parliament or state legislature or established by any government, in which 51% or more equity or control is by government. So any authority, any board or any body which is established by an act of parliament or a state legislature, or which is directly established by any government with 51% or more equity must be there by government. Or a society which is established by central government, state government, local authority under Societies Registration Act. Or it could be a public sector undertaking and registered person receiving supplies of metal scrap from other registered person. So this was latest addition. So these three are all government. See, till now if you could see, starting from this and all this till here, it is government related entities. But recently they have added one more person to the list who is required to collect TDS, who is if the recipient, there is a supplier, there is a recipient. If this recipient is a registered person and the supply what he is receiving is metal scrap, from a supplier who is also a registered person. There is a recipient who is a registered person who is receiving the supplies of metal scrap from another registered person. Then this recipient is also required to collect the TDS. Then this person is required to collect the TDS. Understood? Clear and comfortable, everybody? So these are the notified recipients. So this list you have to remember. But however, they have given one relaxation. What relaxation they have given? If the supply is happening among these entities only, if the supply is happening between these entities only, between these notified persons, among them only if the supply is happening, then TDS will not become applicable. Sir, what do you mean by that? Let us say, for example, one PSU making supply to another PSU. That means supplier is also a specified person, recipient is also a specified person. No need to deduct TDS. Or one government department is making a supply to local authority. Among the specified persons only if the supply is happening. No need to deduct TDS. Except the last person. So which means what? Let us say, for example, if the PSU, let me put it this way, if the PSU is making supply to a local authority, both are specified persons only, both are specified deductors only. So in that case, TDS will not become applicable. On the other hand, let us say if the PSU is making a supply to another registered person, but he is receiving the supplies of metal scrap where this PSU is also registered person. See, both are specified recipients only, but still TDS will become applicable here. Able to understand? So if among these entities only, so we have seen the notified list, we have seen notified persons list, right? So what they are trying to say here is, if the supplier and recipient both are falling under till here, not the last one. So if the supplier and recipient among them only, that means one department is making supply to local authority, or they are making supply to government agency, or this authority is making supply to them, or they are making to PSU. So like that, among these entities only if the supply is happening, then the TDS is not required to be deducted. However, if this is registered person receiving supplies of metal scrap, then TDS will become applicable. Okay, right. And okay, so who are the notified persons we have seen? Now let us see limit. What is the limit? Sir, when TDS will be deducted? They say that suppliers whose total value of supply of only taxable, see here, if the total value of supply of only taxable goods or services, that too under a contract, if they exceed 2,50,000 exclusive of taxes and cesses as per the invoice, then only TDS will become applicable. So what they are saying, when TDS will become applicable, what is the prescribed threshold limit? So TDS will become applicable when the value of supply under a contract. And there are few points which you need to keep in mind. When you are calculating the value of supply, take only taxable supply. Don't consider exempt supply. Take only taxable supply. Not exempt supply. Value of taxable supply should be taken, not the exempt supplies. Sometimes in the invoice you will be able to find taxable value also, exempt supply also will be there, but you have to take only taxable value. Exempt supplies are there, those values you should not consider. And you have to check when you are considering this value of supply, consider the value exclusive of taxes. When you are checking this limit of 2,50,000 rupees, the 2,50,000 rupees I am referring to the value exclusive of taxes. Don't take the figure inclusive of taxes. Let us say, for example, value of supply is 2,40,000, applicable rate of GST is, let us say, 15,000 rupees. So 2,55,000. Is TDS required? Not required. Why? Because you are required to consider only value of the supply excluding the taxes only you are required to consider. And you should not look at individual transaction, you have to look at the contract. In a single contract, how much supply has been made. Let us say there will be one single contract, but under one single contract, let us say 4 invoices are given. In one invoice, 2.2 lakhs is the value. In another invoice, 1.5 lakhs is the value. In another invoice, 50,000 is only value. So will TDS become applicable? Yes. Individually, the amount could be less than 2,50,000, but total value of taxable supply under a contract, if it has exceeded 2,50,000. So if you see here, all the invoices are belonging to one contract where the value of supply under a contract has exceeded 2,50,000 rupees, TDS will become applicable. Understood? Clear? Next. And what is the rate of deduction? As I've already told you, if it is intrastate supply, CGST at the rate of 1%, SGST at the rate of 1%. If it is interstate supply, IGST collectively at the rate of 2%. However, and on what value? Sir, this 1%, 2% on what value you will calculate, sir? So will you calculate that 1% or 2% rate of deduction on which value? Value inclusive of taxes or exclusive of taxes? Value exclusive of taxes. That's why I told here, even in the examples also, value of supply is 10 lakh rupees, amount of GST is 1,80,000, total 11,80,000. But we calculated TDS only on 10 lakh rupees. So you have to calculate the TDS on that portion of the value excluding the taxes. Excluding the taxes, what is the value you have to find out? On that value, you have to calculate that 1% or 2%. Next, see, there is one more case. There is one more exception. This you have to remember. There is one more exception when TDS will not become applicable. So exception means all the conditions are getting fulfilled. That means recipient is a specified recipient, value of supply under a contract has exceeded 2,50,000, but still TDS will not become applicable in one case. In which case, sir? So they say that when the location of the supplier and the place of supply is in one state or union territory. When the location of the supplier and the place of supply, if both are falling within a same state or union territory, which is different from the state of registration of recipient. So if I will simply call it as location of recipient. So if the location of the supplier and the place of supply both are falling within same state or union territory, which is different from the state or registration or state of which are different from state or union territory of registration of recipient, then TDS will not become applicable. Even though the recipient is a specified recipient, even though the value of contract, value of supply under a contract, sorry, just 1 minute. So sorry for that. So it was connected to my mobile is connected to my laptop, so that's why it started making sound. Just 1 minute. Yeah, fine. So what I was saying is there was one exception. So what is that exception? In case if the location of the supplier and the place of supply both are falling within a single state or union territory, which is different from the state or union territory of registration of the recipient, then even though recipient is a specified recipient, even though value of the supply under a contract has exceeded 2,50,000, still TDS will not become applicable. Sir, what exactly they are trying to say it here, sir? I will give you one simple example. I'm not going to explain the background logic for you, but I will tell you one simple example why in this particular case TDS will not become applicable. Let us say location of the supplier is in Tamil Nadu. Place of supply is also Tamil Nadu. Whereas location of recipient is Karnataka. Here TDS will not become applicable. Why? Because location of the supplier and the place of supply both are falling within a same state or union territory, which is different from the state or union territory of registration of the recipient. So here location of the supplier, place of supply both are falling within Tamil Nadu, but the state of registration of the recipient is Karnataka, which is different from the both. In that case, TDS will not become applicable. I will tell you one simple logic why. See, let us say, let us take this example only. There is a supplier where he is located Tamil Nadu. So where is recipient located? Karnataka. Recipient is located in Karnataka. But I told what? Place of supply is also falling in Tamil Nadu. Let us say renting of immobile property, something like that. So place of supply is also falling in Tamil Nadu. So when the location of the supplier, place of supply, both are falling in same state, which is what supply? Intrastate supply. which is what supply? Intrastate supply. So on this intrastate supply, what will be applicable? CGST, SGST will be applicable. So let us say this recipient is a specified recipient. Value of the supply under a contract has also exceeded 2,50,000 rupees. Now he is required to deduct TDS. No. Which TDS he will deduct? Since it is an intrastate supply, he has to deduct CGST at the rate of 1%. Let us say value of the supply is 10 lakh rupees. So 10 lakhs into 1%, 10,000. SGST also 1% he has to calculate. Which SGST he will calculate? He has to calculate Karnataka. Since he is registered with the Karnataka state, Karnataka GST he will pay. He will deduct and pay. How much? 10,000. But here what will happen is, this supplier where he is registered, Tamil Nadu, no. How this transfer will happen? How he can take that credit in his electronic cash ledger? He is having CGST of Karnataka state. He is also having SGST of Karnataka state because he is registered with Karnataka state government. No. So now how he can claim it in his electronic cash ledger? Because he is registered with Tamil Nadu state government. No. So this state related transfers are quite difficult under GST. No. So that's why what they have told. In this case, the states will unnecessarily fight. We don't want headache. Central government told in this case, TDS concept itself will not become applicable. Why? Because different state governments are involved here. So it will unnecessarily create a huge mess. So they told in this case, we don't want TDS only. You state governments don't fight. We don't want TDS in this case at all. Clear? So this compulsorily you have to remember, when the location of the supplier and the place of supply both are falling within a same state or union territory, which is different from the state or union territory of registration of the recipient. You remember it, get this printed in your brain. Location of the supplier, place of supply, both are falling within a same state or union territory, which is different from the registration, which is different from the state or union territory of registration of which is different from state or union territory of registration of recipient, then TDS will not become applicable. Even the recipient is a specified recipient, even though the value of supply under a contract has exceeded 2,50,000 rupees. That's it. Fine. So here I have given one table also illustrating all the circumstances. Just have a quick look at it. You will get the clarity. Then what will happen? Sir, you are saying the deductor, after he has deducted the TDS, that amount is required to be deposited with the government. Sir, what is the time limit for that? Time limit is by 10th of the succeeding month. By 10th of the succeeding month. So let us say in the April month, the TDS has been deducted. It has to be forwarded to it has to be paid to the government by 10th of the succeeding month, by 10th of May, by filing one return, GSTR 7. So this deductor will file one GSTR 7. The due date for that is also same, 10th of the subsequent month. So along with filing of the GSTR 7, this amount will be deposited with the government by 10th of the succeeding month. And the supplier will be there, no? Supplier will be there, right? Against whom? Whose TDS has been deducted? So this person. So this person will file GSTR 7. Recipient will file GSTR 7. Now there will be a TDS certificate which will be made available to the supplier, GSTR 7A. In GSTR 7A, TDS certificate will be made available. Like in Income Tax Act, we have 26AS. No, if we have TDS getting deducted from our various sources of income, how much TDS has been deducted against us? We want to know. How do we know? They will make us available one 26AS statement. No. Similarly, even in the case of GST also, for the deductee, what is the amount of TDS deducted? The TDS certificate will be made available in GSTR 7A. Sir, what will be the contents? What will be the contents that you can refer to it once? Then in case if it is not remitted, interest will be payable, and whatever that TDS amount is there, that you can claim it in your electronic cash ledger. And this TDS deductor is required to obtain separate registration. If you remember the discussion under section number 24, the persons who are liable for compulsory registration, we have seen that there are some categories of the persons who are liable to get compulsorily registered. In that, one such person who is liable for compulsory registration is the person whoever is required to deduct TDS under section number 51. And the person who is required to deduct TDS under section number 51, the TDS registration is a separate registration. TDS deductors registration is a separate registration apart from usual registration. Even though you have a usual registration, but still in case if you are liable to deduct TDS, you have to take separate TDS deductor registration. You have to take it under section number 51. Clear? Right. So this is what regarding TDS concept. Now what we'll try to do is TCS will try to cover e-commerce operators. So when it comes to e-commerce operator, taxation things are little different. One thing we are already aware. Right. So when it comes to e-commerce transactions, the taxability is going to be quite different. The way the transactions are going to get taxed is a little different. So I will tell you one thing we already know. In case of e-commerce transaction, one special tax treatment we already know. So what is that one tax special treatment? What is that one special treatment of tax which we are already aware? 9 subsection 5. If you remember, there are certain services which are notified. So if you remember long ago in the charge of GST, I have told there are three mechanisms. There are three mechanisms by which the GST revenue will flow to the government. One is forward charge mechanism, where the supplier will collect the amount of GST from the recipient and pay to the government. Other one is reverse charge mechanism, where the recipient only will directly pay the amount of GST to the government. Third one is 9 subsection 5. In case if notified services, the government has notified services, 6 services they have notified. Do you remember? 6 services they have notified. Those 6 services, if those services are getting supplied through the e-commerce operator, if I have to make you recollect it, passenger transportation services by other than omnibus, passenger transportation services by omnibus other than body corporate, accommodation services, housekeeping, carpenting, these kind of services. Thereafter, what is one more thing? This recent one, local delivery services. So like that, all together some 6 services have been, food delivery services. So like that, 6 services have been notified. If these services are provided through the e-commerce operator, then neither the supplier nor the recipient will pay the amount of GST. E-commerce operator will collect the amount of GST from the recipient and pay to the government. That is one thing, one special taxation treatment. Now we have one more special case in case of e-commerce transactions. They say that if you are a supplier, let us take one Amazon. Let us take Amazon. Amazon is an e-commerce operator. So now if you are a supplier, you are enlisted on Amazon. You listed your products on Amazon. Let us say you are a dealer of what dealer? Let us say you are an electronics dealer. You are an electronics dealer and you have listed your products with Amazon. Now your products will be shown to the people, whoever is visiting the Amazon. So now there is one recipient. So you are a customer. So this customer wants to buy one laptop. Okay, so now he opened Amazon, he searched for the laptop model he wants, he placed an order. So in the Amazon, he placed an order, but Amazon is not supplying it. Amazon is not supplying it. So through that Amazon, one supplier will be supplying it. So you placed an order with the Amazon. So that order will be forwarded. So you place an order on the Amazon. Amazon will forward that order to the supplier. Now what supplier will do? Supplier will do the dispatch. Supplier will directly send that goods to you. They will dispatch that goods to you. So who is the supplier? That original supplier who is listing his products on the e-commerce operator. You are the recipient. Now what is the role of Amazon here? They are mediator, aggregator. They are just an aggregator. They are not a supplier. They are just an aggregator. So this supplier is making supplies through the Amazon. Now what actually happens is you will pay the consideration. Let us say 1 lakh worth of laptop you are buying. That 1 lakh worth will be received by the Amazon. Now what Amazon will do? Amazon will deduct their commission and all will be there. There are all other charges they will deduct. After deducting all other charges, they will remit the amount to the supplier. They will remit the amount to the supplier. But the settlement might happen monthly. So you are paying the consideration to the Amazon. Now Amazon will deduct their expenses, their commission, their charges they will deduct, and balance amount they will remit it to supplier. Now what section number 52 of the GST Act says is these e-commerce operator, when they're settling the amount to the supplier, after their charges and all, don't pay the full amount, deduct one more amount. Let us ignore here charges are not there. Here charges are not there. Let us say 1 lakh rupees is required to be paid. But they have told this e-commerce operator, you don't pay that full amount. You deduct TCS at the rate of 0.5%. How much? At the rate of 0.5%, you collect the TCS. So how much amount you will get it? So if you do that here, I think if I'm not wrong, 500 rupees will be collected and 99,500 rupees only will be remitted to the supplier. So like this, they have put a responsibility on the e-commerce operator to collect a TCS under section number 52 from the amount which is required to be settled to the suppliers. And what Amazon will do with this TCS amount, sir? Can they enjoy? No, sir. They are required to deposit. They are required to deposit it with the GST department against the GSTIN of the suppliers. Against the GSTIN of the suppliers. Now what the suppliers can do? They can claim that TCS amount in their electronic cash ledger. Where they can claim it, they can claim that amount of TCS deducted in their electronic cash ledger, not through their electronic credit ledger. You can claim that amount in your electronic cash ledger. I already told you what is the advantage of having that amount getting created in your electronic cash ledger. If the amount is created to electronic credit ledger, you can only use it for discharging your output tax liability. You can't claim it as refund unless in exceptional circumstances. But if the amount is getting created to your electronic cash ledger, either you can use it for discharging your liabilities. If you don't have any liabilities to discharge, even you can withdraw that money also. So that advantage will be there. So this supplier can claim that TCS amount in his electronic cash ledger. Clear? Able to understand here? Comfortable? Now, so This is what overall TCS concept here. Now one more point which I have to say it here, only those supplies which are made through e-commerce operator other than 9 subsection 5. Supplies which are made through e-commerce operators which are other than notified under 9 subsection 5, on that only TCS will be collected. This point also have to remember. For that 6 services which are notified under 9 subsection 5, if those services are getting supplied through the e-commerce operator, TCS will not be collected. TCS will be collected on those supplies which are supplied through the e-commerce operator, that too other than notified under 9 subsection 5. Those services should not be notified under 9 subsection 5. So apart from that 6 notified services, if any other services or goods also, on goods also TCS will become applicable. So services other than 9 subsection 5, or if any goods which are getting supplied through the e-commerce operator, then the e-commerce operator will be liable to collect the amount of TCS at the rate of 0.25, at the rate of 0.5%. Okay, so that's what they try to say it here. Okay, so at the rate of 0.5% on net value. Now, sir, how this 0.5% will be calculated? On what value 0.5% will be calculated? So let me show you that also. So what is the value on which this 0.5% will be calculated? So that 0.5% will be calculated on net value of the taxable supplies. What they say here? Where is it? See here. So this 0.5%, yeah, what is the value on which TCS is to be collected? TCS at the rate of 0.5% is collected on net value of taxable supplies. Sir, what do you mean by net value of taxable supplies? Total supplies made through that e-commerce operator in a month. So this individual supplier, whatever total supplies he has made through the e-commerce operator in a month, from that total outward supplies, they have to reduce the returns also. In e-commerce business, it is quite common today in Amazon, Flipkart and all, returns are quite common. So they will take total value of outward supplies minus returns, then you will get the net value. In that net value, you will be liable to pay the amount of, you will be liable to collect the amount of 0.5%. Okay, so that's what they say. TCS at the rate of 0.5% is collected on net value of taxable supplies, that is aggregate value of taxable supplies excluding services taxable under 9 subsection 5. This I have already told you. So while calculating that 0.5%, so supplies taxable under 9 subsection 5 will not be taken. Why? Because those supplies which are notified under 9 subsection 5 on the TCS will not become applicable. So aggregate value of taxable supplies excluding the services taxable under 9 subsection 5 made in a month by all registered person through an e-commerce operator minus value of supplies returned. So then on that value you have to calculate. Sir, let us say in a month my sales are 10 lakhs, but my returns are 12 lakhs, sir. Possible? In a sale through the e-commerce operator, the sales are 10 lakh rupees, but the returns are 12 lakh rupees. Possible? Can the returns be more than sales? Will it be possible? Yes, it is possible. Last month sales, this month you are having returns. Possible? No. Last month you made the sale. By last 2 days, let us say on 30th of the last month you made the sale. 7 days return policy we have. No. In the current month it will get returned. Yes, it could be possible. So if the sales are more, net value of taxable supplies for TCS is computed monthly. This one, where sales returns exceeds the sales, negative value cannot be declared and excess returns are ignored. Excess 2 lakh rupees of returns are there, sir. What will happen to that? Ignore. Sir, can I carry forward it to the next month and adjust it again as the taxable supplies of the next month? Can I carry forward this? 2 lakh rupees of returns are there. No. Net I have negative balance. Can I adjust it again as the next month balance to calculate that 0.5% of TCS? No. That month gone. Over. Ignore it. If you got negative value, if your returns are more than sales, ignore that negative value. No carry forward to the next month. It will not be carried forward to the next month. Ignore then and there. Okay, right. Next. And also TCS is not required on supplies where recipient is required to pay GST under reverse charge mechanism. Let us say if some service is getting supplied through e-commerce operator, but on that services RCM will become applicable, then also TCS provisions will not become applicable. And also TCS is not required on import of services also. In case if you are importing the goods or services, then also TCS will not become applicable. Okay. And one more point I will say where TCS will not become applicable. See, this point is also very important. See, TCS provisions under section number 52 will become applicable only when consideration is routed through e-commerce operator. I think I lost power. The light might be little dim. I think it's not be troubling. It will not be troubling, I guess. So I lost access to the power. So the light is only I'm running on studio light. I think it is manageable. No issue should be there. Fine. So yeah, what I was saying is TCS under section number 52 will become applicable only when the e-commerce operator has collected the consideration. When the consideration is routed through the e-commerce operator, then only TCS will become applicable. In case if the consideration is not routed through e-commerce operator, in case if the consideration is not routed through the e-commerce operator, if the consideration is directly paid by the recipient to the supplier, then there is no concept of TCS. Then there is no TCS. Yes, there are some e-commerce platforms available today which will only act as listers. Like for example, we used to have one. We have OLX. OLX, if you remember, if you want to sell your goods, that you can list it on your OLX. OLX is only listing platform. OLX will collect only buyer and seller. In case if they want to make a transaction, the buyer will directly pay the amount to the seller. It will not be routed through the OLX. So in that cases, TCS will not become applicable. TCS will be very simple logic here. If the e-commerce operator has to collect that amount, first they should have collected the consideration. No, if they did not collect the consideration only, from where they will deduct that 0.5%? Not possible. So that's why TCS will become applicable only when the consideration to the supplier is routed through e-commerce operator. In case if the consideration is not routed through the e-commerce operator, consideration has flown directly to the supplier from the recipient, then there is no question of this TCS getting collected. So this is also one point you have to remember. Now, sir, few more points I will try to say it here. Let us say if there are unregistered persons, sir, if there is an unregistered person who is making the supply of the goods or services through e-commerce operator. If there are unregistered persons who are making supply of goods or services through the e-commerce operator, will it be possible? Yes, it is possible. Yes, it is possible. Even though you are an unregistered person, still you can make the supply of the goods or services through the e-commerce operator, sir. In that case also, will e-commerce operator collect a TCS? No. No. In that case, e-commerce operator will not collect the amount of TCS. This is also one more exception. So let me show that to you. Where is it? Okay, it is there somewhere here in the material. You will be able to find it, but I'm telling you summary here. See where yeah, so somewhere you will be able to find it here. So you can read it. I'm telling you summaries and all. So in one point you will be able to find it. In case if unregistered persons are making supply of goods through e-commerce operator, then also e-commerce operator cannot collect TCS. Then also they will not collect the TCS, but they have to follow one special procedure. There will be something called special procedure. A special procedure will be there. See this. See here. Unregistered persons may supply goods through e-commerce operators subject to specified conditions, provided they declare their PAN and principal place of business to verify from PAN that their turnover is below the threshold limit. And C. Details of the supplies made by unregistered persons through PAN shall be reported by the e-commerce operator in GSTR 8. All this you keep it aside. See here. No tax or TCS being payable or collectible until applicable threshold limit is crossed. So even unregistered persons can also make supply of the goods or services through the e-commerce operator, but TCS will not be collected unless and until they are liable for registration. Sir, can a composition dealer make supply of goods or services through e-commerce operator? Can a composition dealer make supply of goods or services through e-commerce operator? Yes, but not services. Services he can't do. If you remember, once again, composition chapter I have done the revision. No, just go back and revisit that composition chapter, composition levy revision. In that I told one of the restriction, if you want to opt for composition levy, one of the restriction is you can't make the supply of services through the e-commerce operator. Yes, they say it. In case if you want to avail composition levy, you can't. One of the restriction is you can't make the supply of services through the e-commerce operator. So in case if you are making services through e-commerce operator who is required to collect TCS under section number 52, that also they say. So in case if you want to make the supply of services through the e-commerce operator who is required to collect TCS under section number 52, then you can't avail composition levy. Okay, so that means if you combine both the provisions, if you are staying under composition levy, you can only make supply of the goods through the e-commerce operator who is required to collect TCS under section number 52. Yes, you can do. So if you are a composition dealer, yes, you can make the supply of the goods through the e-commerce operator required to collect TCS under section number 52. In that case, will TCS be collected, sir? Yes. If the supplier is a registered person, and even if he is a composition dealer, if he is making supply through the e-commerce operator who is required to collect TCS under section number 52, still TCS will be collected. Okay, still TCS will be collected. So these are all the various circumstances where there will be TCS, where there will not be no TCS and all. So all that we have covered. Then some procedural formalities. If you are a e-commerce operator, you will be required to file one return. GSTR 8 you will be required to file. So, and what is the due date? Same like 10th. It will be right. See here. So you will be required to file one return. Which return you are required to file? GSTR 8 you are required to file, which will be a monthly electronic statement. There are various details which you are required to submit. In your GSTR 8, there are multiple details which you are required to submit. There will be so many tables in that GSTR 8. All the tables you have to fill it. Sir, what is the due date? 10th day of the month succeeding the calendar month. Same like TDS only by 10th of the succeeding month, and also the TCS amount is also required to be deposited on the same day, and that TCS amount will be made available to the recipient, made available to that supplier. He can claim it through his electronic cash ledger. That's all usual things are same. This is one important, this is one latest amendment here. F point, sir, what is it? Whether nil NTR whether nil GSTR 8 needs to be filed in case if there is no TCS liability in a tax period. See, generally in GST returns, we have one concept. You are required to file returns. Even if you did not make any supplies, even if you did not have any transactions to report, still you will be liable to file something called nil return. No, if you take GSTR 1. So generally you have to declare all your statement of outward supplies, credit notes and all in your GSTR 1. Even though if you don't have any outward supply, still you will be liable to file nil GSTR 1. Same thing with GSTR 3B. If you are a registered person, you are required to file GSTR 3B. Even if you don't have any outward supply, any liability to discharge, no ITC to claim, still you are required to file nil GSTR 3B. So like that also is the e-commerce operator. If he is having any TCS to be collected, he will file GSTR 8. If there is nothing required to be collected, still is he required to file nil GSTR 8? No, this has been relaxed. See here. Filing of GSTR 8 is required only when an e-commerce operator has collected TCS, needs to amend earlier details, or has populated entries in table 4. And it is not mandatory, very important. It is not mandatory for a tax period with no TCS liability, no auto-populated details or rejected entries. That means in one particular month, you are such an e-commerce operator, you don't have any TCS to be collected. You are not required to collect any TCS amount. Number 2, no table. You don't have any entry required to be made in your any of these tables. In GSTR 8, many details you are required to fill. You don't have anything to be reported in any of the table. Not that you are not required to collect any TCS. You are not having anything to report in any of these tables. Then you need not file the GSTR 8 only. Even nil also you are not required to file. This is one special case which is applicable only for GSTR 8. In all other returns, if you are liable to file a return, even if you don't have anything to report, still you are required to file nil. Even for GSTR 7 also nil is applicable. But when it comes to GSTR 8, if you don't have anything to report in your GSTR 8, even nil you need not file. Even nil return also you are not required to file. Clear? So this is one special case which is applicable for GSTR 8. So that's all, guys. These are important points from e-commerce operator point of view. So we have covered 2 sections. 51 we have covered, TDS 51 TDS we have covered, 52 TCS we have covered. Along with that, in the tax invoice, some important provisions also we have covered. Right. So now, one more thing I would like to say here. See, payment of taxes. Whatever TDS concept we have covered, no, that TDS concept has actually been a part of payment of taxes only. That TDS concept is actually the part of payment of taxes only. Now in the payment of taxes, I want to explain one important point, not entire chapter. See, this payment of taxes, so many things you will be able to find, like what is electronic credit ledger, what is electronic cash ledger, what is electronic liability ledger, how you have to deposit the money, how you have to deposit the money and all, how you can create the challenge. So like that, many details you will be able to find it in this chapter. All that is not important from the examination perspective. Only one thing which will be tested at the CA final level is, how to calculate the interest. How to calculate the interest. This is very important. Calculation of interest is very important. So this I will give you brief how to calculate the interest and all. This will try to understand it. Fine. See, interest liability will arise in 2 circumstances. interest liability. You become liable to pay the interest in two circumstances. What are they? Number one, you are making the delayed payment of tax. You are making delayed payment of tax. You are required to make some payment of tax, but you are making a delayed payment. Another case where you will be liable to make the payment of interest is ITC wrongly availed and utilized. ITC wrongly availed and utilized. First case, interest is very easy. In second case, there are some complications which you have to keep in mind. Listen carefully. Interest is very important at the final level, often tested. Listen carefully. So interest, the liability to pay interest can happen in two circumstances. One is you are required to make the payment of interest, but you are not making the payment of it. But you are required to make the payment of tax, but you are not making the payment of tax. Number two, you are claiming the ITC wrongly and also utilizing it. Then also interest will become applicable. First, we will talk about delayed payment of tax. In case if you are making delayed payment of tax, how much interest you will be liable to pay? Listen carefully. Delayed payment of tax. So here they say two cases. Let us say, for example, you are filing the return only late. You are filing return itself late. Let us say, this I will try to give you examples. Here we'll spend some time. April 2025 year. For this month, you have made some supplies. So you have a output tax liability amounting to 10 lakh rupees. You have output tax liability amounting to 10 lakh rupees. You also have input tax credit. The balance in the electronic credit ledger, you have 8 lakh rupees of input tax credit also. Now what you should do, you have to file the return. What is the due date? 20th of May 2025. There could be multiple things which could be happening. Let us say you are filing your return. And you are declaring that outward tax liability is 10 lakh rupees, 8 lakh rupees is input tax credit, balance 2 lakh rupees, cash payment also you are doing. You have made the payment in cash also. Will there be any interest? No interest. You are a good fellow. You are a good person. So you have filed your return and you have declared your output tax liability. You have paid your taxes also. You claim that this much ITC I have, and balance amount you have paid it in cash. So will there be any interest here? No. You are a good person. Let us say on 20th of May 2025, you did not file the return. You did not file the return only. You filed your return on, let us say, on 10th of June. On 10th of June 2025, you filed your return and you made the payment. So you filed the return only late, no? So now you will be liable to pay interest. So now on 10th of June 2025, you are saying 10 lakh rupees is my output tax liability, 8 lakh rupees is my ITC, then 2 lakh rupees you are paying through electronic cash ledger. Now you are liable to pay interest, but interest on what amount? Are you liable to pay the interest on your gross liability, or are you liable to pay interest only on the amount which you are discharging using your electronic cash ledger? So in this case, are you liable to pay interest on gross liability, or will you be liable to pay interest only on the amount which is discharged using the electronic cash ledger? You will be liable to pay interest only on amount discharged through your electronic cash ledger. Okay, so you will be liable to pay interest only on this 2 lakh rupees. So 2 lakh rupees into 18% from the due date of making payment. So ignore 20. So starting from 21, you are supposed to pay this amount on 20, but you are paying it on 10th. So how many days? So take out 20, 21 to 31, 10 days. 21 to 31. So you have 11 days. Thereafter in this month, June, 10 days. So total for 21 days, you will be liable to calculate the interest and pay that amount. You have to calculate interest for that 21 days and you have to pay that amount. Clear? Next. Now you are smart. You are becoming over smart. Listen, third case, what will happen? So you are actually liable to file the return on 20th of May 2025. On this date, you are required to file your return. But you are smart. So what you are doing is you are filing your return. But in your return, you are declaring your outward supplies as your output tax liability. You are under reporting. You are filing your return, but you don't have this 2 lakh rupees of cash to make the payment. So what you are doing, you are filing the return, 8 lakh rupees worth of output tax liability only you are declaring, and 8 lakh rupees you are using electronic credit ledger. Nothing you are paying it now. So then what you did, so return has been filed. Next month you will file return. You are behaving over smart here. So what you are doing is by 20th of May, you are filing your return. But you are declaring under liability because you don't have cash to pay. So what you are doing, you are filing your return and you are declaring your outward tax liability is only 8 lakh rupees, and 8 lakh rupees you are using your electronic credit ledger. But what you are doing is next month return will be there, no? For May month, you will file the return in June, no? So on 20th of June, what you are doing is for this June month liability you are declaring. June month's liability and all you are declaring, But what you are doing is whatever liability. So what has actually happened here is, you know that in the May month, in May 25, on 20th of May, when you are filing return, you know that next month you will get the credit. Next month you will get the credit. So that's why you are declaring under liability here. Let us say, for example, for May month liability is 5 lakh rupees. You have enough of input tax credit. You discharge that May month liability. But in this return, what you are doing is, now you are voluntarily coming forward and saying, boss, in April month, I did not declare 2 lakhs worth of output tax liability. But now I have, in this month, I have output, in this month, I have credit that I will use it to discharge my April month liability. So you are behaving over smart here. So you are saying, in May month, you are filing your return. For May month, you are filing your return. So May month liability, actually you have disclosed. But now you are saying, sir, in April month, my actual tax liability was 10. But I underreported it. Now I am declaring my that 2 lakh rupees of extra liability also related to April month. The balance, I have enough of input tax credit that I will use it, that I will adjust it for my payment, so that I need not pay any interest, because I have discharged all my liability using electronic credit ledger only. I did not make use of any of the electronic cash ledger. So he tried to become over smart. Now what department said, don't do over smart, don't be over smart here. So in case if you have already filed your return, but in that return you did not declare your liability and make the payment of tax, later you are declaring it, in that case, on the total liability you will be liable to pay the amount of interest. On the entire 2 lakh rupees you will be liable to pay interest, even though you are discharging using electronic credit ledger. So on the entire 2 lakh rupees you will be liable to pay interest for 18% for 1 month. So actual due date is 20th, but the due date is, but you are paying it on 20th of June 2025. So here also total for 31 days you will be liable to pay interest on total 2 lakh rupees. So don't behave over smart here. Understood? Clear? So what I wanted to say here is, in case return, it's simply remember like this: in case return itself is filed late, in case return itself is filed late, return only you are filing it late, no worries. You are liable to pay interest on only that component of that tax which you are discharging it using your electronic cash ledger. But in all other cases, that means you have filed the return, but later you are making that delayed payment. In that case, you will be liable to pay the interest on the gross liability, whatever you are liable to pay, not just on the amount which you are discharging it through electronic cash ledger. Will you be able to remember this? Will you be able to remember this? Now, so one more point they have told. See here also, if you take the second case, if you take this second case, specifically the second case, you come here, sir, I did not file the return only. I am filing it on 10th of June 2025. 10 lakh rupees is my output tax liability. 8 lakh rupees I have it in my electronic credit ledger. 2 lakhs I am paying it now using electronic cash ledger. I am discharging my electronic cash ledger now. Sir, but in my electronic cash ledger, there is already balance. In my electronic cash ledger, there is a balance lying in my electronic cash ledger amounting to 1 lakh rupees. Amount is lying in my electronic cash ledger from the due date of payment till the date of actual adjustment. So starting from 20th only, starting from 20th of May, from 20th of May 2025 itself, in my electronic cash ledger already 1 lakh balance is there. And that balance I have maintained it till the date of this actual adjustment. When? Till 10th of June 2025, 1 lakh rupees is still lying in my electronic cash ledger, sir. I did not use it. I did not use it. So 1 lakh rupees of balance is there in my electronic cash ledger, even though I am not using it, even though I did not discharge my liability. On the due date, I already have 1 lakh rupees of balance in my electronic cash ledger, and that balance I have maintained it till the date of that actual adjustment. So now what they have told is they are giving one more relaxation. How much amount you are now discharging through electronic cash ledger? 2 lakh rupees, no? How much amount of balance is lying already in your electronic cash ledger from the due date till the date of actual adjustment? 1 lakh rupees. Now you pay interest only on 1 lakh rupees. One more relaxation they are giving. You pay the interest only on that 1 lakh rupees extra. Why? Because the amount is already lying in the electronic cash ledger. No, we already have your money. You don't have that excess 1 lakh rupees here. So that's why you have waited. But that 1 lakh rupees you have deposited in your electronic cash ledger. When you have deposited that money in electronic cash ledger, that amount is already with the GST department. So that's why what they have told. One more advantage we are giving you. What is that one more advantage? So from that 2 lakh rupees, whatever you are discharging through your electronic cash ledger, take out the amount which is already lying in your electronic cash ledger from the date of payment. From the due date of payment till the actual adjustment, if that amount is maintained in electronic cash ledger and it is maintained as it is without using, then in that case reduce that excess 1 lakh rupees also, and you will be liable to pay interest only at the rate of on the balance amount which you are discharging it through electronic cash ledger. Understood? Clear and comfortable, everybody? Right. So this is what you need to keep in mind. So I tried to give you one simple comprehensive example to make you understand this interest payment. I hope you are all able to understand. Okay, right. Next, let us come to the next point. So one case we have covered how you will calculate interest in case of delayed payment of tax. Now we will do one more thing here. How you will calculate interest in case of ITC wrongly availed and utilized. In case ITC is wrongly availed and utilized, how to calculate that interest component. Let us see that. Sir, let us say April month 2025. For April month, while I am filing my GSTR 3B on 20th of June 2000, on 20th of May 2025, while I am filing my GSTR 3B, I have taken ITC. I have taken ITC, input tax credit. I have wrongly availed. How much, sir? 2 lakh rupees of ITC wrongly availed. That amount was credited to my electronic credit ledger, and that I have used it also, sir. I have taken 2 lakh rupees of ITC, which is wrongly availed, and I have used it. And I have used it for discharging my output tax liability. So 0. I have taken ITC and have used it, availed and utilized it for discharging my output tax liability. But I have wrongly availed, sir. I am not eligible. Let us say that is a blocked credit. I purchased a motor vehicle. On that I have paid 2 lakhs worth of GST. So it is a blocked credit under 17 subsection 5. So if it is blocked credit under 17 subsection 5, I should not avail it. But I have availed it, sir. I should not have availed it, but I have availed it, sir. What I should do now? So what you should do now, in case if you have already availed the input tax credit, which you should not have availed it, then what should happen is, you should reverse it whenever you find it out. You should reverse it. Let us say, for example, sir, I found it out. I'm ineligible for credit in the August month. So in the August month, when I'm filing the return, but is by 20th of September, when I'm filing the August month return, what I'm doing is, whatever ITC I have wrongly availed, that I'm reversing it, sir. That I'm reversing it. I'm giving it back. So now if you just reverse it, it alone will not be enough. On that ITC which you have wrongly availed and utilized, on that 2 lakh rupees, you will be liable to pay interest also. From which date, sir? From the date of utilization. From the date of utilization till the date of that reversal. Sir, when I have utilized it? On 20th of May, I have utilized it. So from the date of utilization till the date of reversal. When you are reversing it? On 20th of September, you are reversing it. So from the date of utilization till the date of reversal, you have to calculate the days, and for that days, you have to pay the interest at the rate of 18% per annum. You have to calculate it at the rate of interest at the rate of 18% per annum. So in case if you have wrongly availed ITC and you have utilized it, later on you are reversing it, you are liable to pay the interest from the date of utilization till the date of reversal, interest at the rate of 18%. But here, some special points I will try to tell you here. Let us say in the April month 2025, you have filed your GSTR 3B, 20th of May 2025, you filed your GSTR 3B. Now let me tell you electronic credit ledger. See, there is already balance lying in your electronic credit ledger. 2 lakh rupees of balance is already there. Now in your GSTR 3B, let me take another amount. In your electronic credit ledger, already 10 lakhs worth of ITC balance is there. Now in this GSTR 3B for the month of April, you are wrongly availing 2 lakh rupees of ITC. You are wrongly availing 2 lakh rupees of ITC. Okay, plus 2 lakh rupees of wrongly availed ITC you have done. Thereafter, you have utilized it. Now for this month, output tax liability will be there, no? So you have utilized, let us say for example, 8 lakh rupees of ITC you have utilized. Thereafter, still 4 lakh rupees of balance is there in your electronic credit ledger. 4 lakh rupees of balance is there still in your electronic credit ledger. So in one particular month, you have availed 2 lakh rupees of ITC. You have taken the credit, but already enough of balance is there in your electronic credit ledger. To that, it was added. But out of that amount you have utilized, let us say in the current month you have 8 lakh rupees of output tax liability, you have adjusted it. Still in your electronic credit ledger 4 lakh rupees of balance is there. Okay. So now this fact you have realized that you have wrongly availed ITC. Now you want to reverse it. On 20th of September 2025, in your GSTR 3B, you want to reverse that ITC. You want to reverse that ITC. Will any interest will become applicable? Here interest will not become applicable. Here interest will not become applicable. Sir, why interest will not become applicable? Why? Because if you read the provisions of section 50, they say that interest is liable to be paid only when the ITC is wrongly availed and also utilized. ITC is required to be reversed only when ITC is wrongly availed and also utilized. Here ITC is wrongly availed. There is no doubt. ITC is wrongly availed. 100% ITC is wrongly availed, but it is not utilized. Sir, when we can say ITC is utilized, ITC will be considered as utilized only when the balance in the electronic credit ledger has fallen below the wrongly availed ITC amount. Listen carefully. Pay attention to the words I am using here. As it is words you have to write in your exam. So interest will be payable only when ITC is wrongly availed and also utilized. ITC should be wrongly availed and also utilized. Then only then only interest is applicable. But in this case, you have only availed ITC, but you have not utilized it. You did not use it for discharging your output tax liability. If ITC is wrongly availed, but not utilized, interest is not payable. Sir, when ITC will be considered to have been utilized? ITC wrongly availed, okay. But when wrongly availed ITC will be considered to be utilized? ITC will be considered to be utilized. ITC wrongly availed will be considered to be utilized only when the balance in the electronic credit ledger has fallen below the wrongly availed amount. Sir, from the date of availment till the date of reversal, I have availed it on 20th of May. I am reversing it on 20th of September. But starting from 20th of May till 20th of September, if my electronic credit ledger balance is always above 2 lakh rupees, starting from 20th of May till 20th of September, from the date of availment till the date of reversal, if the balance in my electronic credit ledger is always above the wrongly availed amount, how much I have wrongly availed? 2 lakh rupees. But starting from 20th of May till 20th of September, if the balance in my electronic credit ledger is always above 2 lakh rupees, no interest will be applicable. No interest will be applicable. Sir, let us say I have availed 2 lakh rupees. When I have availed it, wrongly availed on 20th of May 2025. But on that day, my electronic credit ledger, that means after adjusting all my liabilities and all, my electronic credit ledger balance is 1 lakh rupees only, sir. My electronic credit ledger balance is 1 lakh rupees only, sir. This 1 lakh rupees balance I am maintaining. But on 20th of September 2025, I realized my mistake. I want to reverse it, sir. Now, how much you will reverse? 2 lakhs you will reverse. But here reversal alone will not be enough. Interest is also you have to pay. Why, sir? You have wrongly availed ITC and you have utilized also. Why you have utilized? Your balance in the electronic credit ledger has fallen below the wrongly availed amount. How much you have wrongly availed? 2 lakh rupees. How much is the balance in the electronic credit ledger? 1 lakh rupees. So you have wrongly utilized also. Sir, what is the extent of utilization? 1 lakh you have wrongly utilized. Interest you will be payable on what amount, sir? 1 lakh rupees. On 1 lakh rupees, 18% from the date of utilization till the date of reversal divided by 365. That much amount of interest you will be liable to pay. Understood? Clear, everyone? Able to understand? Right. So this is what you have to remember. 2 points in case of ITC wrongly availed and utilized. Sir, what are the points which you have to keep in mind? Number 1, interest will become applicable only when the ITC is wrongly availed also, utilized also. Sir, when ITC will be considered to have been wrongly utilized? When the balance in the electronic credit ledger falls below the wrongly availed amount. Sir, what is extent of utilization? The difference to whatever amount, to the extent of whatever amount the balance in the electronic credit ledger has fallen below wrongly availed ITC, that will be considered as the amount of utilization, and on that amount only interest will become applicable. Understood? So all these things I have tried to cover it in this example. And one more important circular I will try to say it here. Let us say you have different heads: IGST, CGST, SGST. Let us say you have wrongly availed IGST amount. You have wrongly availed IGST. You have wrongly availed IGST amounting to 1 lakh rupees. This is the wrongly availed amount. Now, the balance in the electronic credit ledger. The balance in the electronic credit ledger under all the 3 heads: IGST, CGST, SGST. I don't have any balance in my electronic credit ledger. Under CGST, I have 70,000 rupees of credit. Under SGST, I have 70,000 rupees of ITC. So now you tell me I have wrongly availed IGST amounting to 1 lakh rupees. But the balance in the electronic credit ledger under IGST heading has fallen below my wrongly availed amount. How much I have wrongly availed? 1 lakh rupees of IGST. What is the balance in the electronic credit ledger under IGST heading? 0. That means I have wrongly availed and utilized IGST amounting to 1 lakh rupees, and I am liable to pay interest when on its reversal. Whenever I am reversing it, I will be liable to pay interest. It will not be enough just if I reverse it. I will be liable to pay interest also at the rate of 18%. No, not required. Because what they are trying to say is, when you are considering whether balance in the electronic credit ledger has fallen below the wrongly availed amount or not, especially for IGST purposes, don't just consider balance in the electronic credit ledger under IGST heading. Consider the balance in the electronic credit ledger under all the headings: IGST, CGST, SGST. So what is the cumulative balance in my electronic credit ledger? 1,40,000, which is higher than the amount I have wrongly availed. So ITC will not be considered to have been wrongly utilized. So your IGST has been wrongly availed but not utilized. So when I am reversing this 1 lakh rupees later, will I be liable to pay interest? No, I will not be liable to pay interest. Able to understand? So now if I bring this logic into next concept, when you are considering whether CGST has been wrongly utilized or not, then you have to consider balance in the electronic credit ledger under both CGST and IGST put together. That collective balance you have to consider. Check whether that balance in the electronic credit ledger under CGST and IGST has fallen below the amount of CGST wrongly availed. When you are considering SGST, check whether the balance in the electronic credit ledger under SGST and IGST has fallen below the amount of wrongly availed SGST. We can interpret that circular further. Circular only spoke about this aspect here, first aspect. I am considering the consequences on CGST, SGST also. So till here you remember it. So what they are saying, when you are checking whether IGST has been wrongly utilized or not, you should compare the balance in the electronic credit ledger under all the three heads. You have to compare what is the balance in the electronic credit ledger under IGST, CGST, SGST all put together. What is the balance in the electronic credit ledger in total, whether that has fallen below the wrongly availed IGST amount. If it has fallen below the wrongly availed IGST amount, then it will be considered to be utilized. What is the extent of utilization? The difference, whatever is there, that will be extent of utilization. On that, you will be liable to pay interest at the rate of 18% from the date of utilization till the date of reversal. Clear? Understood? So this is what one of the important concept, how to calculate the interest. Expect a question from this. Expect a question from this. Right. So this is what regarding this thing. Payment of taxes, TDS and TCS. Now I will try to cover one more small chapter. So what we'll try to do is assessment and audit we'll try to do. One small chapter is there, assessment and audit, that we'll try to do. Hardly it will take some 20 to 30 minutes. We'll try to complete that. Where is it, man? Chapter number, I think 17 or something, not 17, 18. Yes, here we have. So assessment and audit. So one more small chapter is there. This I will try to do. Okay, right. After this, we'll wind up for today. We have some major chapters. Refunds we have. See, major chapters which I want to cover is refunds. Refunds, one thing I have to cover. And refunds I will do. Thereafter I will do appeals also I will do. Advance ruling and all this is miscellaneous concepts. So remaining chapters after this assessment and audit, what are the remaining chapters which I will revise is refunds. 100% I will do. Many of the students will have a confusion regarding refunds, so that refunds related revision I will do. But from tomorrow onwards I might not be doing the live. Today is the last live session for marathon series, but this is not the end. This is not the end. Even though live is ending, this is not the end. So even few more chapters I'm going to revise. So what are that few more chapters I'm going to revise? I'm going to revise refunds I will do the revision. Appeals also I will do the revision. Inspection, search and seizure, penalties, some important penalty provisions also I will revise. All these things also I will revise, but not through live. Not through live. On a daily basis you will find the revision videos of these chapters getting uploaded on the YouTube channel, so no need to worry. So from today live might be ending. Yes, live is going to end. Live might not be there, but those remaining chapters also will be uploaded as a recorded video. It will get uploaded. If at all I find any convenient time for live, I will do the live as well. I might not follow fixed times and all, but if at all I am able to do live of these chapters, I will schedule a live. Stay connected to my channel. So whenever I want to do the revision, I will schedule one live. If at all you want to participate in that live session, you can participate as well. Okay, right. Or else you will find the recordings on my channel. So please do exemptions chapter 2. I will try, because exemption is such a voluminous chapter. We'll see if the things permit me. Definitely I will do the exemptions chapter as well. See, but in the meantime, what you can do is for CA Inter level, in the CA Inter revision series playlist, you will find one exemption related video somewhere around some 1.5 hour. Some 1.5 hour of thing I have uploaded, 1 hour 40 minutes or something. I have done the revision of exemptions. There also I have done good coverage. So whatever are relevant for inter, see, exemptions are going to be common for inter and final as well. So that's why many exemptions, somewhere around 1 hour 45 minutes I have spent on revising the content for CA, interrelated exemptions and all. That video anyhow you will be able to find it in my channel, that you can refer it in the meantime. So remaining also I will try to do it. Remaining exemptions also will try to do it, right? So anyhow, so let us try to continue further. Assessment and audit. So assessment and audit will try to do it. Sir, what are that? Assessment. See, assessment means what? Determination of the tax amount. What do you mean by assessment? Determination of tax amount. So how you will determine the tax amount? So what amount of GST you are liable to pay? That determination is necessary. Sir, how to determine it? How to determine the amount of GST which you will be liable to pay? So that process we call it as assessment, and we have different kinds of assessment. One of the most common assessment which will happen in GST is self-assessment. Sir, what is self-assessment? You yourself will calculate, you yourself will file your returns, you yourself will file your GSTR1, you yourself will file your GSTR3B, you yourself are going to calculate what is the amount which you will be required to pay, and you will declare in your returns. That is major thing which we all will do. So one thing is, one of the most common assessment which everybody will do is self-assessment. That means you will calculate your liability on your own. You will declare what ITC you are eligible for, how much amount you are required to pay it in cash, so that cash deposit, electronic cash ledger adjustments. So that is one thing. Mostly this is what many people will try to do. Okay, self-assessment. 99% of the cases this will happen. But in some cases what will happen is there will be something called scrutiny assessment. One of the most common assessment is self-assessment, section number 59. But in some cases what will happen is something called scrutiny assessment will happen. Sir, what is this scrutiny assessment? Scrutiny assessment means you will file your returns. On self-assessment basis, you will file your returns, but that returns will be taken up for scrutiny by the proper officer. Proper officer will take up that returns for scrutiny. He will determine whether have you made correct declaration of your liabilities and all. On risk parameters, how this scrutiny assessment will happen is on the basis of risk parameters, this your returns will be taken up for scrutiny. That means proper officer will check whatever data you have submitted, it is correct or not. In case if he finds that, so let us try to cover what will happen in the scrutiny return as per section number 61. So what is the scrutiny return? Verifying the correctness of the return. Whatever return you have submitted, whether that return is correct or not, that will be verified. So once you have filed your return will be selected. Not that each and every return will be selected for scrutiny by the proper officer. Don't be of a wrong notion that each and every return filed by the taxpayer will be taken up for scrutiny. No, department doesn't have that many resources. Department doesn't have that many officers. Department doesn't have that many resources to complete it. That much time also is not available. So on the basis of some risk parameters, a few returns filed by the taxpayers will be selected for scrutiny. Scrutiny by the proper officer will happen. Then on such a scrutiny, if any notice is found, you filed one return, but that return was taken up for scrutiny. Now in that on scrutiny, if you are able to find any discrepancy, if the PO finds any discrepancy, he will first issue a show cause notice. He will first issue a show cause notice. If any discrepancy is found during scrutiny, he will issue a show cause notice asking for explanation within a time not exceeding 30 days. So once he has given you show cause notice, he will give you 30 days of time. How much? 30 days of time. 2 days ago only I got this assessment is very relevant for me. Why? Because 2 days ago only one of my client has not filed has filed his GSTRs, but according to this on the basis of risk parameters, 2B 3B comparison happened. When compared with the 2B, my client has taken more in ITC in GSTR 3B. When compared with the 2B, one of my client has taken more ITC in his GSTR 3B, so that returns were taken up for scrutiny. Now he got that notice asking him to explain somewhere around 15 lakhs amount of GST has excess claimed. That was taken up by scrutiny. That return was filed. That return was taken up for scrutiny, and he has given one notice, which is what currently I am dealing with. Just for information sake, I am saying it here. So if any discrepancy is found during scrutiny, he will issue notice, and to that notice you have to respond within 30 days. He will give you 30 days of time. Within that 30 days of time, you have to respond. And where possible, quantifying the tax, interest and other amounts also payable. In that notice, he will also mention this much amount of tax you are required to pay, this much interest you are required to pay, and other amount like penalty if any is there, that also he will mention how much amount you will be liable to pay. Reply to such notice. You have to reply back to that notice. So within 30 days of time, you are liable to reply back to that notice. And in that, how you have to reply back? What could be possible actions from your side? Either you will accept the discrepancy. As mentioned in the notice and pay the amount. Okay, you are accepting. Okay, sir, my fault only. I will accept the discrepancy and I will pay the interest, late fee, penalty, whatever it is, I will pay. Or if you find that no, that is not a discrepancy, you are a genuine person only, you have a valid reason why you have made that differences and all, you have to furnish an explanation. So whatever it is, you are required to do it within 30 days. Either accept the discrepancy, pay the amount of tax, interest or other amount, or furnish an explanation. for discrepancy to the PO for non-acceptance of discrepancy. Now, action by the proper officer. See, in case if you have accepted, paid the amount, interest, penalty, well and good, the matter will get settled there. In case if the explanation or information furnished by the registered persons is found acceptable, if it is acceptable, PO will accept your reply and he will drop the proceedings. In case if you are not giving any satisfactory explanation, either you are not giving explanation within 30 days or you are giving explanation but that is not satisfactory, then what you should do, or you are not taking any corrective action, then PO can take any of the actions. Sir, what actions he can take? Either you are not responding or you are responding also but it is not a satisfactory reply. In all that cases, what will happen is he will proceed to conduct audit under section number 65. He will order for audit under section number 65. Departmental audit he can order, or he can order a special audit. Or what he can do, he can even order a special audit by chart accountant or cost accountant. Or even he can do inspection, search and seizure also he can do. Under section number 67, he can order for inspection, search and seizure. Or he can initiate proceedings for determination of tax and other dues under 73, 74, 74A. He can initiate proceedings. Demand and recovery proceedings he can initiate under section 73, 74 or 74A. Able to understand? Clear and comfortable? So this is what regarding summary written. This is what regarding scrutiny written. Now, there will be something called provisional assessment. So, two assessments we have covered. One is self-assessment, other one is scrutiny assessment. Now, the third one is provisional assessment. There will be something called provisional assessment. Sir, what is this provisional assessment? Very simple. In case if you are a taxable person, you are facing some problem. You are unable to determine what is the value. On what value you are liable to pay the amount of GST, that you are unable to determine it. Or you are unable to determine the rate of tax which is applicable on your goods. There is some confusion here, quite common. As a part of business, sometimes we might not know how to determine value. Or you are selling some unique product which is not there in the HSN list. You are confused what will be the rate of GST that is applicable on the goods or services whatever you are providing. So where a taxable person is unable to determine value or is unable to determine the rate which is applicable on the goods or services, then you have to furnish an application in the prescribed form. You can make an application to the proper officer. Sir, I am unable to determine the value. I am unable to determine the rate. Please help me. I will make the payment of duty on provisional basis. You tell me some provisional basis. On that provisional basis, I will pay the duty. Sorry, I will pay the GST on the provisional basis. Later, you finalize. Later, you take your time and finalize what should be the appropriate value. You finalize what should be the appropriate rate. Then I will discharge my final liability. So like that you can make an application. So when you are unable to determine the value, when you are unable to determine the rate, furnish an application along with reasons and you ask for provisional payment of tax. Sir, tell me some means where provisionally you tell me this value, provisionally you tell me this much rate, and provisionally I will pay. And you take your time and decide what is the value, what is the rate, and upon finalization, we will see what will be the outcome. Right. So you can make reasons, you can make a request for provisional payment of duty along with submission of supporting documents. Okay, you submitted application. Now what PO will do on receipt of that application? PO will issue a notice in the prescribed form. So first you make an application for provisional assessment, then he will give notice. If he needs some extra information, he will give you notice seeking extra information if necessary. So PO will issue a notice in the prescribed form seeking additional information as to which registered person shall file reply and may appear in person. So before doing that provisional assessment, he will issue notice, and if at all you want, even you can go and appear before him. Then PO will issue an order within a period not later than 90 days. You submitted the application, no? Within 90 days from the date of that application, he will tell you provisional assessment order. So from the date of receipt of such request, allowing payment of tax on provisional basis. So you made an application, PO will take 90 days of time. Within that 90 days of time, he will tell you provisional assessment, not final assessment. Okay, provisionally on this value, you pay the GST. Provisionally, this much amount of rate of GST you pay. Like that, provisional assessment order will be given within 90 days from the date of receipt of application. Indicating what will be the value, indicating what will be the amount which you are required to pay. And also, he might ask you to furnish some security also. Which cannot exceed 25% of the amount covered under the bond. So that means he will ask you to execute the bond, and in some cases bond alone will not be enough. He might even ask you to furnish security up to 25% of the bond amount also. So whatever it is, he will give you provisional assessment order. Okay, and accordingly you have to furnish the bond and security also, that you can read it. Now finalization should happen. Boss, within 90 days whatever order you have got, that is provisional order only. Now final assessment order should come. Finally, after the provisional assessment order, the PO will sit, he will analyze what should be your correct value, what should be your correct rate. That final assessment should happen. Sir, what is the time limit for that final assessment, sir? Let us see. So final assessment order has to be passed within how many months? Within 6 months. from the date of communication of provisional assessment. Within 90 days, you gave the provisional assessment order. No. From that provisional assessment order, within 6 months, final assessment order should be passed. However, if it can be on valid reason, that period can be extended by 6 months. So PO on his own, he will have 6 months of time to finalize the assessment. If there is a valid reason, that can be extended by joint or additional commissioner by 6 more months. Not just that, the commissioner for such period as he may deem fit, not exceeding 4 years. If there is a valid reason, commissioner can extend it for 4 years. That means altogether you will have 5 years for doing the final assessment. From the date of provisional assessment till the time you do final assessment, you have maximum of 5 years of time. 6 months without any extension. If there is a valid reason, AC, JC can give extension for 6 more months. If there is a valid reason, commissioner can give extension for 4 years. So like that, maximum you have 5 years of time to finalize a final assessment order. Then, so once assessment has been completed, now here comes the part where on finalization of assessment, PO will issue a notice in the prescribed form seeking required information and pass a final assessment order. So final assessment order will come. Now in the final assessment order, 2 outcomes could be there. Let us say in the final assessment order, you are liable to pay extra amount. Provisionally, let us say you are paying only 12% of GST. But in the final assessment order, they have told that you are liable to pay 18% of GST. But till now, on provisional basis, you paid only 12% of GST. No? Now the balance amount you will be liable to pay. Whatever shortfall is there, now you have to pay that. So where tax liability as per the final assessment is higher than the provisional assessment, then you will be liable to pay the differential tax amount. Not just paying differential tax amount, even interest also you are required to pay. Interest also you are required to pay. So provisionally you paid only 12%. Now the rate is determined in the final assessment order. They told 18%. The differential amount of tax you are liable to pay along with interest. Interest also you are required to pay. From the due date till the date of payment, you are liable to pay interest. Sir, what if in the final assessment order only the amount is less? As per the final assessment order, they told you are required to pay 5% only. But provisionally they asked you to pay 12%. Sir, what I should do? You can claim the refund. What you can do? You can claim the refund. So registered person shall be paid interest. Sorry, with the tax liability as per the final assessment is less than provisional assessment. That is, tax is becoming refundable. Can you claim the refund, sir? Yes. In case if the refund is not given to you within 60 days, then you will be liable to get the interest also. Anyhow, refund interest and all we will see in the refunds chapter. So what will be the rate of interest on refund, from which date to which date it will be calculated, that we'll see it in the refunds chapter. But here you have to remember, in case because of final assessment order, whatever amount you are already paid under provisional assessment is higher, then that excess amount you can claim it as refund. And you have to make a refund application. If the refund is granted within 60 days, no interest, nothing. In case if you made an application for refund, but if the refund is not granted within 60 days from the date of application of refund claim, then they will refund you along with interest from 61st day. Not from the date of payment. You have to make an application. Within 60 days, they will give you refund. In case if within 60 days, if you are giving refund, no interest. Within 60 days, if they are not giving you refund, from the 61st day till the date of refund, they will pay you interest. So don't have extra hopes there. Right. Next. And even on completion of the final assessment, whatever security you have furnished, that also will be released. Clear? So this is what regarding provisional assessment. So one is self-assessment, scrutiny assessment, provisional assessment. Then we have finally something called summary assessment. Summary assessment also will be there. Sir, what is summary assessment? Summary assessment is something which will be done in extreme circumstances. Summary assessment is something which will be done in extreme circumstances. Sir, what are that extreme circumstances? So what are that extreme circumstances is, let us say you are already a registered person. See, in normal assessments, what will happen? First, they will give you notice. After that notice, you have to furnish reply. Thereafter, order will come. Usually, how assessments will happen here? GST assessment. First, they will give you show cause notice. For that show cause notice, they will give you time for reply. Now, within that reply, you will take reply. Within that time, you will give reply. After that reply, let us say scrutiny assessment only. If you take first, they will give you notice. 30 days of time they will give you. Then only you will reply. After that reply, if it is not satisfactory, then order will come. But there will be some extreme circumstances. Let us say there is a one person who has done a severe default. Now, if the department follows usual procedure, okay, first to notice, 30 days of time will be there. Then he will give reply. Thereafter order. But that person is trying to fly away from the country. There is no such time. If you give that much amount of time for that person, if you give notice, give him 30 days of time, within that time, what he will happen is he will leave the country. So there is a time gap here. You should not give extreme difficult scenario. If you give time here, it will be a loss of revenue for the government. It will be against the interest of the revenue of the government. So then what department can do is, in that extreme circumstances, they can do something called summary assessment. No notice, nothing, directly order they will give. That is what we call it as summary assessment. but summary assessment cannot be done always. Only in extreme circumstances they will do it. So like if you see, summary assessment can be initiated to protect the interest of the revenue with the previous permission of AC or GC. 100%. If you want to do summary assessment, you need prior approval of AC or GC. When they can do it, sir? If the proper officer has evidence that taxable person has incurred a liability. If the proper officer is having perfect evidence that, sir, this taxable person is having some liability, and PO has sufficient grounds to believe that delaying in passing an assessment order may adversely affect interest on revenue, or PO is having sufficient cause, PO is convincing to the AC or JC that, sir, if we take some usual route, if we give him the notice, if you give him some time, he will fly away from the country, sir. It will be a difficult, once he leaves the country, it will be difficult for us to collect the revenue thereafter. So like that, if the PO is having evidence that a taxable person has incurred a liability, PO has sufficient cause to believe that delaying passing an assessment order may adversely affect the interest of the revenue, then he can go to ACJC, get the approval and get the summary assessment done. Okay, so withdrawal of the assessment order. So what will happen is, so all these things will happen, then summary order will be passed, summary assessment order will be passed. But this summary assessment order can be withdrawn. That summary assessment order can be withdrawn. Let us say, for example, PO has done the assessment and told one person is going to fly away from the country. So quickly he has done the assessment and he told that you are liable to pay 5 crore rupees of liability. Like that, he has given a summary assessment order. Now this order can be withdrawn. When, sir? When on an application filed by taxable person for withdrawal of the summary assessment order. Now that person is coming and saying, sir, you came for assessment. You did the assessment, okay. But 5 crores is too much, sir. 5 crores is too much. I will cooperate with you, sir. I will cooperate. I will not leave the country. Take my passport if you want. I will cooperate with you. Please drop this summary assessment and do the correct assessment. 5 crores is too much, sir. That much money only I did not make it. That much money only I did not make it. You are saying 5 crores? I don't have that much amount of money. I am requesting you. I will cooperate. Take my passport. I will not go anywhere. So please drop that summary assessment order and do the proper assessment, sir. This liability is too much. Like that, if the request is coming, then they can drop the summary assessment. And within 30 days from the date of receipt of order. So once that summary assessment order has been passed, within 30 days, the application can be filed by the taxpayer asking them to withdraw the summary assessment order. And on his own motion, that means additional or joint commissioner, without any application from the taxable person, they on their own motion also can withdraw the assessment order. When, sir? Where he finds that such order to be erroneous and may instead follow procedures laid down under demand and recovery. 73, 74, 74A, demand and recovery procedures he can follow on his own action, even without an application. AC or JC can do it. And deem a taxable person in case of supply of the goods. Sir, in case of summary assessment. In case of summary assessment, if you are unable to find the person against whom this liability should be imposed, then what they can do, where taxable person is not ascertainable and liability relates to supply of the goods, person in charge of such goods shall be deemed to be the taxable person. Whoever is in charge of that goods, that person will be deemed to be the taxable person and he will be liable to assessment, payment of tax and all other amounts due. So in case of the taxable person, who is a taxable person, if it is not ascertainable and it is a case of supply of the goods, whoever is the in charge of that goods, that person will be deemed to be taxable person and all the liability will be imposed on him. Right. So this is what regarding this one. And thereafter we have something called best judgment assessment. And we have one more last assessment called best judgment assessment. Sir, what is that best judgment assessment? Very simple. Let us say you are a person required to file a return. So best judgment assessment under section number 62. You are a person required to file the return. You are not filing your return. You did not file your return within due date. So then what will happen is first department will give you notice. First department will give you notice. In GSTR 3A, they will give you notice. Boss, please file your return. And they will give you 15 days of time. If you are failing to furnish any monthly return or final return, then first they will give you notice. GSTR 3A notice they will give. Boss, please file the return within 15 days. Now they have given you notice, but still you are not filing your return within 15 days. Then what will happen, So first they will give you 15 days of time. If within the 15 days of time also, if you are not filing your return, then the department will proceed to assess your tax liability depending on the best of his judgment. He will do best judgment assessment depending on whatever information available with him. He will determine what is your tax liability and that much liability you will become liable to pay. So that is what I call it as best judgment assessment. Able to understand? So very simple. If you are already a registered person, you are required to file some returns, but you are not filing it, then first proper officer will issue notice. Boss, please file your return. 15 days of time he will give. If within 15 days also, if you are not filing your returns, he will do best judgment assessment he will do. So what is the time limit? Within what time limit he can complete that assessment? He can complete that assessment within 5 years. How much time he have here? Within 5 years from the due date of the returns. or within 5 years from the due date from within due date under section 54 for furnishing the annual return. For that duration, due date for annual return will be there, no, generally 31st of December following the end of the financial year. Let us say you did not file your return for the month of April 2025. So now he will issue 3A and he will do best judgment assessment. And what is the time limit for doing that best judgment assessment? 5 years from the due date of furnishing annual return for the relevant financial year. So this is the relevant financial year 25-26. What is the due date for furnishing annual return? 31st of December 2026. Now from 31st of December 2026, 5 years of time he can take to complete that best judgment assessment. Understood? Okay, so he will take his own sweet time and he will do the best judgment assessment. Now he will pass an order. Okay, depending on the information available with me, this is what your liability, this much you have to pay. But that best judgment assessment can be withdrawn. That best judgment assessment order can be withdrawn. Sir, when it can be withdrawn, sir? Just listen carefully. So when the best judgment assessment order can be withdrawn is, let us say best judgment assessment order has been passed. Now within 60 days of passing of that best judgment assessment order, if you file your returns and you declare your liability, you declare your usual liability, you pay all the taxes, you pay all the interest, and you pay the usual late fee. You pay the usual late fee within 60 days of best judgment assessment order. If you are filing your returns, paying your taxes, interest, and usual late fee for filing of the return, whatever is applicable, if you are doing it within 60 days, then the best judgment assessment order will be withdrawn. Your liability will be considered as per the returns, whatever you have filed. Okay, so this is one case. That's what they try to say it here. So if the registered person furnishes a valid return for the default period within 60 days of service of a best judgment assessment order, such order shall be deemed to be withdrawn. But liability to pay interest under section 51 and late fee under section 47 shall continue. You have to pay tax, interest, late fee, all that you have to pay usually, but best judgment assessment order will be withdrawn. One more option they are giving you here. So they have given best judgment assessment order. Within 60 days, you file your return, pay the usual interest, pay the usual late fee. We will drop our best judgment assessment order. Sir, within 60 days, you did not do it. Best judgment assessment order came. 60 days of time they have given. You did not file your returns, sir. Still 60 more days of time they are giving. We'll give you 60 more days. In the next 60 days also, if you file your returns, if you pay the interest, if you pay the usual late fee along with additional late fee of 100 rupees per day. Additional late fee of 100 rupees per day starting from 61st day. Within next 60 days, if you are filing return and pay interest, taxes, usual late fee along with that 100 rupees per day additional fee if you pay. Next 60 days we will wait. So if you are doing that within 60 days along with the payment of that additional late fee of 100 rupees, then also we will drop our best judgment assessment. Consider your returns. Sir, if within that 60 days also I did not do it, thereafter I am filing my returns. No, your returns will not be considered. Best judgment assessment will be final. Best judgment assessment will be final. So first initial 60 days they are giving. Thereafter one more 60 days they are giving. If a valid return is not furnished within 60 days, it may be furnished within a further 60 days on payment of additional late fee of 100 per day beyond 60 days. And on such filing, the best judgment assessment order shall be deemed withdrawn while liability for interest under 51 and late fee will continue. So maximum 120 days of time they are giving. First 60 days, usual late fee. Next 60 days, additional late fee of 100 rupees per day. Okay, fine. Till that time, we will accept. We'll drop our best judgment assessment order. Consider your returns. But within 120 days also, you are not taking any action. Even after that, if you file the returns also, will not consider whatever liability we have determined. That will be final. That only your liability to pay. Okay, right. So this is what regarding best judgment assessment. Thereafter, I will talk about audits. We have two kinds of audits actually. One is audit, departmental audit, where GST authorities itself will do the audit, or there is something called special audit, where if the department doesn't want to do the audit, they can appoint a chartered accountant or cost accountant to do the audit on behalf of the department. So like that, two audits can happen under GST. One is department by the tax authorities under section number 65. Sir, who will do this departmental audit, sir? So this audit can be undertaken by commissioner or any other officer authorized by him. And where it will be conducted, sir? At the place of business or office of the taxable person. Taxable person is there, no? To their office, GST officers will come, commissioner will come, his team will come, and they will come to the registered person's premises or their offices, and there they will do the audit. for a financial year or part thereof or multiple financial years. Even they can do audit of the part of the year, they can do audit of the full financial year, or they can do audit of multiple financial years also. But they will give notice, 15 working days notice they will give. Before they come for audit, they will give you 15 working days of notice. And what is the time limit for completion of this audit, sir? When the departmental people have come for audit, what is the time limit for completion? 3 months. 3 months from the date of commencement of audit, that audit has to be completed. Sir, what do you mean by commencement? So they are saying audit has to be completed within 3 months from the date of commencement of audit. But what is commencement of audit? What is date of commencement of audit? So if you see here, date on which records or accounts called by audit have been made available, actual institution of audit at the place of business, whichever is later. So later of dates, later of which dates? The date on which the information is made available to the officers, or the date on which the department has started verifying. So whichever is later, that will be considered as date of commencement of audit. Let us say you have provided the books. Whatever information department is asking, you provided them on 15th of January. But department came to your office on 25th of, to your premises on 25th of January and actually they started doing the audit. So what is the date of commencement? Whichever is later, 25th of January. Now 25th of January, within 3 months, from this date, within 3 months, the audit has to be completed. The audit has to be completed, but that 3 months can be extended. They will not do. Within 3 months, they will not do. So they will be, that period can be extended by a maximum period of 6 months by the commissioner. Commissioner can extend that duration for completion of the audit by 6 more months. So 3 months without any extension. If there is a valid reason, commissioner will extend that duration for 6 months. Total 9 months they will have the time for completion of the audit. Sir, how to conduct the audit and all you can see. So the PO will authorize to conduct audit with the assistance of team. They will bring the team and officials and they will observe the records and they will maintain audit notes. They will verify the documents. They will check the correctness of the turnover. And as a person, as a registered person, you have to facilitate verification. You should cooperate with the officers to complete their audit. Whatever information they are asking for, provide all that information and even to give assistance for timely completion of audit. And then finally, finalization of audit will happen. So once the audit has been finalized, within 30 days, they will inform the registered person what and all findings are there, what are the reasons, and also what are his rights and obligations against that audit report they will tell. And finally, they will proceed further with demand and recovery proceedings under section 73, 74, 74A. In case if any tax is evaded, or in case if the recipient has, in case if the registered person has availed more ITC, then they will even initiate recovery proceedings under demand and recovery proceedings under 73, 74 or 74A. Clear? Then, sir, what is special audit? Special audit means, as I have told, in case if the department is unable to do the audit, then they will appoint the chartered accountants or cost accountants to do the audit on their behalf. Then it will be called as special audit. At any stage of scrutiny, inquiry, investigation, or any other proceeding before him, officer not below the rank of assistant commissioner, if he is of the opinion that value has not been correctly declared or credit is not availed within the normal limits, with the prior approval of the commissioner, he can issue a direction to that registered person to get his accounts audited by a chartered accountant or cost accountant nominated by the commissioner. Not that they will tell to the registered person, go to some chartered accountant, go to some cost accountant and get the audit done. No, they will say, dear registered person, you have to get your accounts audited by a chartered accountant or cost accountant. We will nominate who will be that chartered accountant, who will be that cost accountant, who will do your audit. We will nominate, get your accounts audited by the chartered accountant or cost accountant nominated by us. Not that you will go to some known chartered accountant and get the audit done. No. So chartered accountant or cost accountant will be nominated by the commissioner. And provisions of special audit shall have effect. Even if accounts are subjected to any other audits, still this audit has to undergo. And what is the time limit, sir, within which audit has to be completed? So in case if it is a cost accountant or chartered accountant, since they are experienced persons, they will be given 90 days of time. And this time can be extended by 90 more days. That's all. For usual department audit, 3 months plus 6 months extension. But here 90 days plus 90 days extension. That's all. Sir, who will bear expenses, sir? Department only will bear. Commissioner will bear. So including remuneration of chartered accountant, cost accountant, will be determined and paid by the commissioner, and such a determination shall be final. Now once the special audit is completed, even this audit report also will be circulated. This also will be made available to the registered person, shall be given an opportunity of being heard on any material gathered. On conclusion, registered person shall be informed of the findings, and thereafter, if any excess amount is required to be collected from him, or if he has availed wrong ITC, demand and recovery proceedings will be initiated under section 73, 74 or 74A. So that's all. Like this, two kinds of audits can happen: departmental audit and special audit under section number 65. Clear? So with this, we have completed assessment and audit related discussion also. Clear? So that's all for now. Today we are winding up our live for today. So remaining chapters also will be revised. As I am saying, remaining chapters also will be revised, but not through live. We will upload the videos, revision videos for the remaining chapters. Okay? Right. So take care everyone. Bye. See you. Hello, my dear CFNL students. I hope you guys are all doing good and I hope you guys are all perfectly fine. I do wish and hope that you guys are all perfectly preparing for your upcoming IDT examination. So in this video, I am going to revise the most expected concepts from the customs part. So as you all are aware, customs and FTP constitute for 20 marks of our syllabus, and these customs and FTP is very huge, but I have identified the concepts, most expected concepts. When I say most expected concepts, these are the concepts from where almost all every attempt they ask a question. So like that, I have identified the most expected concepts. I have prepared this notes and all. These notes I will even upload it in the free resources section of my website. So we are going to revise quickly the most expected concepts from the CA final customs part, which could easily fetch you somewhere around 10 to 13 marks. So on the worst scale also from the concepts whatever we are going to cover, so there will be a minimum of 10 to 15 marks of coverage will be there. So 10 to 15 marks of the coverage we are going to cover. We are not going to take much of the time. So all the crisp concepts I have identified, and those I am going to bring it before you through this video. So please do watch this video till the end. Definitely it will help you out for answering the questions in the exam. So having said that, let me start my discussion directly. So I have take an extract of all the important provisions here. Whatever important provisions are there, I have extract of all of it. So everything, this booklet I'm going to cover now as a part of this few hours. So first, the most important thing which you have to clear about is, sir, what will be the relevant date? What is relevant date for determination of rate of duty and tariff value? And what will be the relevant date for determination of exchange rate? These two are very important. Why? Because definitely you are going to get some valuation related question. In order to do the valuation properly, first we need to understand what will be the relevant date for determination of rate of duty and tariff value. What will be the relevant date for determination of exchange rate? These two we have to be very much particular about. So first we will talk about what will be the relevant date for determination of rate of duty and tariff valuation. So in case of imports, section number 15 will talk about the relevant date for determination of rate of duty and tariff value. So section number 15 says that there could be two cases. Let us say, for example, if you are importing the goods, after you have imported the goods, directly you can clear the goods for home consumption, or first you will file a into-bond bill of entry and keep that goods in the warehousing. So in case if you are clearing the goods directly for home consumption, what will be the relevant date for determination of rate of duty and tariff valuation? We have separate provision for that. In case if you are keeping the goods in the warehouse, later from the warehouse if you clear the goods for home consumption, in that case what will be the relevant date for determination of rate of duty and tariff valuation? For both we have different provisions. So first we will talk about in those cases where you have imported the goods and you are directly clearing the goods for home consumption. You are not keeping them in the warehouse, directly you are submitting a bill of entry for home consumption. So in that case, which is the relevant date for determination of rate of duty and tariff valuation? So in case if you are importing the goods by way of vessel, I will explain a different order, please to follow. In case if you are importing the goods by way of vessel, the relevant date for determination of rate of duty and tariff valuation will be date of filing of bill of entry or date of grant of entry inwards, whichever is later. If you are importing the goods by way of vessel and you are directly clearing the goods for home consumption, what will be the relevant date? What do you mean by relevant date for determination of rate of duty? So the date, the rate which is prevailing on which date I have to consider for the purpose of calculation of customs duty. So in case if you are importing by way of vessel, date of filing of bill of entry or date of filing of entry inwards, whichever is later, that will be the relevant date for determination of rate of duty and tariff valuation. In case if you are importing the goods by way of land or aircraft, in case if you are importing the goods by way of vehicle, that is by way of land or aircraft, in those cases entry inwards will not be there, but instead of entry inwards they will say date of filing of bill of entry or date of arrival of vehicle or aircraft, whichever is later. So in case of vessel, there will be entry inwards. So that's why date of presentation of bill of entry for home consumption or date of entry inwards, whichever is later. In case of land and aircraft, there will be no entry inwards. So that's why they have told date of filing of bill of entry or date of arrival of vehicle or aircraft, whichever is later. That will become the relevant date for determination of rate of duty and tariff valuation. Sir, what if the goods are warehoused? Like if you have opted for second option, first you are importing, thereafter you are filing the into bond bill of entry for warehousing. From the warehouse I will clear the goods for home consumption, sir. For that case, what will be the relevant date for determination of rate of duty? In that case, no matter whatever is the mode of import, the relevant date will be date of presentation of bill of entry for home consumption. You will find that you will file that ex bond bill of entry for home consumption. No, for clearing the goods from the warehouse, you will file an ex bond bill of entry for home consumption. So the date of filing of ex bond bill of entry for home consumption, that will become the relevant date for determination of rate of duty and tariff valuation. So there could be other case. Sir, only two cases will be possible. In case if I'm importing the goods, either I will clear the goods for home consumption directly or I will keep them in the warehouse. But there could be other cases also. Sir, what are that other cases? These are the other cases where you are not following the official route for imports. Either you are doing smuggling. By illegal means you are bringing the goods into India. In all that cases, relevant date will be date of payment of duty. Whenever you are making the payment of duty, that on that date, what is the rate prevailing, what is the tariff valuation prevailing, that will become applicable. However, these provisions will not become applicable for baggage and postal imports, because for baggage and postal imports we have different provisions. So this is what section number 15 says. Relevant date for determination of rate of duty and tariff valuation. Sir, what about exports, sir? Okay, imports we have understood. What is the relevant date for determination of rate of duty and tariff valuation? Sir, what will be the relevant date in case of exports? So in case of exports, they are very straightforward here. In case goods are exported, then relevant date for determination of rate of duty and tariff valuation will be date of let export order. Customs officer will give you let export order. So the date of that let export order will be considered as relevant date for determination of rate of duty and tariff valuation. That means whatever rate of duty which is prevailing on the date of that let export order, that much amount of export duty you will be liable to pay. That percentage of export duty you will be liable to pay. In other goods, that means here if you are trying to do some illegal means, in that case relevant date will be date of payment of duty. However, these provisions are also not applicable in case of baggage and postal exports. Understood? So this is what regarding section number 15 and 16. Very important. This compulsory one aspect will be there. In the valuation chapter, they will give you different dates, date of presentation of bill of entry, date of arrival or date of entry inwards, different dates, different rates they will give. So you have to be very careful about it. So this is what regarding relevant date for determination of rate of duty. And one more thing which you have to determine is what is the relevant date for determination of exchange rate. Sir, in relation to imports and export, different dates will be there, like entry inwards will happen on one date, you will file the bill of entry on one date, you will do the warehousing on one date. So like that, multiple dates will be there. Which exchange rate I have to take? The exchange rate prevailing on which date I have to take? So in case of relevant date for determination of exchange rate, in case of imported goods, whatever rate of exchange which is prevalent on filing of bill of entry under 46. Under section 46, whatever rate that is prevailing on date of filing of bill of entry under 46, either you are filing the bill of entry for home consumption or you are filing the bill of entry for warehousing. So on that date, whatever is the exchange rate prevailing, that you have to use it for the purpose of conversion of that foreign currency into INR. Whereas if it is export goods, the exchange rate which you have to use will be the rate of exchange prevalent on the date of filing of the shipping bill. In case if you are doing the export by way of vessel or aircraft, you will file a shipping bill. So whatever exchange rate that is prevailing on the date of filing of shipping bill, that will be used for the purpose of conversion. In case if you are exporting the goods by way of vehicle, whatever exchange rate that is prevailing on bill of export. In case of export by vehicle, you will not file any shipping bill. There will be something called bill of export. So whenever you are filing that bill of export, on that date, whatever exchange rate is prevailing, that you have to take it. And one more important point you have to keep in mind. So they will give you different kinds of exchange rates in the question. In the question, they will give you different kinds of exchange rate. They will tell you exchange rate notified by RBI, interbank exchange rate they will say, and also CBIC exchange rate they will say. Which rate you have to take? Always the rate notified by CBIC will be relevant. Always you have to take the rate notified by CBIC, and dates I have already told you. So don't pay attention to RBI exchange rate, interbank exchange rate. Like this, they will give you multiple exchange rates, but only which exchange rate will be relevant for us? The rate of exchange which is prevailing on, which is notified by CBIC will be relevant for us. Okay, so this is one important provision which you have to keep in mind. Right, so then coming to the next point. So directly I will come to the valuation. So as I have told, definitely there will be one question in which they will ask you to calculate the value. Along with that, they will ask you to calculate the amount of customs duties along with CGST, along with IGST and GST compensations as payable. So how to calculate that valuation, sir? How to calculate the value of imported goods. On export, very rarely they will ask a question, but on valuation of imports, there will be a compulsory question. So I am going to explain to you what is the approach which you have to follow for the purpose of valuation of imports. So first, in most of the cases, they will directly give you FOB price. In case if they are not giving you FOB price, if they are starting from the X factory price, this will be the format which you have to follow. So first you have to take X factory price. First of all, what is an X factory price? The price which is prevailing in the exporter's factory gate, that we call it as X factory price. So you take the X factory price. To that you have to add transportation charges up to the exporter's port, or I also call it as load port or airport. From the exporter's factory till the exporter's port, you have to incur the traveling charges, freight charges. So that transport charges you have to add it. Then the resulting figure, whatever you get, that we call it as FAS price, free alongside price. To that, once the goods have been taken to the exporter's port, there the goods are required to be loaded in that vessel or aircraft. So that loading charges you have to add, loading and handling charges at the exporter's port or airport. If you do that, you will get the FOB price as given. You will arrive at the FOB price as per the question. But that FOB price, to that FOB price, you have to do some additions. to that FOB price, you are required to do some additions. You are required to do some additions under 10 sub rule 1 of the customs valuation rules relating to imports, and you are required to do some additions under 10 sub rule 2 of the custom valuation rules relating to importation of goods. So once you have arrived at the FOB value as given, you are required to do some additions. So there are 5 additions which are required to be made under 10 sub rule 1, and there are 2 additions which are required to be made under 10 sub rule 2. So let us try to understand what are those 5 additions which are required to be made under 10 sub rule 1 to arrive at the FOB value as per customs. So once you arrive at the FOB value as per customs, then we will do the additions under 10 sub rule 2, which will be our assessable value, which will be CIF basically. So first let us see what and all are the additions which you are required to make under 10 sub rule 1. First one, buyer incurred cost. In relation to that import, if the buyer is incurring any cost, which cost, sir? Cost in the form of commission and brokerage. Cost, if the buyer is incurring the cost, which kind of cost? So if the buyer is incurring commission and brokerage other than buying commission, other than buying commission, so other than buying commission means selling commission and selling brokerage only, you have to include it. Other than buying commission, you have to add if the buyer is incurring any cost, commission or brokerage, or if any cost of containers, if the buyer is incurring any cost of containers, that also you have to add it. And cost of packaging, both material cost and labor cost. In relation to the packing, whatever material cost which the buyer is incurring, whatever labor cost which the buyer is incurring, that also required to be added. So first addition which you are required to make it to the FOB price given is if the buyer is incurring any cost in relation to commission and brokerage other than buying commission. Very important, buying commission you should not add it. Other than buying commission you have to add it. Then cost of containers which is incurred by the buyer. Cost of packaging, both material and labor cost in relation to that packing which is incurred by the buyer, that should be added. Second one, so if the buyer is supplying any goods or services either on free of cost or at a reduced price, even that also should be added. Even that also should be added. So if the buyer is supplying any goods or services either on free of cost basis or at a reduced price, and what the buyer could supply free of cost or at a reduced cost or at a reduced price, either it could be raw materials, parts or components which will be used in that final product, or it could be tools, molds and dies. See, when it comes to tools, molds and dies, here we have to add apportioned cost. Here we have to add apportioned cost. So that, for example, if the buyer is sending you some tool which can be used for n number of items, so you can't add directly that amount, you have to apportion it. On what basis you can apportion, sir? You can apportion it on the basis of contract quantity, you can apportion it on the basis of first produced quantity, or even you can apportion it on the shipped quantity. So like that, on different basis you have to apportion it. So whatever it is, if the buyer is supplying any material, parts or components free of cost or at a reduced price, or if he is supplying any molds, tools and dies free of cost at a reduced price, this apportioned cost, or if any material consumed, if the buyer is supplying goods or if the buyer is supplying the materials which will be consumed during that production process either on free of cost basis or at a reduced cost, that also you have to add it. Or buyer if he is supplying any engineering, development, art, sketches, design work which is incurred outside of India, very very important. So engineering, development, artwork, sketches, design, development expenses, if the buyer is incurring outside of India, then only it will be added. Sir, what if engineering, development, art, sketches, design, development charges are incurred in India? That will not be added. That will not be added. So here you have to be very important. Here it is very important point. If engineering, development, art, sketches, design and development work is incurred outside of India, that only will be added. In case if the engineering, development, art, sketches, design and development work is happening in India, that will not be added under 10 sub rule 1 clause B. So two things we have to add. One, we have seen. Number one, buyer incurred cost. Number two, buyer is supplying any goods or services either on free of cost basis or at a reduced price to the seller. Then any royalty, license fee related to imported goods as a condition of sale. As a buyer, in addition to the consideration, if you are required to pay any royalty, if you are required to pay any license fees in relation to the imported goods, and that royalty or license fee you are required to pay it as a condition of sale, that has to be added. Now here you have to be very careful. In the question sometimes they will give you royalty or license fee which is required to be paid in relation to the manufacturing of the goods, should not be added. If you are paying any royalty or license fees in relation to the manufacture, then in relation to manufacturing of the goods in India, that kind of royalty or license fee should not be added. Number two, in case if you are paying any royalty or license fee in relation to distribution rights, that also should not be added. So only which royalty or license fees in relation to imported goods, that too which you are paying it as a condition of sale. That 2 points you have to, very important, which kind of royalty should not be added. Number one, royalty which you are paying it for the purpose of manufacturing that goods in India. Number two, royalty which you are paying it for distribution rights, etc. That kind of royalty should not be added, and it must be a condition of sale. or any part of subsequent sale or disposal or use which is paid to the seller. So you are importing the article. As a condition of sale, he told that whenever you are making any subsequent sale or subsequent use or subsequent disposal, certain percentage has to be paid to the exporter. That share of the subsequent sale, disposal or use paid to the exporter should also be added. Not just that, any other payment which you are making as a condition of sale, not just the above, any other payment, post importation or pre importation, whatever it is, any other payment which you are making, which you are doing it for the in relation to that condition of sale, as a condition of sale, that also should be added. So if you add these 5 items under 10 sub rule 1 to the FOB value which has been given, then you will arrive at FOB price as per the customs. This figure we call it as FOB price as per the customs. So first you have to arrive at the FOB value as per customs. Now to this FOB value as per customs, you are required to make 2 additions under 10 sub rule 2. You are required to make 2 additions under 10 sub rule 2. Sir, what are they? Number 1, transport and handling charges. Transport and handling charges you have to add. Why? Because from the exporter's port, the goods have to come to place of importation, that is up to India's port or airport they have to come. So that transportation and handling charges you have to add. Along with that, insurance also you have to add. So if you add the transport and handling charges and insurance, then you will arrive at the CIF value. That will be the assessable value for the purpose of computation of customs duty. But when it comes to adding of the transportation and handling charge, when it comes to adding addition of the insurance charges, there are some special provisions which you have to keep in mind. So one thing is, first I'll start with transportation charges. When I say transportation charges, it should also include ship demurrage charges. If there are any ship demurrage charges, that also you can add it. Light rate charges, barge charges, this also will be included in the transportation charges. If you are incurring any ship demurrage charges, light rate charges, barge charges, that also has to be added to the value under 10 sub rule 1. So now when it comes to transportation charges, there could be a case where transportation charges are ascertainable, or there could be a case where transportation charges are not ascertainable. There could be a case where transportation charges could be ascertainable. There could be cases where transportation charges are not ascertainable. In case if the transportation charges are not ascertainable, you have to take the value as 20% of FOB value as per customs. So we will arrive at FOB value as per customs, no. This figure we will arrive at, no. So on this figure, 20% you have to calculate. So 20% of the FOB value as per customs you have to add when, if the transportation and handling charges are not ascertainable. Okay. So, and whether it is happening by air, vessel or land, whatever it is, 20% of FOB value as per customs you have to add it. Okay. Sir, what if it is ascertainable? If it is ascertainable, that means if the transportation handling charges are all ascertainable, in that case, if the transportation is happening by way of vessel or vehicle, not by air, if the transportation is happening by vessel or air, by way of vessel or land, and if the transportation charges are ascertainable, actuals we will take. Actuals we will take. Whatever has been given in the question, that we will take. In case if you are importing the goods by air and actual transportation charges are ascertainable also, but you have to restrict it. The amount which you are going to add it to the value should be restricted. How much it is, sir? Either actual transportation charges and loading and handling charges, or 20% of the FOB value as per customs, whichever is lower. That means in case if you are importing the goods by air and if the transportation charges are ascertainable, but you can't add, you should not add the complete actuals, you have to compare. So what is the actual freight, or 20% of the FOB value as per customs, whichever is lower, that much amount it will be restricted. Only that much amount of transportation charges you are required to add it. So that is what regarding how much transportation charges you are required to add. This is where compulsory one question will come. You have to be very careful about it. So transportation charges, once again I am repeating, if it is not ascertainable, well and good, 20% of FOB value as per customs. If it is ascertainable, then you have to check is the import is happening by air or vessel or land. If the import is happening by way of vessel or land, then actuals you have to add. In case if it is happening by air, you have to compare what is the actual freight, loading and handling charges, or 20% of the FOB value, whichever is lower, that much you are required to add it as a transportation charges. Then comes the insurance part. Insurance. Sir, how much insurance I have to add? Here it is very simple. If it is ascertainable, actuals. Here there is no restriction. If the actual insurance charges are ascertainable, actual insurance charges we will add. If it is not ascertainable, then we will take 1.125% of the FOB value as per customs. Then we will take 1.125% of FOB value as per customs. Here we are arriving here at no. So FOB value as per customs like this, here we are arriving at the value. On this value, 1.125% you will be required to add. So this is what regarding insurance. So, and one more thing you have to keep in mind, sometimes what will happen is in the question, they might say FOB value directly is not available. FOB value plus insurance is available. FOB value plus insurance charges are available, but transportation cost is not ascertainable. In case if the transportation cost is not ascertainable, I told 20% of FOB you have to take. Sir, but I don't have FOB value, but I have FOB plus insurance price. Now what I should do? 20% of FOB plus insurance charges you have to take. So whatever value it is available, FOB plus insurance, on that you have to multiply 20%. Sir, I don't have FOB price directly. I have FOB value plus transport and freight loading, transport and loading and handling charges I have. But I don't have insurance. Insurance is not ascertainable. I told that if insurance is not ascertainable, 1.125% of what? FOB value. Sir, but I don't have FOB value, but I have FOB value plus transportation charges. Take that value only. So take 1.125% of FOB value plus the transportation charges. On that, you have to multiply that 1.125%. Okay, so if you have FOB value exclusively available, you use it. But in some cases, these kind of situations also can be tested where FOB value plus insurance charges is available or FOB value plus transportation charges are available. In that case, whatever you are multiplying that, you multiply it on that given value. Don't try to do extra math and extract the FOB value and then do the calculation part. All that is not required. Like this, you can multiply it on FOB plus other charges. Clear? So this is what the format here you need to keep in mind. And one more extra point I will tell you. Here. Very important. This is where many students will often commit a mistake. ICAI has taken one assumption. What is that is? In case if you are taking transportation charges as 20% of FOB. In case if you are taking transportation charges as 20% of FOB, it includes transportation charges from exporter's port from exporter's factory to the port. So let me put it this way. This is very important assumption. So ICAI has taken this assumption. If you have to write your answer in line with it. In case if you are calculating transportation charges as 20% of FOB, you will get one figure, no? So that will be considered as, hey, what is this here? So you will take 20% of FOB, right? This 20% will be inclusive of freight from exporter's factory to exporter's port plus loading charges at exporter's port plus freight charges from exporter's port till place of importation. All put together, the limit will be considered as 20%. So on this, we have solved many questions also in our question bank. So this point you have to keep in mind. So whenever you are calculating the freight charges as 20% as FOB, so transportation charges, if you are taking it as 20% of FOB, so what ICAI has taken an assumption is this 20% of FOB should be inclusive of these transportation charges. It should be inclusive of loading charges, and even it will include transportation charges from exporter's port to the importer's port. So how it will affect your answer is, so let me give you one example. Just 1 minute. I will give you one simple scenario because this is where many students will commit a mistake. So that's why I wanted to explain one small part here. So let us say, for example, if you are calculating FAS price, or let me put it this way. If they have given in the question X factory price. So X factory price 1000 and transportation charges from factory to exporter's port 200. So then you will arrive at FAS. So 1200. Then you will add loading charges. Let me change the facts here. Here answer will be slightly changing. So 1000 rupees, 80 rupees is the transportation charges from exporter's factory to exporter's factory to exporter's port. It will be 1080. Loading charges are somewhere around 20. Now you will get 1100. This is FOB value as per customs. Let us say, for example, no additions are there under 10 sub rule 1. So this will be FOB value. To that we will add freight. So freight is not ascertainable. What we will do? 20% of 1100 we will take, no? So if I take 20% of 1100, how much I will get? 220 I will get. This 220 you should not add. Why? Because ICAI, especially ICAI, has taken assumption that when we are calculating that 20%, this is inclusive of freight from, this is inclusive of charges from the exporter's factory till the place of importation. So that means from this 220, I have to exclude the transportation charges which I have already included from the exporter's factory to the exporter's port. 80 you have to exclude it. Loading charges which have been incurred at the exporter's port, that I have to exclude it. So that 100, if you exclude it, 110 only you have to add it here. This 110 only you have to add it here. So this is one important assumption which ICA has taken. We have solved n number of questions in our classroom. So this point you have to keep in mind when you are writing the answer. This is where you are going to lose the marks. Many students miss on this small adjustment. I hope you will remember this. Now, coming to the next point. So that's all. These are the important points regarding valuation. So now we will try to proceed further with the subsequent discussion. Now, assessable value. So assessable, these are now coming to the different types of duties. The next discussion, whatever we are going to have, is various types of duties under Customs Act. What and all are the different types of customs duties which you will be liable to pay. So first you will arrive at the assessable value. Just now, as I have told, how to arrive at the assessable value. So we follow the above valuation rules, and finally we will arrive at the assessable value. Now on this assessable value, what and all are various kinds of customs duties which will be payable. First one, you will be able to have basic customs duty. You are required to pay basic customs duty at a certain percentage. In most of the cases, they say that basic customs duty is 10%, but need not be the case. Always basic customs duty need not be 10%, but in majority of the cases, they will say that customs duty is at 10%, like that they will say. So this customs duty is required to be calculated on percentage of assessable value. So let us say, for example, you have 1 lakh rupees of assessable value. So let us say if they have given 10% as a basic customs duty. So this 10% you are required to calculate it on assessable value. So 10,000. Then next kind of duty, it will be social welfare surcharge. There will be something called social welfare surcharge, and this social welfare surcharge is always fixed. It will be 10% on the basic customs duty, not on the assessable value. It will be 10% of the basic customs duty. So what is the basic customs duty? 10,000. On that 10,000, 1%, 10% if I do, the amount will come to 1,000 rupees. Okay, so this here I have given it wrong. So 1 lakh rupees is the value, 10,000 rupees is the customs duty, 10% on 10,000, it will come to 1,000 rupees. Thereafter, there will be something called countervailing duty under section 3 subsection 1 and 3 subsection 3. Sir, what is this countervailing duty? In case whatever articles you are importing, if the same article is manufactured in India, if they attract excise duty, to compensate for that excise duty, now when you are importing that kind of article from outside of India, they will also impose something called countervailing duty under 3 subsection 1 and 3 subsection 3. What is the main objective? To counterbalance the excise duty which is leviable in India. You are importing such an article from outside of the country. If the same article is produced in India, it is liable for excise duty. If the same article, if you are importing from outside of India, it might become cheaper. So to compensate for that, what the Indian government will do, to counterbalance that excise duty which will be levied in India, they will impose something called countervailing duty, or even additional duty also they will use it. So countervailing duty or additional duty they will impose to counterbalance the excise duty, and it will be a certain percentage. They will tell you in the question. If at all they want to ask a question on countervailing duty, they will tell you in the question what will be the percentage, and that percentage you have to multiply in what? On assessable value plus basic customs duty and social welfare surcharge. So you take the assessable value, to that you add basic customs duty, to that you add the social welfare surcharge, you will arrive at one value that we call it as landed value. In our example, 1 lakh rupees is the assessable value, basic customs duty 10,000, social welfare surcharge 1,000, total it will come 1,11,000. On that 1,11,000, whatever percentage has been given, that you have to multiply. Okay, so countervailing duty will be applied as a percentage on the landed value. So what is landed value? It will be assessable value plus basic customs duty plus social welfare surcharge. All these three put together, we call it as landed value. On that landed value, percentage will be given in the question. That percentage you have to multiply. So currently, excise duty is leviable on alcoholic liquor for human consumption, and also 5 petroleum products and tobacco products. If you are importing these articles only, there will be countervailing duty. Then we have something called Agricultural Infrastructure Development Cess, AIDC we call it. Only on few products, they will impose something called AIDC. They will notify the products. Only on that notified products, they will impose something called AIDC. So if the product which you are importing is liable for AIDC, they will give you percentage on the question. That percentage you have to multiply it on assessable value, not on landed value. On assessable value, you have to multiply it. Clear everyone? So first category. What is the first category? Basic customs duty. There will be something called social welfare surcharge. To counterbalance the excise duty, we have something called countervailing duty under 3 subsection 1 and 3 subsection 3. Then we have something called AIDC on notified products. So now if you add this 1 plus 2 plus 3 plus 4. So if you add basic customs duty, social welfare surcharge, countervailing duty and AIDC, you will get a customs duty excluding additional customs duties and IGST and compensation cess. Excluding additional customs duty, excluding IGST, excluding compensation cess, whatever customs duty is there, that you would have arrived at. So if you do 1 plus 2 plus 3 plus 4. right? Next. So next category is additional customs duties. Sir, what are additional customs duties? There will be something called safeguard duty. There will be something called safeguard duty. If certain article is getting imported in large quantities, which is having an impact on the domestic industry, then the government can take safeguard measures. They can take two kinds of safeguard measures. One is a tariff quota. They can impose something called tariff quota. That means they will put a restriction. Beyond this much quantity, you can't import. Or alternatively, what they can do is they will impose something called safeguard duty. They will impose something called what? Safeguard duty. So that safeguard duty also, the percentage will be mentioned in the question itself. In case if they are asking you to calculate what is the safeguard duty, that percentage they will mention in the question itself, and that percentage you have to multiply it on either on assessable value or landed value. That they will say it in the question once again. If they are not saying anything, take assessable value. If they are not saying anything, take assessable value. State your assumption. Write your assumptions there. Okay, so safeguard duty will be generally a percentage, which will, that percentage will be given on the question. It will be multiplied either on the assessable value or landed value as mentioned in the question. If they are not mentioning anything, if they are only telling safeguard duty, you calculate it on assessable value, state your assumption clearly. Okay, next. Similarly, anti-subsidy duty. Sir, what is this anti-subsidy duty? So what is this anti-subsidy duty is, let us say for example, there is one exporting country. Let us say China. There is an exporting country, China is there. So what is happening is, in China there is one exporter, there is one manufacturer in China. Now Chinese government is giving subsidy to this person if he makes the export to India. If this exporter who is in China, if he is making the export to India, for that purpose Chinese government is giving him a subsidy. So to make that exports very cost effective, so that's why what they are doing is, in order to counterbalance that, the government will impose something called anti-subsidy duty. So if you read it here, anti-subsidy duty, that also, what is the purpose? To counterbalance the subsidy given to exporter by their respective government. So there is an exporter in China. If that exporter is making the exports to India, Chinese government is giving him the subsidy, is trying to compensate him. So automatically what will happen, if that respective government is giving the subsidy to him, he will export the goods to India at a very cheaper price. So those products will become very cheaper. When those products become very cheaper, people will start importing more. Domestic industry in India will get affected. So to counterbalance that, this customs department will impose a duty called anti-subsidy duty. It will also be certain percentage. That percentage you will multiply it on either assessable value or landed value as mentioned in the question. They will mention in the question, as mentioned in the question, you are required to multiply that percentage either on assessable value or landed value. Next, there will be something called anti-dumping duty. Sir, what is this anti-dumping duty, when it will be imposed? So when anti-dumping duty will be imposed is, let us say for example, there is one exporter in China. That exporter is manufacturing one product. If he is selling that product in the domestic market, if he is selling that product in China itself, he is selling at $100 per unit. On the other hand, if he wants to sell that product to India, he is selling at $80 only. He is dumping it. He is dumping so much of quantity into India. So where he is selling that price. So once again, if you relate this example, there is an exporter in China. He is manufacturing one product. Let us say for example, he is manufacturing this mouse. So that exporter in China, a manufacturer in China, is manufacturing the mouse. If he is selling that mouse in China itself, in his domestic country only, if he is selling at $100. But if the same is exported to India, he is selling it at $80 only. So in these circumstances, to counterbalance this, the government will impose something called anti-dumping duty. To prevent this dumping of goods into India, the government will impose something called dumping duty, anti-dumping duty. Sir, how much is anti-dumping duty? It will be lower of dumping margin or injury margin. How much amount of anti-dumping duty will be imposed? Lower of either dumping margin or injury margin. Sir, what is dumping margin, sir? Dumping margin will be normal price minus export price. So that means in his local, in the domestic market, let us say for example, he's in the domestic market, he's selling at $80, but he's exporting at in the domestic market he's selling at $100, but he's exporting at $80. So now what is the dumping margin? $20 is the dumping margin. On the other hand, injury margin. Sir, what is injury margin? Selling price in India and the landed cost. Let us say for example, if the same product is getting sold in India, there it will be 110 in India, whereas landed value of that article imported into India is, let us say for example, 95 is the landed value of that article into India. So what is the injury margin here? $15. So whichever is lower. So $15 will be lower here. That much will be imposed as a anti-dumping duty. Clear? So what is anti-dumping duty? The purpose you might have understood, but what will be the amount of anti-dumping duty? It will be lower of dumping margin or injury margin. Sir, what is dumping margin? Normal price minus export price. Sir, what is injury margin? It will be selling price in India minus landed cost of that article. Whichever is lower, that much amount of anti-dumping duty will be imposed. So finally, you will arrive at it. So if you take this A figure, which contains customs duty excluding additional customs duty, IGST and compensation cess, to that if you add safeguard duty, anti-dumping duty, anti-subsidy duty, you will arrive at total customs duty excluding IGST and compensation cess. So you will arrive at total customs duty excluding IGST and compensation cess. That amount of customs duties you will get. Now, two more taxes will be imposed, not two, three taxes will be imposed. One is IGST. IGST also you are required to pay. When you are importing the goods, even you are liable to pay IGST also. Whatever rate of GST that will be applicable for the products in India, the same rate of IGST will also be imposed on the articles imported. So even you will be liable to pay the IGST at the rate. So whatever is the rate applicable for that products in India, at the same rate you will be liable to pay IGST even on your imports also. Let us say a product will be applicable at 18% of IGST. So this 18% will be applied on what? This 18% will be applied on total assessable value and total customs duties. Here you will have the total customs duties, no, starting from here, basic customs duty, social welfare, countervailing, agricultural sales, safeguard duty, anti-dumping duty, anti-subsidy duty. After adding all these duties, take the assessable value, add all these duties, you will get one value. On that value, you are required to multiply the applicable rate of IGST. They will arrive at the IGST figure. Okay, then even GST compensation cess also will become applicable. Sir, how much amount of GST compensation cess? Anyhow, from 31st of March 2025, it is not there, but it is relevant for May 26 attempt. So for May 26 attempt, if at all they give a question regarding they give a point regarding GST compensation cess, you have to calculate it. So GST compensation cess also will be imposed. So whatever GST compensation cess which is applicable for the product in India, the same rate of GST compensation cess you are required to pay it on imported articles also. So let us say GST compensation cess is 25%. On what value, sir? On whatever value you are calculating IGST, on whatever value you are calculating IGST, on the same value you have to multiply the GST compensation cess rate also. On whatever value you are calculating IGST, on the same value even you are required to calculate that GST compensation cess percentage also. By that you will arrive at the GST compensation cess amount. But here there is one important point you have to keep in mind. Here there is one important point you have to keep in mind. Sir, what is that? For the purpose of value for IGST or GST compensation cess, one thing which you have to keep in mind is, see, normal value is assessable value plus all customs duties, like the way we have calculated. Assessable value plus all customs duties, assessable value plus B. So either that value or in case if the goods are lying in the warehouse, if any sale has happened before clearance for home consumption, if the goods are sold in the warehouse, so that transaction value of the warehoused goods, whichever is higher, on that value you are required to calculate the IGST percentage. Able to understand? So either take this assessable value and add all the customs duties, or in case if the goods are lying in the warehouse and the goods are sold when the goods are still lying in the warehouse, the transaction value at which the warehoused goods are sold, so that transaction value you have to compare, either assessable value plus all customs duties or last transaction value. In case if the warehoused goods are sold multiple times, the last transaction value you have to take, or transaction value of that warehoused goods, whichever is higher, that value you have to take. On that you have to multiply the applicable rate of IGST. The same thing will become applicable for GST compensation cess. But this comparison you are required to do only when the goods are still lying in the warehouse and before clearance for home consumption, that sale of warehouse goods is happening. So in that case, you have to compare that assessable value plus all customs duties or transaction value of the warehoused goods, whichever is higher. On that you will be liable to pay the amount of GST compensation cess as well as IGST. But this comparison, once again I am telling, this comparison you are required to do only when the goods are lying in the warehouse and they are sold before clearance for home consumption. Clear? Next. Apart from all this, there will be something called special additional duty at the rate of certain percentage on assessable value plus this total customs duties. And this special additional duty will be imposed to counterbalance VAT in India. In case if you are importing some article and if that article is liable for VAT in India, local sales tax in India, to counterbalance that, even special additional duty also will be imposed at a certain percentage. They will give you in the question. So that percentage you have to multiply it on assessable value plus total customs duties. However, currently this special additional duty will become applicable only on the that 5 petroleum products. So whatever that 5 petroleum products are there, so on that 5 petroleum products, they will be imposing that special additional duty. Very rarely they will ask a point regarding special additional duty, but IGST, GST compensation says that is going to be very, very important. Clear? So these are all the various kinds of customs duty and the manner of calculation of all that customs duties. I hope you are all able to recollect the provisions. Now, coming to the next important concept, see, there are some concessions. So under Customs Act, we have some concessions, especially in case of import. In certain circumstances, the importer will be given some concessions or relaxations. 4 such sections are there where concessions will be given to the importer. One is section number 13, which is talking about pilferage. Then we have 23 subsection 1 talking about remission. 23 subsection 2 talking about relinquishment. Then we have section number 22 talking about abatement. So let us try to understand when each of this will become applicable. First of all, coming to section number 13. Sir, what is section number 13? Pilferage. Sir, what is pilferage? Petty theft. So you have imported the goods, and after the goods are unloaded, but before passing an order for clearance, for home consumption, or before passing an order for warehousing, the goods are imported and the goods are unloaded at the port or airport, and after unloading, but before passing an order for home consumption or before passing an order for warehousing, if there is any petty theft which has taken place, if any small quantities have stolen, you have imported some goods, in that petty theft has happened, then in that case what will happen is the importer will not be liable to pay the amount of customs duty on that small quantity which has been stolen. Let us say, for example, if you are importing some 1,000 quantity of the mobile phones from abroad, the goods have reached, the vessel has reached the port and the goods are unloaded. After unloading, but before passing an order for clearance for home consumption or warehousing, some 10 quantity are stolen. So now as an importer, you will be liable to pay the amount of customs duty only on 990 quantity. On the 10 quantity, you are not liable to pay the amount of customs duty. Sir, but who will pay the amount of that customs duty on the 10 quantity which has been stolen? Custodian. Who will pay? Custodian has to pay. So on that pilferage, importer will not be liable to pay any customs duty, but the custodian will be liable to pay the amount of customs duty. But one important thing you have to remember, timing. Sir, when that theft should have taken place? After unloading, but before passing an order for clearance for home consumption or warehousing. So in that cases, you will not be liable to pay amount of customs duty on that small quantity which has been stolen, but custodian will pay it. But here one point you have to remember, in case if at a later point of time that stolen goods are found out and if they are restored to the importer, in case if the stolen goods are found out and later if they are getting restored to the importer, on restoration, if the goods are found later and they are restored to the importer, then the duty will become payable. Then they will be liable to pay. So let us say, for example, that 10 quantity whatever has been stolen, later it was recovered and now they are restoring it to the importer. At that point of time, importer will be liable to pay the amount of 10 quantity, liable to pay the customs duty on the 10 quantity which has been restored. One important point you have to remember here, let us say, for example, if in the exam they are asking a question, the goods are warehoused. You have filed an into-bound bill of entry and the goods are kept in a warehouse. In the warehouse, petty theft happened. In the warehouse, pilferage happened. Can the importer, when he is filing the ex-bond bill of entry, can he claim that concession under section number 13? Not possible. Not possible. Why? Because section 13 clearly says the timing. The goods should have been pilfered after unloading, but before passing an order for home consumption or before passing an order for warehousing. So once the goods have been moved to warehouse, after that pilferage section 13 benefit will not become applicable. The goods should have been pilfered either before passing an order for clearance for home consumption or before passing an order for warehousing. So this point you have to remember. Thereafter, we have 23 subsection 1, which is remission. Sir, what is remission? Remission means refunding it back. Remission means refunding the amount of customs duty paid. So remission, when it will become applicable? Remission will become applicable when there is a total loss. Pilferage, petty theft. That means majorly quantity is available, but small theft has taken place. But section 23 subsection 1, remission will come into picture when the goods are completely stolen. When the goods are completely destroyed. Beyond recovery, they are destroyed. Let us say, for example, after the goods have been unloaded, at the time of unloading or after unloading, some fire accident has happened. Because of the fire accident, entire goods, whatever you have imported, got burnt. So some calamity has happened because of which the goods are completely destroyed. So in those cases, what will happen is whatever amount of customs duty you have paid, that you can claim the refund of it. So remission 23 subsection 1, when it will become applicable, when there is a total loss of the goods which is beyond recovery. And when it should have happened, timing is also very important, before actual physical clearance. Here they are not saying before passing an order for clearance, but in fact what do they say here? Before actual clearance. That means before you are actually clearing the goods for home consumption. That means this destruction could have happened either in the customs area, or even the destruction could have happened in the warehouse also. You have filed a into bond bill of entry and move the goods to the warehouse. In the warehouse, if the destruction has happened, then also you will be eligible to claim the refund of that customs duty, whatever you have paid under 23 subsection 1. Okay, so you have to pay the important attention to the terminology here. So when that destruction should have happened, it should have happened before actual clearance, not before passing an order, before actual clearance, before actual physical clearance for home consumption. That means even when the destruction happens in the customs area or in the destruction is happening in the warehousing also, you can claim the refund of the taxes. Remission under 23 subsection 1. So what will be the impact here under 23 subsection 1? If the importer has paid make the payment of any customs duties, that will be refunded back to him. And one point you have to remember here, that loss must be due to natural causes, fire or flood or accident, or it have been complete goods have been stolen, something like that. So the loss should be due to natural causes or accidents, some unavoidable accidents and all. And here, will there be any possibility of restoration? No. Here, restoration concept itself will not become applicable. Why? Because goods are completely destroyed. Beyond recovery, they are destroyed. There is no question of restoring the goods back to the importer. So this is what regarding remission. Now we have 23 subsection 2, which will talk about relinquishment. Sir, what do you mean by relinquishment? Giving up the title. Giving up the title. Let us say, for example, you have imported the goods. After you have imported the goods, let us say whatever goods you have imported, those are not according to the contract. Those are not not usable for you. Those are not suitable for you, or the goods are there, some damage has happened because they are no longer fit for your purposes. So in those circumstances, what you can do is you can relinquish your title to the goods. You can say that I no longer want these goods. Keep the customs department. You only keep them. So that we call it as relinquishment. So because of the relinquishment also, what will happen is when you are giving up your title on the imported goods, you will not be liable to pay any customs duty. Customs department will not ask you to pay any amount of customs duty because you are giving up your title. You are saying, I don't want the title of the goods. So that is what 23 subsection 2. So when relinquishment will become applicable? When abandonment of title. You are abandoning your title. You are saying, I no longer want these goods. I don't have any ownership of the goods. I am giving away my ownership of the goods. So the goods are actually there, but you no longer need them. There could be n number of reasons. Might be the goods, as I have told, goods are not according to the quality which you have ordered, or goods might be some different goods which the importer has sent. So quality is inferior. Whatever could be the reason. So in case if you are relinquishing, but this also, when you can relinquish, till what point of time you have the right to relinquish? Before passing an order. Here also, before passing an order for clearance for home consumption or before passing an order for warehousing. Once order for clearance for home consumption or once order for warehousing has been passed, there is no way you are coming and saying, no, I no longer want these goods. You can't say that. So before passing an order for home consumption or before passing an order for warehousing, you could relinquish your goods. In case if you are relinquishing, you are no longer liable to pay the GST. But one important point you have to keep in mind: you cannot relinquish if you have committed any offense. You can't relinquish if you have committed any offense. Let us say, for example, you are importing the drugs, narcotic drugs you are importing, which is prohibited. Now the goods have come to the customs area, then the customs authorities have found out that you are importing the drugs. Now you can't go and say there, no, I am relinquishing my title. I am no longer the owner of these goods. I am no longer the owner of these drugs. You only keep it. Like that, can I say and escape my liability? No. Why? Because here you have committed an offense. If you have committed any offense, so then you can't do the relinquishment. You have to face the consequences. And in case if you are relinquishing the title, what you should do is you should endorse the document of title in favor of the Commissioner of Customs. You will have document of title, the bill of lading, airway bill will be there, right? That you have to endorse it in favor of the commissioner. So you have to transfer the title completely to that customs authorities. So that is what regarding relinquishment. Then we have something called section number 22, abatement. What do you mean by abatement? Reduction in the amount of customs duty payable. Sir, when I can get that abatement? So they say that when there is a damage or deterioration. Goods are there, but the goods are damaged or they are deteriorated because of passage of the time or something, or because of some contamination, goods are deteriorated. So either goods are damaged, it could be a physical damage, or they could have been deteriorated. That means they might have been spoiled. Let us say, for example, you are importing some eatable items. Let us say you are importing some dry fruits. Because of water contamination during the voyage, because of the water contamination, they have lost their quality. Deterioration has happened. Or let us say, for example, you have imported the goods. At the time of unloading, some damage has happened. Some damage, the goods are cracked or something like that. Because of it, there will be a reduction in the value. So in case if you are importing the goods and those imported goods either have suffered some damage or deterioration, then you can claim abatement, then you can claim the reduction of the customs duty. But here is one important thing we have to keep in mind. Sir, when the damage or deterioration should have taken place? Before or during unloading? Before unloading or at the time of unloading, either there could be a damage or deterioration. At the time of unloading or before unloading, there could be a damage or deterioration. or damage after unloading but before deterioration. The goods are unloaded but before examination by the proper officer, then the damage could have happened. Or even the damage could have taken place in the warehouse also. You have kept the goods in the warehouse. You have passed an into bond bill of entry and kept and moved the goods to the warehouse. In the warehouse also, the damage could have happened. So very important things you have to keep in mind. See, deterioration is permitted only in one case. Deterioration either before or during unloading. Whereas damage is permitted either before or during unloading, after unloading but before examination, or even damage could have happened in the warehouse also. But deterioration should take place only before or during unloading. If after unloading deterioration happens, then there is no way you can claim the abatement under section number 22. If you have kept the goods in the warehouse, then the deterioration happened, then also no way you can claim the section number 22. So deterioration is permitted either before unloading or during unloading. But damage at any time it could happen. It could be before unloading, during unloading, or it could be after unloading, or it could be even in the warehouse also. So in these circumstances, you can claim abatement. So importer, what will be the consequence if you claim the abatement? Your customs duty payment will be proportionally reduced. Proportionately it will be reduced. Sir, how it will be proportionately reduced? So let us say, for example, you are importing total 1 crore worth of goods. Let us say you are importing total 1 crore worth of goods. On this total 1 crore worth of goods, let us say you are liable to pay customs duty amounting to some 10 lakh rupees. Some 10 lakh rupees of customs duty you are required to pay. But these goods, whatever you are importing, they have either been damaged or deteriorated. Now, after damage, what is the value? What is the value of the damaged goods? Initially, if the goods are in proper condition, the value is 1 CR. Now, the goods are damaged. No. When the goods are damaged or deteriorated, its value will get reduced or not. So, let us say after the damage or deterioration, the value of the goods are coming to 60 lakh rupees only. So, now you will be liable to pay the original customs duty into value of the damaged goods 60 lakh rupees divided by value of the original quantity, that is 1 crore rupees. So, you will be liable to pay only 6 lakh rupees of customs duty. Only you will be liable to pay 6 lakh rupees of customs duty. The balance 4 lakh rupees is your abatement. Abatement means a discount. The abatement is 4 lakh. Discount. Abatement is 4 lakhs here. The customs duty payable is 6 lakh rupees. So like this, proportionately they will reduce it. But one thing you have to keep in mind, you can claim abatement under section number 22 only when that accident because of which damage or deterioration is happening, that should not be due to negligence of the importer or his employee or his agent. Even employee also will be added here. So because of whatever reason the damage or deterioration is happening, that should not be because of the negligence of either importer or his agent or his employee. Completely beyond out of his control, that damage or deterioration should have taken place. Clear? So these are the 4 cases, 4 important cases where concessions will be given to the importer. Section 13 pilferage, section 23 subsection 1 remission, 23 subsection 2 relinquishment, section number 22 abatement. So what is more important here is timing is going to be very, very important. As I have told you, when what is permitted, the timing is going to be very, very important. So please be careful about this timing. So when that event should have happened in order to claim that concession. So for pilferage, one time limit is there. For remission, one timing is there. Relinquishment, one timing is there. Abatement, another timing is there. So if I recollect it once again, pilferage, that petty theft should have happened before passing an order for clearance for home consumption or warehousing. So remission should have happened before actual clearance for home consumption. Relinquishment, once again before passing an order for clearance for home consumption or warehousing. 22 abatement. So before unloading, after unloading, even in the warehouse also. Damage case, but deterioration only before unloading or during unloading. Clear? Right. So this is what regarding some concessions which are important from the examination point of view. So one more last thing which I wanted to cover, very often where they ask the question is baggage rules. In the baggage rules also very frequently these days they are asking the question. Let us try to comprehensively cover the baggage rules. So what is baggage first of all? So that luggage, passenger's luggage, either accompanied or unaccompanied. So whether that baggage you are bringing it along with you, that luggage is coming not with you. It could come even before also, even after also. So whatever it is, the baggage, the passenger's luggage, that we call it as baggage. Now, whenever a person is coming into India or whenever a person is living outside of India, he will bring some luggage and all, right? So for that luggage, especially when a person is coming into India, in the baggage, whatever his articles he is bringing, regarding that, some rules are there. So some articles in the baggage are exempted. You are not liable to pay customs duty for some items in your baggage. For some items, you are required to pay the baggage, and for that baggage duty payment also, there will be some special provisions. There are some concessions also available. So let us try to understand what is that allowances, what are exempted, how much you are liable to pay and all. We will try to have a quick look at it. But first of all, what will be the rate of customs duty on the baggage? The rate of customs duty on the baggage is going to be 35% customs duty rate. Along with that, you will have 10% of social welfare surcharge. To total, it will come to 38.5%. the effective rate of baggage is going to be 38.5%. You, in case if you are liable to pay customs duty on your baggage, you will be liable to pay that customs duty at the rate of 38.5%, except a few articles. On few articles, you will be liable to pay 110%. On few articles, you will be liable to pay 110%. What are that few articles on which you will be liable to pay 110% is firearms, cartridges of firearms greater than 50, cigarettes greater than 100 sticks, or cigars greater than 25, or tobacco greater than 125 grams. So on these three articles, firearms, cartridges of firearms greater than 50, cigarettes greater than 100 sticks, cigars greater than 25, or tobacco greater than 125 grams. This is the third category of the product. That is tobacco related products. On these articles, you will be liable to pay 110% of the customs duty. But usually what you have to remember is, in usual cases, you will be liable to pay the customs duty on your baggage at the rate of 38.5% you are liable to pay. Now, what are the allowances? First, there is something called general duty free allowance, which is given under rule number 3 and rule number 4. There is something called general duty free allowance. So the customs department will let you take the goods up to with certain concessions. What are they? Now there are two rules actually. Rule number 3 will talk about if you are a person coming from other than Nepal, Bhutan or Myanmar. Whereas rule number 4 says if you are importing the goods, if you are arriving from Nepal, Bhutan, Myanmar, in that case what will be the allowance? So we'll try to understand in both the cases. Remember one thing, if it is infant, who is infant? Infant means less than 2 years. For infants, what is allowed duty free is only used personal effects. Here also used personal effects. For infants, it will be only used personal effects. So whatever used personal effects are there, that only will be allowed to be in the baggage without payment of any duty. So for infants, only used personal effects. Whereas in case first we will talk about other than Nepal, Bhutan, Myanmar. So in case of infants, in both the cases, it will be only used personal effects that they can bring in the baggage without any duty. So first we will talk about this case. If a person is coming from other than Nepal, Bhutan, Myanmar, if the person is an Indian resident or a foreigner residing in India or a tourist of Indian origin, 3 persons, Indian resident or a foreigner residing in India or tourist of Indian origin. For these people, what is the duty free allowance? First, used personal effects, no limit. All your used personal effects like your clothes, wearables, etc. So your used personal effects, no limit, no value limit. Used personal effects are completely duty free. You are not liable to pay anything on that. Travel souvenirs also duty free. And any other article, excluding the articles in annexure number 1, up to a value of 50,000 rupees, you are not liable to pay the amount of customs duty. So used personal effects, duty free. Travel souvenirs, duty free, no limit. Apart from that, if any other articles are there, excluding the articles which are mentioned in annexure 1, excluding these articles, whatever other articles are there, that you can bring them duty free up to a value of 50,000 rupees. So what are that goods which are mentioned in annexure 1? So if you have to remember this list: firearms, cartridges of firearms greater than 50. Cartridges of firearms greater than 50. That means, let us say for example, if I'm bringing 75 cartridges, out of that 50 cartridges you can keep it in the general allowance. 50 up to 50 it will come here, but only whatever excess more than 50 it is there, it will only be falling under annexure 1. That will not be counted into that general free allowance of 50,000 rupees. Okay, and similarly, cigarettes greater than 100 sticks, cigars greater than 25, or tobacco greater than 125 grams, that will not be allowed for general duty free allowance. Here also I will give you one example. Let us say you are bringing cigars, some costly cigars you are bringing. Let us say 30 cigars you are bringing. Up to 25 that can be claimed here. Up to 35 that can be considered for the purpose of general duty free allowance. Whatever excess 5 quantity is there, that will not be included in the general duty free allowance. Understood? Not just that, alcoholic liquor or wines greater than 2 liters. So alcoholic liquor or wine up to 2 liters, that can be considered here. That can be considered in the general free allowance of 50,000 rupees. More than 2 liters, that will not be considered in general duty free allowance. On that you will be liable to pay the amount of customs duty. Similarly, gold, silver in any form other than ornaments, other than jewelry. Sir, what will be other than jewelry? Like raw gold you are bringing, this gold biscuits you are bringing. So that will also be not included in the articles of that general duty free allowance. Similarly, flat panels, LCD, LED or plasma televisions. So 6 products here. In annexure 1, 6 products. What are they? Firearms, cartridges or firearms greater than 50, cigarettes greater than 100 sticks or cigars greater than 25, or tobacco greater than 125 grams. Alcoholic liquor or wines greater than 2 liters, gold or silver in any form other than ornaments, flat panel, LCD, LED, plasma television. So these will not be allowed for general duty free allowance. Apart from that, all other articles you can bring it under general duty free allowance up to 50,000 rupees. If value of all other articles exceeds 50,000 rupees, on that value which has exceeded 50,000 rupees, you will be liable to pay the amount of customs duty at the rate of 38.5%. Clear? Able to understand? Sir, what if it is a foreign tourist? What if a person is coming from other than Nepal, Bhutan, Myanmar, but if he is a foreign tourist, everything will remain the same. Used personal effects, no limit. Travel souvenir, no limit. Articles excluding Annexure 1 articles up to a value of 15,000. How much? Up to a value of 15,000 rupees only will be permitted. So for foreign tourist, only 15,000 general free allowance. Apart from used personal effects and travel souvenirs. For other than foreign tourist, 50,000 rupees. Clear? Next. Other case. In case if the person is coming from Nepal, Bhutan, Myanmar, whoever could be the person, used personal effects, exempted, travel souvenirs, no limit, articles excluding Annexure 1 up to a limit of 15,000 rupees only. Up to a limit of 15,000 rupees only. In case if the person is coming from Nepal, Bhutan or Myanmar by way of land, through land if he is coming, only used personal effects, travel souvenirs, there is no limit of that 15,000. For other articles, even you are bringing 100 rupees also, 200 rupees also, you will be liable to pay the amount of customs duty. If you are coming by way of land. So from Nepal, Bhutan, Myanmar, only used personal effects and travel souvenirs, other articles are not permitted. That means permitted but not duty free. In case if you are coming by other than land, then used personal effects, travel souvenirs and articles excluding Annexure 1 up to a value of 15,000 rupees, you are not required to pay the amount of customs duty in your baggage. Understood? Clear? So this is what general duty free allowance, talking about rule number 3 and rule number 4. Okay, so we have covered it. So then along with that, what are the products in Annexure 1 also I have covered. There is something called Annexure 2. I will come back to that later. Next, we have rule 5, jewelry allowance. Sir, will jewelry not come under used personal effect? No, it should never come. They have clearly told that in case of in used personal effect definition, jewelry will not be included. So for jewelry, we have separate allowances. Rule number 5 talks about it. So if you are a gentleman and you are a passenger residing abroad for more than 1 year, this allowance will become applicable only if you are a passenger residing abroad for more than 1 year. You should be residing in abroad for more than 1 year. Then only you can enjoy that rule 5 allowance. What is it? If you are a gentleman, jewelry up to a weight of 20 grams with a value cap of 50,000 rupees. So there is 2 limits actually. Weight related limit is also there, value is also there. So up to 20 grams or value cap of 50,000 rupees for a gentleman. In case of a lady passenger, jewelry up to a weight of 40 grams with a value cap of up to 1 lakh rupees. Now you have to be very careful. Let us say for example, if this weight related restrictions will not become applicable now because per gram the rate has increased so much today. Yes or no? So these are some old limits, but I will tell you a typical scenario. Let us say if a gentleman is bringing 18 grams of jewelry up to a value of 45,000. Up to a value of whose value is 45,000. So how much will be the jewelry allowance? 45,000 rupees. Why? Because it is well within the limit. Let us say one person is bringing, let me put it this way. One person is bringing some 25 grams of jewelry up to, and whose value is, let us say for example, whose value is 80,000. Whose value is 80,000. So now I have to calculate the proportionate value of 20 grams. So what will be the value of 20 grams? So 80,000 into 25 divided by 20. So 80,000 into 25 divided by 20. If I do it, I will get a value, into 20 divided by 25. So 80,000 into 20 divided by 25. If I do it, I am getting somewhere around 57,000. Is it so? Correct only. Just 1 minute here. Calculator is 64,000 I am getting. So 20 grams of gold value is 64,000, but I have a maximum cap of how much? 50,000. So how much is duty free allowance? 50,000 rupees is only duty free allowance. So out of 80,000 rupees, only 50,000 is duty free allowance. Remaining 30,000 rupees will be dutiable. But this 30,000, can I add it in the general duty free allowance? Yes. Can I claim general duty free allowance if available? Yes. For this, you can claim that general duty free allowance. Along with other articles, you can mix it up. Okay, so for a gentleman, jewelry up to a weight of 20 grams with a value cap of 50,000. For a lady passenger, jewelry up to 40 grams with a value cap of 1 lakh rupees. Understood? So up to this limit, let us say for example within 20 grams only, if you are bringing, let us say lady passenger is there, she is bringing 1,20,000 worth of gold and weight is, let us say for example 30 grams only, but maximum she can claim how much up to a value cap? 1 lakh rupees. So 1 lakh rupees only she can claim it as jewelry allowance under rule 5. Sir, that excess 20,000 is there? No. Is it dutiable? Yes. Sir, can I claim general duty free allowance under rule 4 if available? Yes, you can claim general duty free allowance under rule 4 for this. That within that 50,000 rupees, within that 15,000 rupees of limit, you can claim it here. But one important condition many students often miss is, in order to avail that rule number 5 jewelry allowance, the passenger must be residing abroad for more than 1 year. Passenger must be residing abroad for more than 1 year from any country. When you are residing abroad for more than 1 year, then only you can claim the jewelry allowance under rule number 5. So then we have rule number 6 in addition to general allowance. In addition to rule number 4 and 5, rule number 3, rule number 4 or rule number 5, the person will also enjoy some special allowances under rule number 6. But who can enjoy that special allowance? A person who is engaged in a profession abroad, or who is transferring, or not both guys. A person who is engaged in a profession abroad. You are engaging in some profession abroad, or a person who is transferring his residence to India. Anyone, not both. It is not a cumulative condition. Either you are a person, you are carrying out some profession abroad, or you are transferring your residence to India. He will be allowed duty-free clearance of personal and household articles other than those mentioned in Annexure 1 or Annexure 2, but including articles mentioned in Annexure 3 up to an aggregate value as given below. So that means what they are telling, in case if you are engaging in some professional abroad India, now you are coming to India, or if you are transferring your residence to India, in that case, in addition to your general allowances, in addition to your jewelry allowances, in addition to all that, even you can claim allowance for personal and household articles other than those mentioned in Annexure 1 or Annexure 2, including Annexure 3. Annexure 3 you need not remember. Just you have to remember what you cannot claim under Rule 6. Annexure 1 you can't claim. Even the goods which are mentioned in Annexure 2 also you can't claim for allowance under Rule 6. Sir, what is that? Annexure 1 we have already covered. Annexure 1 is firearms, cartridges of firearms greater than 50, cigarettes greater than 100 sticks, or cigars greater than 25, or tobacco greater than 125 grams, and alcoholic liquor or wines greater than 2 liters, gold or silver in any form other than ornaments, flat panel, LCD, LED, plasma, or televisions. Apart from that, Annexure 2, even these are also not permitted for duty-free allowance under rule number 6. So what are that articles in Annexure 2? Color television, video home theater system, dishwasher, domestic refrigerator of capacity above 300 liters. Up to 300 liters permitted. Above 300 liters you can't claim allowance under Rule 6. Deep freezer, video camera plus combination with one or more. So video camera with a TV receiver or sound recording or reproducing apparatus, video reproducing apparatus, cinematographic films of 35mm and above, gold or silver in any form other than ornaments. Gold or silver in any form other than ornaments. So here it is double entry actually. Here anyhow you have covered gold or silver in any form other than ornaments. Once again they are trying to say it here. Okay. So apart from these articles, apart from this Annexure 1 and 2, other personal and household items you can import it duty free. But only rule number 6 allowance will be permitted for 2 persons if you are a person engaged in profession abroad or if you are transferring your residence to India. But there are limits. So if your duration of stay abroad, if you are staying abroad from 3 months up to 6 months, that means if you are staying up to 3 months only, if your stay outside of India is within 3 months only, then you can't claim any allowance under Rule 6. Your minimum period of stay should be 3 months to claim this allowance under Rule 6. So your stay is more than 3 months, but from 3 months up to 6 months, 3 months to 6 months. You can import those articles. You can bring that articles as baggage duty free up to a value of 60,000. Up to a value of 60,000, and condition should be you should be an Indian passenger and you can't bring Annexure 1, Annexure 2. Apart from Annexure 1 and Annexure 2, remaining goods you can bring, remaining personal and household items. Next, if you are staying in abroad from 6 months up to 1 year, if he is staying exactly 6 months, will he fall under first or second? Exactly 6 months will fall in the second case. 5 months, 29 days, he will fall under first case. Exactly 6 months of stay, he will come to the second case. So if your stay abroad is 6 months up to 1 year, then up to 1 lakh rupees of those articles apart from Annexure 1 and 2, you can import personal and household articles. You can bring it as a baggage without any duty, and condition should be Indian passenger. If your minimum stay is, if you have a minimum stay of 1 year during the preceding 2 years, if you are staying minimum 1 year abroad, then you can bring these articles duty free up to a value of 2 lakh rupees. But the condition is Indian passenger should not have availed this concession in the preceding 3 years. In the last 3 years, you should not have availed any allowance under Rule 6. You should not have claimed any allowance under Rule 6 in the past 3 years if that condition has been fulfilled. And if you are staying here for minimum 1 year abroad, now when you are coming, if you are a person engaging in profession abroad, or if you are transferring your residence to India, in that case, you can bring that household and personal articles in your baggage apart from annexure 1 and 2 up to a value of 2 lakh rupees. But what is the condition here, my dear students? You should not have claimed this exemption. You should not have availed this concession up to in the preceding 3 financial years. In the preceding 3 years, sorry. Okay, so Indian passenger should not have availed this concession in the preceding 3 years. Then we have minimum stay of 2 years. If you are such a person who is staying in abroad for minimum 2 years, now you are transferring your residence to India. In that case, you can bring that articles into your baggage, your personal and household articles apart from annexure 1 and 2 up to a total value of 5 lakh rupees. Up to a total value of 5 lakh rupees, but some conditions are there. So some conditions are there. What are condition? Minimum stay should be 2 years abroad immediately preceding the date of his arrival on transfer of residence. So minimum, or before that date of arrival, before preceding the date of his arrival, minimum stay of 2 years must be there in outside of India. Sir, minimum 2 years. In between should I not come? No. In between you should come. Shortfall up to 2 months in stay abroad can be compensated by DC/AC of customs if early return on account of terminal leave or vacation availed by passenger or any other special circumstances for recorded reasons. So first thing, you have to stay for a minimum period of 2 years. But in case shortfall is there, let us say for example, if you are staying for 1 year, 10 months only, the 2 months can be condoned. That 2 months can be accepted by AC or DC if you could prove that you are early returning. That means 2 months early you are returning because of your terminal leave or vacation you have availed and any other special circumstances for recorded reasons, he can compensate 2 months of shortfall. Or total stay in India on short visit during the 2 preceding years should not exceed 6 months. So they are asking me to stay minimum 2 years. No, sir, for that 2 years, should I never come to India? No, you can come to India. You can come for a short visit, like some wedding is there, some vacation is there, something is there, you will come to India. No, the total stay in India on the short visit during the 2 preceding years should not exceed 6 months. Whatever short visits for that you have come to India. No, so that short visit duration should not exceed 6 months. So principal commissioner or commissioner may condone short visits in excess of 6 months in special circumstances for reasons to be recorded in writing. If you are able to prove, let us say for example, during the 2 years period of stay outside of India, you came for short visit to India, but the period has exceeded 6 months. If you could prove a valid reason to them, they can condone that delay. Next one, passenger has not availed this concession in the preceding 3 years. One more condition, you should not have availed this exemption. You should not have availed this concession in the preceding 3 years. For this, there is no special condition, no relaxation. You should not have claimed this in the preceding 3 years. That's all. Understood? So this is what rule number 611 says, where if you are a person engaged in profession abroad or if you are transferring your residence to India, you can bring your personal and household articles as a baggage without any duty, subject to certain limits. And you should bring articles other than those mentioned in annexure 1 or annexure 2. That means if you wanted to bring annexure 1 or annexure 2, that you can't you can't get any allowance under rule 6. That will not be duty free. And what are the value limits? If you are staying for 3 months to 6 months, up to 60,000, 6 months up to 1 year, 1 lakh, 1 year to 2 years, 2 lakh, more minimum stay of 2 years, 5 lakh rupees of compensation you can claim, but some additional conditions are there. So these are the additional conditions. Okay, right. So apart from that, currency, if you are bringing currency under Customs Act, currency also will be considered as goods. Under GST, currency is not goods, but under Customs Act, currency will be considered as goods. Can you bring currency? Yes, but as per FEMA guidelines, it will be governed by the FEMA regulations and all. Next, crew baggage. Sir, what about crew baggage, sir? Crew means what? This pilot, air hostess, these people also will bring along with them some goods and all. Sir, will the same baggage rules become applicable? No. For crew baggage, we have separate rules. In case of crew, they can at termination of engagement. For example, if the crew's engagement is getting terminated, let us say for example, a pilot is there, if his engagement is getting terminated, now he is bringing the goods, then normal baggage rules will become applicable. Till now, whatever we have seen, all that baggage rules will become equally applicable. When the crew, when they are finally paid off on termination, if your engagement is getting terminated and now you are relieving of your duties, at that time if you want to bring the baggage, then normal baggage rules will become applicable. Whereas in case of other crew, that means if your contract has not yet terminated, if your engagement is not yet terminated, in case of other crew, that means your engagement is still in force. So in that cases, in other crew, petty items, only chocolates, cheese, cosmetics, etc., these kind of articles for personal or family use up to a value of 1500 per trip, less than or equal to 1500 per trip, they will permit you. But in case if your engagement has terminated, now you are bringing the goods as a baggage, normal baggage rules will become applicable. When your engagement has not yet terminated, in all other cases, upon each visit, you will be allowed only 1500 rupees of duty free baggage. Understood? That's all here. So these are the baggage rules where very often we are finding the question. So that's why I thought of revising it quickly. Clear? So that's all. These are some important areas which I have identified on which very frequent questions will be tested. So I thought of revising it. So it will be a value addition in your preparation. I hope you all have recollected your provisions of the customs. So from here, easily you can expect from whatever 1 hour of time we have spent it here, you can easily expect somewhere around 10 to 12 marks. So hope this video would have helped you out. In case if you find this video informative, kindly do consider sharing with your friends as well. Take care everyone. Bye. All the very best for your IDT exam.